among the top gainers that came in for the Nifty 50. Nifty Bank also, that performed well in trade, gained more than 1% yesterday, was the Nifty Bank. So surely keeping an eye on that. In terms of that, what did well? SBI from the PSU sides and private bank like HDFC as well as Axis Bank were among the gainers that came in for the Nifty Bank. India Wix index, the volatility index also, when you look at it, that was down 2.23% at 14.37 levels is what we were watching out for. And yesterday, what was interesting also is that FIIs have turned buyers again. And we're seeing FIIs bought around 3,664 crores in terms of the markets yesterday, equities, cash market that we were watching out for. So net buyers there, while DIs were a slight bit of a sell that came in at 251 crores. What are we watching out for now? US job opening data. November series PMI data in US as well as India. Keep an eye on that. As well as do not forget RBI monetary policy that has the meeting has started today, two-day meet. So keeping an eye on more updates on that front, and FII activity is going to be a key to watch out for going forward as well. But let's move on and talk about Nifty implied open. Just a quick mark. Muted start is what we're indicating for that. But Abhishek, take it across to you to tell us which are the important stocks that one should be keeping on their radar. Good morning, Abhishek.
Good morning, Vinny. So to begin with, Wipro has partnered with Netscope Partners to offer cyber security optimization advisory services. Now, RVNL has got a letter of agreement for project worth about 187 crore from East Central Railway over there. IEX has given the November business update wherein the electricity traded volume is up 15.7%. Market clearing price in DAM, that is days ahead market, is down 17.3% YOY, while DAM in itself, the volume is up 9.8% YOY. And real-time electricity market over there, the volume is up 28% YOY. ONGC, they have acquired additional 1.12% stake in OPaL, that is ONGC Petro Additionals Limited, for 4,906 crores. So with this, the stake in OPaL increases from 94.57% to about 95.69%. Now, Honasa chief Varun Alag has increased his stake in the company to 31.93%. So together with the founder, that is duo Varun and Ghazal Alag, now holds about 35% stake in the company. HG Infra has incorporated their arm, that is HG Banas Kanta Bes, in yesterday, as well as the fact that Wonderla has launched a QIP at a floor price of 829.74 per share. Back to you.
Okay, thank you so much for that, Abhishek. But let's not forget important FNOQs that we'll be watching out for today. And Sudarshan is joining in with us to tell us all about that. Good morning, Sudarshan.
Morning, Vinny. So after many days of heavy FI selling, we finally have FIs buying in both cash market and in the futures. And talking about yesterday's session, we saw healthy gains for all the frontline indices, with Nifty Bank gaining almost 1%, and even it was a healthy gain for Sensex and Nifty. And for today, GIFT Nifty is indicating a flat start. Talking specifically about flows, yesterday FIs bought more than rupees 3,600 crore in the cash market, while it was a minor sell by DIs. It was around 250 crore. Even in the futures, it was a net buy figure by FIs. It was more than rupees 2,000 crore. And good parties, they have added long position. They have added more than 6,800 contracts. And at the same time, they have reduced short contracts by almost 21,000. Now, FI's long exposure is at 36%, and even on the client side, long exposure stands at 63%. On the option front, 24,700 call has seen addition of more than 22 lakh shares with premium at almost 32, and 24,400 put has seen addition of more than 37 lakh shares, and here premium is almost 116. With this, important levels for Nifty, support is now seen somewhere around 24,350, and resistance level has now moved higher to 24,550. Two stocks that have entered FNO ban are Granules and Manappuram Finance, so keep an eye on these two as well.
Absolutely. Thank you so much for that, Sudarshan. But on that note, we're going to slip into a very short break. And after the break, we'll talk about growth, inflation concerns that are likely to be on the agenda of the RBI's Monetary Policy Committee meet that begins today. We'll tell you what to expect after the short break. Welcome back. You're tuned into Power Breakfast on CNBC-TV18. Let's move on and talk about the Monetary Policy Committee meeting that will be beginning today. And this is to decide the key policy rate against the backdrop of a lower GDP print that came in of around 5.4%. Let's listen into the expectations from the CNBC-TV18's Monetary Policy Committee panel on rate cut expectations. Listen in.
Let me take the vote first. The first question I'm going to ask my panel is, what will the Reserve Bank do to interest rates on December 6th? Sajid,
we have a cut in February, so a hold in December.
Hold. Okay. Nothing, no action. Samiran? Soumya?
We are hold.
Okay, hold.
Very similar to Sajid, the hold now and cut in
Okay.
February.
None of you want a cut. Sonal?
25 basis point repo rate cut.
Okay, there you are. We have the first cut. And Dr. Sen?
Hold.
Hold. Okay, so this is 4:1 in favor of holding. Let me take the CRR question. Your thoughts, your vote.
Some liquidity management for sure, not necessarily CRR, but some liquidity management.
I'm taking
yes.
a no for CRR.
But some liquidity.
Okay.
Yeah.
Soumya?
I would paraphrase it saying that CRR should be used as a counter-cyclical tool.
No or yes?
Some, not headline CRR, but yes on some specific products.
Okay. Yes, I'm going with a yes for Soumya. Shamiran?
I think it is likely, it's possible to do.
Okay, I'll take it as likely then, which is more a yes than a no. Sonal?
Yes, CRR cut.
Okay. Dr. Sen?
No.
Okay, and after an all-party meeting with the Lok Sabha Speaker, the Parliament deadlock has been broken. Finance Minister Nirmala Sitharaman tabled the Banking Law Amendment Bill. However, opposition members staged a walkout after the Speaker turned down the demand to discuss the Adani controversy and the Manipur violence. Finance Minister defended the amendment in the Lok Sabha, saying it will make banks safer and stronger. Listen in.
Can't afford to have any one of our banks struggling or on the crevice that they may fall off. I must credit the RBI and the Ministry of Finance, not because I'm there, but truly. Since 2014, we have been extremely cautious that banks remain stable. The intention is to keep our banks safe, stable, healthy, and in the 10 years, you're seeing the outcome, and it is benefiting the economy.
Okay, and RBI Governor Shaktikanta Das is set to chair his final RBI MPC meeting that begins today and ahead of his term conclusion on December 10th. While an extension for Governor Das is likely, other candidates in contention include the CA Anantha Nageshwaran, DEA Secretary Ajay Seth, and the current RBI Deputy Governor. The government is yet to confirm whether Das, who was the first appointed as the RBI governor in 2018 and given a 3-year extension in 2021, will receive another term. Okay, on that note, we're going to slip into a very short break. But up next, we'll talk about what's going to be happening in the world of commodities. What is the latest update on that front? So stay tuned in.
जो खबर मिली है कि उनके जो पिछले वकील थे रमन रॉय, उनके ऊपर लास्ट वीक में जो हमला हुआ था तो वो बहुत ही सीरियस अवस्था में है, आईसीयू में है। तो हम ये भी रिक्वेस्ट करते हैं बांग्लादेश गवर्नमेंट से कि जो भी चिन्मय कृष्ण प्रभु के एडवोकेट हैं या उनको डिफेंड करने के लिए आ रहे हैं, उनको सुरक्षा प्रदान की जाए।
Welcome back and thanks for staying tuned into Power Breakfast on CNBC-TV18. Let's move on. An overhyped US market is talking the mother of all bubbles, says Ruchir Sharma. He further adds that this mentality of loading up on US assets is inflating an unprecedented bubble and skewing the fundamentals in other economies. Listen in to what he had to say.
It's the gap between America and the rest of the world in stock market terms, which is a bubble. That if you, for example, if you look at the valuation gap between America and the rest of the world, it's the widest it's been in recorded history. The economy also seems a bit inflated when you have full employment and you're running a budget deficit of 6% of GDP, likely going to 7% of GDP. That's telling you that so much government is artificially pumping the economy well above its underlying trend, and that's also helping corporate profits get inflated. So I think that there is two elements to it, but the big thrust of the piece is that the gap between America and the rest of the world today is at levels that we have never seen before. Especially if Trump succeeds on deregulation, I feel that that's a big churn which the market is underestimating. Okay. So lots of interesting, stuff can happen here. But yes, I think that the big story is that the massive gap between America and the rest of the world today that's opened up and that's sort of, got a further fillip after Trump's election. I think that gap is unsustainable. You just can't have one stock market in the world dominating.
Okay, and moving on to some political updates from South Korea, and in a surprise move, President Yoon Suk-yeol initiated a martial law in the country last night, stating protecting the country from anti-state forces, and 6 hours later lifted the martial law after South Korean parliament struck it down. CNBC's Cherry Kang is joining in with us to give us more details on that.
We've had martial law declarations in South Korea's modern history, but this is the first one since the 90s. And he didn't really specify what he was trying to prevent or fight against. He did mention North Korean communist forces. He did mention anti-state forces that he's trying to rebuild and protect South Korea from falling into ruin, but he didn't really specify what kind of evidence that he has in order to make this kind of a decision. So we got that martial law declaration. It was short-lived because we saw a rather quick mobilization of the legislative body in South Korea. Both ruling as well as the main opposition party voted against it. And then South Korean President Yoon Suk-yeol decided to lift the martial law, I should say. Take a listen to what he had to say.
After the National Assembly demand to lift martial law troops have been withdrawn. I will accept the National Assembly's demand and lift martial law through a cabinet meeting. However, I ask the National Assembly to immediately stop reckless activities of paralyzing the function of the country through repeated impeachment attempts, manipulation of legislation, and budget.
Okay, that was some political update coming in from South Korea. But let's go across to Manisha Gupta, who's waiting by to tell us what's happening in the world of commodities. Good morning, Manisha. And crude is what we're focusing on today?
Well, yes, the decline in US dollar has really supported many of these commodities. So you had, looking at most of these commodities trading in the positive in Asia right now. So you have crude up by 2% in the overnight markets. Well, US is talking about sanctioning 35 Iran entities and vessels. Also, the street is looking at OPEC and allies meeting, that is tomorrow, and there may be an extension in production cuts. That has been supportive also. China is also preparing for 2025 economic targets. There are two important key political meetings happening in this month itself. So it's a lot that we will be hearing from China, and the markets will make up their mind on what to step into 2025 with. Base metal prices also have seen strong gains. Silver is trading at a one-week highs. Copper prices gained up by nearly a percentage point in the overnight markets as well. The markets are now pricing in 75% chance of a Fed rate cut. The Fed meeting, remember, is on 17th and 18th of December. Apart from that, the China manufacturing also has expanded for a second month in November. That has been supportive. But the major things to watch out for in this week is, one, the Powell testimony that is today, and the U.S. non-farm payroll data that's on Friday. So these are the two important events that the markets will react to in this week itself.
Okay, surely keeping an eye on those important events that will also impact the world of commodities. Thank you so much for that, Manisha. But on that note, we're absolutely out of time on this edition of Power Breakfast on CNBC-TV18. Thank you so much for tuning in. Up next, your Bazaar Morning Call.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a Wednesday morning and the weather's turned a little bit, right? I mean, I think last 24 hours it's turned a little hot, maybe a little muggy.
Yeah.
And someone told me in the suburbs this morning it's rained a little
It
bit.
is.
Yeah,
There's a slight drizzle out there. I'll tell you what, it reminds you of the Delhi of yesteryears, minus the cold.
Yeah, I was wondering, it was looking quite tricky when I was riding to work. So I guess it's the rain. I was wondering whether or not there was a spill or something, but it was too long, a few kilometers. So then maybe
it's a bit weird weather this morning, right?
Yeah. But whatever little drizzle, I'm very happy it'll clear up the city's air. So I'm not complaining.
Absolutely. Okay, well, we'll talk more weather and let's talk about weather about the markets as well, because we had a very good session yesterday. Actually, all the way from the lows of last week, the markets continued to rally and rally nicely. So picking up from where we left off yesterday, last night, I mean, US last night gave you a sort of glimpse of what holiday sessions, I mean, sort of end of the year kind of sessions could look like. Nothing on the S&P. NASDAQ, slightly higher. Russell 2000 was a more pronounced 0.8% cut. So in terms of news flow, there wasn't very much. There was, job openings, etc., but nothing at the margin which really moved or mattered for price action. Post the stock market close, you had Salesforce, which reported a softer sort of guidance, revenue guidance outlook for Q4, and I think the stock is under pressure in terms of after hours. Macro markets, 10-year yield went up 4 basis points, 4.23%. And the dollar index was absolutely flat, slightly lower even, 106.34 on the dollar. I mean, actually, through the course of Asia yesterday as well, the dollar was slightly softer, and that trend continued overnight as well. I mean, these are just slight reversals. The bond markets rallied 25 basis points sort of on last week, Friday to Friday. So that was big, and they're pulling back a little bit. And dollar went up sharply, and it's just sort of halting for a day or 2 days. Oil prices, meaningful move, 2% or so, 2.5 actually, 73.65, almost just under $74 per barrel is where oil left off at. Now yesterday, and this happened during sort of India trading, while we were still trading, tit for tat measures between US and China with regards to semiconductor restrictions. So, the US, and this is the third time the US has announced measures in 3 years, third time in 3 years, restricting supply of components, etc., to 140 Chinese companies in the semiconductor value chain. And a few hours later, China announced that it's going to sort of restrict the export of materials which are critical in chip making, a bunch of them, to the US. So, this is all, of course, happening with 40 days to go for Mr. Trump to take over and be in the White House. So, how much of this is going to last, is going to tighten, it's going to ease? I think those are questions. You had one other unexpected, absolutely out of the syllabus kind of announcement. South Korea's president unexpectedly declared an emergency martial law, but he also then sort of a few hours later announced that he's lifting it. And I'm not sure if this already happened, but that's essentially was what came through. Just absolutely crazy, and no one really saw it. This is not, I mean, just to be sure, this is not North, this is South Korea. The French government faces a no-confidence debate and perhaps a vote that perhaps may happen today. So we'll see today or maybe early hours tomorrow. So we'll see how that one goes. But that's been the reason why the euro has been under a fair bit of pressure. Just to tie in the levels, Nifty yesterday decisively closed above the 40-day exponential moving average, broke the previous high of 24,355. Now that is a level which the market had failed to cross for 4-5 days, 24,351, 355. But it's taken that out yesterday. Immediate resistance now is the 50% retracement of the entire fall from the highs of September to the lows recently. And that comes in at 24,770, a level which we put out over the last couple of days as well. But, I mean, the market was finding it hard to go up, and now it has. Support comes in at 24,196, 24,200 roundabout is where supports come in. Nifty Bank went up nearly 1.25%. It closed above or around the 61.8% retracement of 52,680. The close was 52,695. So about 15-point overshoot there. So first, of course, is defending this. The next resistance is, again, retracements of the entire fall, like for the Nifty, 52,876 and 53,465 are those levels. And supports for the Nifty Bank comes in at about 51,760, which is around where the low has been for the last 3 odd trading sessions. GIFT Nifty will come up on your screen, give you a quick sense of how we like it to start. Remember, the markets bounced quite nicely, quite sharply in 2 or 3 days. So maybe at the margin, some overbought readings, etc., are starting to appear. So keep that in mind. But otherwise, it looks quite okay. A flat kind of start is what we're working with. Surabhi.
Okay, well, absolutely. Let's see, because Asia is still reeling under the impact of what's been going on in South Korea. More on that in just a bit. But on Salesforce, by the way, Prashant, so later, I think the stock started lower. I just checked after hours. I mean, the recent, it's up 10%. It's actually surging. And that's because the revenue has been better than estimated. And more importantly, the market's looking at the AI potential once again. They have something called Agent Force, which is their AI platform. And I think the commentary is that they'll start getting revenue. The AI revenue will kick in perhaps in the next couple of months. The market's really excited. And now Salesforce is up. And let's see if that takes the rest of US tech higher later tonight or not. But anyway, Asia is the really interesting one, because even I double-checked whether this is North Korea that we're talking about or it's the South Korea. Indeed, it is the South, with the martial law being imposed and then it being revoked. But what that has done is it's led to a lot of volatility in Asian markets. And actually, the whole region is under a bit of pressure today. The South Korean market itself fell by about 2%, then it recovered. The won versus the dollar was down as much as 3%, and then it recovered. And lots of reports have surfaced. Some of them indicate that the regulatory authorities in South Korea could be pumping in as much as $7 billion. That's their war chest to keep financial markets stable. So let's see how this plays out. I mean, there is no martial law. They've gone back, basically. But that becomes the added sense of volatility and uncertainty, at least in our region. And as I said, because of that, most of the Asian markets are trending slightly lower. By the way, it's a full Wednesday in terms of more data out of the US. So while we wait for the jobs report later on Friday, today we'll get the private sector payrolls report, the ADP report, and that's going to be well tracked by the market. There is the services PMI. Remember, we got the manufacturing PMI in the US over on Friday. Services comes out today. And then we also have Mr. Jerome Powell speaking at an event. There's some conference in New York. He's speaking there ahead of the Fed meet. That's going to be well tracked as well. Let's come back here and look at, of course, the cues at home. Great 3 days, taking the Nifty finally past this congestion zone of 24,350. And the bulls will want to build on that. They'll want to see gains. And this move has been powered by very decent FPI flows as well. So let's get the flows picture in. Yesterday, the buying was about 3,600 crores. And, Nimesh was telling us, even if you net off a lot of the blocks that happened, this is not a bad number. This is a good 4-digit buy number after a long, long time. So we'll take it with both hands. And the bulls will hope this is the beginning of a trend. In terms of individual areas and stocks in focus, I'll definitely watch out for defense names like, Mazgaon, some of the shipbuilders, or even Hindustan Aeronautics, because the Defense Acquisition Council, it has announced procurement of defense equipment worth almost 22,000 crores. And it includes things like water jet, fast attack crafts, electronic warfare suites, next generation radars, advanced light helicopters. So basically, watch out for the entire suite of defense stocks today. And finally, one more stock that I'll leave you with, Honasa. Remember, we've all been tracking this big fall in Honasa. Well, one of the promoters went ahead and bought some shares from the market yesterday. We'll get you the details on this in a bit. But maybe that will, get a bit of excitement going, that at least the management, the promoters, that is, are committed to the business. But yes, it's been good going for the bulls, Nigel, past couple of days.
Well, that's right. And in terms of overnight cues, the Fed action is something that we'll be looking forward to in the coming week as well, in terms of whether or not they go ahead and they cut by 25 basis points. The street is factoring that in. Besides that, the two big cues we're looking at. One is the RBI meet that's scheduled later this week, and a CRR cut is the outside chance. It seems the street is betting on that factor. And the other one is the way the FIs are positioned. From, just being part of it, can they get into the driver's seat? That could lead to a melt-up towards the end of the year. So the FI action is something that we'll be looking at very, very importantly. Because in yesterday's trade, as you said, in the cash market, they turned buyers. And if we're looking at it in the F&O market, well, there was some short covering that played out. 20,000 contracts were covered out on the short side, and there were some long positions that were added. And post this swing of around 27,000 contracts, now the FI net short positions have come down to sub 1 lakh contracts. And that's the first time that it's sub 1 lakh contracts all the way since October 29th. The clients, they remain net long, but from higher levels, they booked some positions as well. So still, the net long positions on the client side is at around 1.6 lakh contracts. Moving to the levels then, in yesterday's trading session, that 24,350 mark, which was a bit of a hurdle for all of last week, that got taken out. So what are the levels you're looking at now? Now all eyes are on numbers closer to around 24,650 because that's where the 50 as well as the 100 DMA comes in at. And you have to say the first reference point now on the downside is deep at around 24,000 odd. So that will be the first support level that you're looking at. The Nifty Bank, that seems to have got his mojo back. And from the banking space itself, the stock that I'm looking at is Axis Bank. If you look at it in the last few months, it's actually been a relative underperformer, even in comparison to what the Nifty has done. It appears there was some delivery-based selling that was there, and that seems to have got cleared out. Even in yesterday's trading session, if you're looking at a couple of levels, well, it conquered some crucial technical levels, and it ended rather strong at around 1,160 odd. So that's going to be important. All eyes now are on the 50 as well as the 100 DMA. So from the banking pack, I'll be interested to see whether or not Axis Bank can outperform from here on. That's point number one. The second factor is the F&O stocks. Stocks that are going into the F&O ban. Granules got hit yesterday. And, now it's moved into the F&O ban. So there's not fresh shorting cannot take place in this particular counter. If it has to go down, it'll have to go down on cash selling. So let's see how the stock behaves because that's moved into the F&O ban. And Manappuram Finance as well has recovered well from the recent low. So keep an eye out on both these two, Axis Bank and Granules as well as Manappuram Finance.
Okay, all right. So lots of those stocks on our radar. Nigel, thanks for that. Let's kickstart the show then with the equity call of the morning. Chetan Sheth of Nomura says investors should enter 2025 on a cautious footing amid looming headwinds, but need not be overly pessimistic as a turn in sentiment may occur sometime during 2025. He remains structurally overweight on India, although he sees some more near-term risks of healthy valuations, derating among a slowing macroeconomic and earnings cycle. But he says structural attraction remains intact and the market will still likely post above average earnings growth, even assuming some earnings misses.
Okay, well, we have another call. We have Amish Shah of BofA Securities who says that calendar year 2025, for calendar year 2025, he expects Nifty to deliver less than 9% returns. He says Nifty could underperform US equities in US dollar terms, and broader market may see even muted returns given their rich valuations. He says potential fiscal and or monetary stimulus and a lighter events calendar provide scope for policy reforms are some of the upside risks. Okay, well, those are some calls. Cameron Brandt is now with us. He's Director of Research at EPFR Global. Cameron, great to have you with us here. Thank you for your time. Flows is what we want to get a sense from you, Cameron. So how are they looking? We were just Surabhi was just saying that yesterday we had that positive daily FII number, even if you account for all the blocks, etc. Otherwise, it's been one long string of sell numbers. So in terms of funds that you track, what's the takeaway?
Well, in terms of the dedicated India funds, it's exactly the way you just described it. A long grind lower, not a spectacular dive, but we did see yesterday the first sort of uptick. The selling has been really driven by a rotation to U.S. Asset classes, especially on the equity side. If your fund had U.S. in front of it over the past 4 weeks, it was likely to be in the money. So in some ways, it's a chance to take profits while all eyes are on the U.S. We're starting to see flows into some of the U.S. funds moderate a bit, but we're still looking at over 140 billion flowing into U.S. equity funds over the past 4 weeks.
Cameron, hi, good to have you on. So in Asia, there's, it's really interesting. We were till now only looking at China and what's happening with the economy and the policy response there. But this morning we've woken up to this news in South Korea. It's not a market that's, that's been linked with political uncertainty. And then suddenly, bam, you have this news coming through. In any case, describe to us what Asia funds have been doing, what's been the kind of picture with respect to flows in this region, including India.
Right. Well, it was interesting that you mentioned Korea because certainly over the past 6-7 weeks, the only Asian markets that had really attracted any amount of fresh money were Korea and Taiwan. Trump's election did not completely extinguish the artificial intelligence story, which has had so much to do with keeping the US market on an upward trend. So it will be interesting to see if the flows to Korea equity funds are able to power through this rather startling development today. Certainly in terms of China, it's been somewhat similar to the Indian picture, steady outflows, but they haven't been, notably large. There's still a fair amount of the money that flooded in just before the U.S. election that's sort of still in there. So it's not so much that people have turned against Asia, even if they are still waiting for China to give them a stimulus picture they can embrace. It's just that it's been all flows to the U.S. and the devil take the hindmost.
All right, Cameron, before we wind down this conversation, just confirming that the flows into the Indian markets have been as strong, and you're not seeing any worries on that front. Is that correct?
So the flows to the Indian market, they did grind lower there for several weeks, but we just started to see what looks like a little bit of an upturn over the past couple of days, which it sounds like you've been seeing that through other lenses. And, as I said in an earlier conversation, given the strong performance of India's equity markets over the past year, I wouldn't be surprised to see some money come into the end of the year just to basically cozy up to that good annual performance.
Got that, Cameron. We'll leave it there. Thank you very much for your time. Appreciate you joining us here with that perspective. We'll take a quick commercial break here, but let's quickly tell you what's lined up here in terms of interactions you will see over the next 2.5 hours. 8:35, we'll have the management of solar industry. Stock's been a 10-bagger since 2020. They've bagged a large 2,000 crore order. So we'll talk to them about outlook for the rest of 25 and 26. 9 o'clock, Karun Dharani will be with us from Elara. He talks about the Swiggy results and, of course, trends in the FMCG space. 9:20, you'll hear from Rajiv Batra, JP Morgan. He's a market master of the day. 9:30, Brigade Enterprises will be with us, and we discuss their H2 outlook. And we'll have the Swiggy management at 9:40 to talk about the results which they've posted better on a quarter-on-quarter basis. So we'll have the founder with us to do that. And Girish Kausgi of PNB Housing talks to us about the housing finance business. They had an investor day that's coming up at about 10 o'clock, and it's the economy with Lata. She'll be in conversation with Ashish Gupta of Axis AMC and Devang Shah of Axis Mutual Fund to discuss if the RBI should concentrate more on liquidity in the upcoming policy. Stay with us.
Time to slip into a short break. You got a lot of stock-specific action track for you. Get at that in just a bit in our special Top 10 segment. But let's run you through the list. We're looking at Swiggy, HAL, GRSE, BEL, PNB Housing Finance, IEX, Honasa Consumer, and Wandela. All of them will be reacting to positive news flow, while InfoEdge and EPAC Durable will be reacting to negative news flow. Stay with us. We get into further detail on the other side.
20 years, it has been India's most coveted stage for business leadership. The benchmark of unparalleled excellence.
We have to dream big and even bigger for India.
An accolade that celebrates character, integrity, and decisive action.
You just have to do your best.
Not identified by any single name, nor defined by a single achievement.
The best years are to come, and you don't have to wait for long, it's round the corner.
But redefined every year by visionaries who inspire.
Welcome back. Lots of stocks to track today, even as we look at cues which are all right, because Asian markets are under pressure with the headlines coming in from South Korea. Let's look at now individual stocks. There's news coming in from Granules, by the way. Releases another update on the Gagillapur unit. Remember what happened in the stock yesterday? 10% of a crash because this unit accounts for 70% of Granules sales. And it came out of nowhere, this official action indicated. That was yesterday's news. We'll come back to that update in just a bit. And that obviously is one of the stocks that we're going to watch today. But there are several others, and our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, morning to you. Manglam, so final read-through on Swiggy. How's it looking?
Well, final read-through on Swiggy says that, yes, it is a train that is moving towards its destination, albeit, it'll take some time largely because Zomato is already there, right? So you have the food delivery EBITDA that grew 2 times at 112 crores. Margins came in at 1.6% versus 0.9% quarter on quarter. And Bolt, which is their 10-minute food delivery business, has actually become 5% of their sales. So it is doing extremely well. You have Swiggy Instamart, where the orders have increased by about 21% quarter on quarter. Per dark store, it's increased by 10%. So you can use this as an SSSG metric out there. The company said they will double their dark store count in the next 1 year or so. And the average size of stores also increased by 30 to 35%. In the conference call, the key question was profitability. They are targeting profitability by Q3 FY26. Food delivery business can grow 18 to 22%. They target steady improvement in food margins from 1.6% to 3% over the next few quarters. And EBITDA break-even in quick commerce comes by second quarter FY27. Swiggy currently is trading at 50% discount to Zomato. Remember, during the IPO, it was trading at around 60%. So the street is looking at this discount narrowing. How fast it does depends on the numbers that the company shows.
Okay, all right, Manglam, thanks a lot for that. We'll also be in conversation with the management at 9:40 a.m. later today. Well, by the way, we should keep an eye out on Granules. They're saying that 80% of the corrective and the preventive actions are done and remainder on track to be done as well. So it appears this release is a little bit better than what we saw yesterday. And we'll have to see how the stock reacts. But just one technical factor could play out. Yesterday, as this news played out, the open interest went up dramatically. So the shorts are in the system. If the street is going to take this a little bit positively as well, those shorts will have to scramble for cover. So we'll have to keep an eye out on that stock. This release appears that it will pacify some of those investors. So we'll wait for further details on that front. Yesterday, the stock sold off big time.
And Nigel, they are also adding now that only clarifying to investors that an OAI does not mean that you stop selling from the plant completely. It means you continue selling the existing products that you're making there, but you cannot get fresh approvals. You can't produce anything new. That's another, I think, reiteration and a clarification, because some will argue that the momentum with which the stock fell yesterday, maybe the bears just, had a field day. Let's see if, like you're saying, if they have to run for cover.
It appears yesterday the longs got stuck on the wrong side. Let's see whether or not the shorts get stumped out on the wrong side for today's session. But that said, let's go across to Upasana. She's here to tell us about HAL, GRSE, as well as BEL. Morning, Upasana.
Good morning, Nigel. Well, defense will be in focus today as Defense Acquisition Council has approved 5 capital acquisition proposals worth 21,772 crore to augment defense preparedness. Now, Phillip Capital has highlighted some of the key beneficiaries on the back of these approvals. First up, DAC has approved procurement of new water jet fast attack crafts. It believes that the GRSE will be in focus today and key likely beneficiary on the back of this. It has also approved procurement of fast interceptor crafts. L&T is likely to be the beneficiary on this front. DAC has also approved procurement of electronic warfare suit and next generation radar warning receiver. Stocks like BEL, Data Patterns and Astra Microwave are the likely beneficiaries highlighted. It has also approved DAC procurement of advanced light helicopters. HAL is the likely beneficiary. And lastly, DAC has approved procurement of overhaul of T-72 and T-90 tanks and BMP engines. Avantel and HAL will be in focus. So all in all, DAC has approved 5 proposals, and we expect stocks like HAL, BEL and GRSE largely to be in focus on back of this.
All right. Thank you very much, Upasana, for that. Well, let's talk about PNB Housing Finances now. And Abhishek is standing by with news flow here. Abhishek, morning.
Morning, Prashant. So PNB Housing has given some update with respect to how they see their business momentum ahead. And clearly, the focus of this entity is on increasing its, yield in the overall portfolio. So affordable housing loan, they are targeting this book to be by 5,000 crore by FY25 and about 15,000 crore by FY27. Now, retail credit demand is strong, so they are targeting a 17% loan growth over there. And retail loan book will be about rupees 1 lakh crore by FY27. So the focus is on high yielding segment, keeping profitability in mind. So in this affordable housing space, they are targeting an yield of 13% from around 11.5 to 12% that they have right now. The customer base growth that they are targeting is affordable housing by 60 to 70% growth. Emerging customer base will grow at 30%, and their prime book, that customer base will grow by 9%. So they aim to grow the prime book to 60,000 crore by FY27 and emerging book to about 25,000 crore by FY27. They intend to increase the non-housing portfolio in the overall AUM mix to about 30% by also increasing the LAP or loan against property in the overall mix of the AUM. Back to you.
Okay, all right. Got that, Abhishek. And that's quite helpful because we will be chatting with the management. Mr. Girish Gowski is going to be with us at around 9:50 a.m. and we'll discuss some of these points and the outlook ahead. All right, let's move on. IEX came out with volume and pricing data yesterday at the exchange. Vivek, morning. How is it looking?
Well, good morning. That's right. So the operational data for the month of November is what IEX declared post-market as yesterday. So electricity traded volume as far as IEX is concerned is up almost 16% on a year-on-year basis, 15.7% to 9,689 million units. So the day-ahead market volumes up almost 10%, while the real-time electricity volumes up 28%. So the blended volumes up almost 15.7%. Now, very interestingly, the day-ahead market prices or the clearing prices that have been discovered on the IEX platform have actually gone down quite significantly, almost 17% on a year-on-year basis at 3.3 rupees a unit. And the market clearing price as far as the real-time market is concerned, that too is down almost 13.5%, coming in at 3.46 rupees per unit. So what is it that the company is saying to explain the low prices? Number one, they're saying very high supply side liquidity. Also remember, power demand has been slightly subdued as far as FY25 is concerned. And on a monthly basis, the prices discovered in the month of November were the lowest as far as FY25 is concerned, but volumes have been good, and which is why going with the green as far as IEX is concerned.
Oh, okay, all right. Thanks a lot for that, Vivek. Well, we've gone through quite a few stocks now, so I think we have a few more though. Vinny is joining in to help us out with some more stocks in the news. Vinny.
Good morning. Yes, so a lot of other stocks that are in focus. First one, let's talk about Honasa Consumers. Now, the co-founder, that's Varun Alagh, has raised his stake in the company to 31.93%, and that is almost 4.5 crore investment. So, indicating that after those weak Q2 numbers, he's still quite positive in terms of the growth strategy of the company going forward. We're expecting green for Honasa Consumers. Moving on to the next one, we have InfoEdge that is in focus. We're expecting red. Now, the job speaks data that comes in from index data that comes in from InfoEdge, that is indicating that November just saw a growth of around, index was up by 2%, but on a month-on-month basis, when you're looking at it, it was down 11%. This is the lowest level that we're seeing for this index coming in since December 2023. White-collar jobs is what they're indicating. That's a bit of a muted trend this festive season, and especially drags came in from IT, retail, BFSI, as well as insurance, which saw a decline somewhere between the 7 to 14% range. So we're expecting red coming in for InfoEdge. Also, EPAC Durables, that's the one in focus. We're expecting red here as well. Now, EPAC Durables Chemicals Rajasthan manufacturing facility has come in under the customs scanner. Now, this was searched, this facility was searched on 2nd of December and completed. The visit was completed on 2nd of December as well. This was by the Special Intelligence and Investigation Branch. Now, they searched in terms of specifications were on technical basis of the products that were manufactured in the plant, but nothing as such was seized so far. So, yes, keep an eye out on EPAC durables. And lastly, we have Wonderla Holidays that's in focus. The QIP is launched. The floor price for that is around 829 rupees per share, as well as this issue is opening on December 3rd. So keep an eye out on that one. Wonderla Holiday expecting green here.
Okay, all right. So that's more stocks on our list as well, Vinny. Thank you very much for that. Let's quickly recap the list then. The ones that have positive news flow around them are Swiggy, HAL, Garden Reach Shipbuilders, BEL, all the defense names because of the new proposals that have been approved. PNB Housing Finance, IEX, Honasa Consumer and Wonderla also on the green side. Negative news flow around Info Edge and EPAC durables this morning. All right, let's move on and figure out what the commodity cues are looking like. We have Manisha joining in. Manisha, good morning.
Thank you for that. Well, I'll start with the crude oil prices because we've seen a gain of 2% overnight. This is after there are concerns as U.S. sanctions 35 Iran entities and vessels. Also, the street is looking at OPEC and allies meeting, which is on 5th of December, which may extend production cuts. And then China is preparing for 2025 economic targets. They have meetings, two key important ones in this month itself. The markets also have seen strong gains come in for metals as a sector. Well, we have seen the US dollar index rally pause a bit. So you have silver trading at a 1-week highs, copper at a 2-week highs, and there are wild geopolitical tensions, but the markets also are looking at China's stimulus expectations. What the street will watch out for in this week is going to be the Powell speech today and the U.S. non-farm payroll data. That comes in on Friday. So ahead of that, it's going to be slightly choppy, but at this point in time, it's all positive in metals in Asia.
All right, Manisha, thank you very much for that. We'll take a quick commercial break here. We'll be joined by Deven Choksi of DR Choksi FinServ, and we talk specific stocks, markets with him. And of course, a little later after that, we'll have the Solar Industries Management with us. Stay tuned.
Legends who lead. A journey that honors those who set the bar higher year after year. This is not just an award, it is a celebration of leadership in action. CNBC TV18's 20th India Business Leader Awards.
Presented by Standard Chartered in association with Reliance Industries Limited.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC TV18.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC.
Welcome back. You're tuned into Bazaar Morning Call and hope you're having a good morning. Well, to help you out with some fundamental analysis, Deven Choksi of DR Choksi FinServ joins us on the show. Hi, Deven. Good morning and good to see you in, Deven. Well, let's talk about the stock of the last 90 minutes yesterday, which was Granules. The stock got clobbered from the high, I think, of around 620, the stock went down to 520 because the street was very, very surprised with what they saw. That facility that has nearly 70 to 80% of their business, that was back in the dock. Though this morning, the release that's coming out suggests that things are not as bad and they're looking at fixing that particular plant. What's your view at around 530 rupees? The problem, I think, yesterday was the street was heavily on the long side, which came in for some profit taking. Your take at 530?
Yes, Nigel. Good morning. I think that's the point. I think when you are fully invested into a company, and I think when the valuations are at premium level, there is no scope for any error. That's what I think the learning is from this market, particularly in mid-cap and small-cap companies, wherein I think the players are most, opportunity-driven, wherein they would probably, I think, try and trade these counters as much as I think they could in a given period of time. So probably I think one disappointment or one bad news, as you may want to call it as, probably I think the market is not kind enough in holding those stocks, even on the fundamental reasons. So we don't have the full coverage of this company. We have a soft coverage. We believe that I think in the price I think which has fallen, I think this becomes slightly more attractive than it was before. So one will have to relook at I think the entire proposition. Maybe we'll study first the entire management explanation and thereafter take a call on this subject.
Okay. Devin, hi, morning. Defense is definitely in focus today because yesterday we had the Defense Acquisition Council. They announced procurement of fresh orders worth almost 22,000 crores. And I don't know if you saw this news, if you track this company or not, Solar Industries, they are also into different formats of defense manufacturing, right? And they got export orders for different defense components worth over 2,000 crores. So maybe a word on Solar, if this is something you've looked at, or otherwise any other defense stocks that you would be comfortable buying.
Yeah, good morning, Swiggy. Yes, Solar definitely, I think it's a company in our coverage and we've been holding it for last more than 10 years. So certainly, I think we can talk at length. Both industrial explosive orders that they have been receiving from the coal mines, and at the same time, the defense explosive orders, I think they've been receiving regularly from one or the other plant, including the one which they received in the last week, which was an export-driven order. So all orders basically, I think, are suggesting that the company is definitely growing and growing at a very steady pace. What we have learned in this business that they would take at least, I think, 5 to 7 years before they are ready to supply to the defense. And that's what I think this company has achieved in the last 10 years or so. They have systematically invested, they have created their acceptance or approvals in the defense segment. And today, I think they're receiving the regular orders. So we certainly like, I think, the proposition. Of course, I think as I've understood, the order is going to be executed over a period of 4 years' time. And that's what probably I think would mean that 2,000 crore for a full period of time, I think, which they would be executing. But nonetheless, I think the margins and otherwise also, I think these orders fetch for this company, they are really good. So one needs to remain invested in this particular business.
Devin, you said you got into Solar Industries. You've been holding it for 10 years. Did I hear that right?
Very specifically, I think in 2012-13 we had.
Wow. Wow,
Devin,
that's something.
Devin, where is the party?
I never knew that I think I'll get this kind of wealth generated in 10 years' time.
No, I mean, I think it's all mostly sort of hindsight, right? I mean, you don't know when you're buying it, you don't know. It gradually, well, of course, you got to hold on to it and you got to have the patience and the commitment and all of that. It's as they say, investing is simple, but it's not easy. That's, I think, the crux of it. Anything else you're doing, Devin, out there? Market-wise, stock-wise, anything on your radar?
So we continue to like, I think, some of the interesting propositions. One definitely among them is Tata Technologies. We believe that I think this company has a significantly large play to offer going forward. With an end-to-end solution provided today in the automobile segment, they are now with Air India, with Tata. They are also playing significant role in the aviation segment of the business. So today, auto is about 83-84% and aviation is around 16-17%. The mix is expected to change to 65% to auto and aviation to around 35% in next 2 years or so. So if that does happen, probably this company looks relatively more interesting. having corrected from its listed price to what it is currently, I think we find this company interestingly positioned. Similarly, I think we find some of the other companies which are looking good for investment purpose. Of course, I think will take longer time. One among them would be Geo Finance and another one would be Bajaj Housing Finance. Both these companies have interesting business model to talk about.
I remember, I mean, you were very, very optimistic on Geo when the carve-out was happening. I remember a offline conversation and you explained the rationale to me in terms of just the growth runway ahead for an entity like Geo Finance. They went on a different note. Are you taking a bite of Swiggy? They're promising full profitability at a consolidated level by third quarter of next year. FY26. That's right.
It is definitely should be a positive thing to note about that they are getting into the profitability and systematically they have been creating the position for themselves in every vertical, be it in quick commerce vertical or be it in the food delivery vertical, dining out verticals. In each of the verticals, they are basically creating systematic position, creating a larger books for the customers, maybe doing the upselling within the range of the customers as well. So we certainly like the proposition, and the consumer tech companies like Swiggy and Zomato, they have relatively more things to offer for sure. The only concern that one would have is the valuation at which they are currently quoting. If the valuations get corrected for some reason, then it's a good opportunity to buy into. Currently at about more than 1 lakh crore worth of market valuation, and I think the promise to make profit next 3 quarters after and 4 quarters, I think you're paying significantly high amount of premium. That is what I understand at this point of time. So maybe I may miss out the bus though, but I think I would still wait for some time. If Iran market gives opportunity at lower levels, that would be a better time to buy into this kind of companies.
Sure. Devin, stay on, and I'm sure you'll want to listen into the next conversation because it's going to be with the management of a company that's generated wealth for you for over a decade. Solar Industries, indeed, is the stock and company on the radar. Now, yesterday, the company bagged new orders to the tune of about 2,040 odd crores. These are export orders for various defense products and systems. As we've been talking about, the stock has had a great run over the last 1 year. We'll just pull up the stock chart as well. A move of over 70%. So how is this business momentum looking? To discuss this, we have Shalini Mandhana, Joint CFO at Solar Industries with us. Shalini, great to have you on. Thanks for joining in. And I must tell you that one of your old, long-time investors is listening to this call. Devin Choksi is with us as well. But let's start by talking about this, the new orders that you announced, 2,040 odd crores. Now, these are export orders. And if I go back to your guidance, because of course you're very, very bullish on the defense business, earlier you've said that you will be doing 1,500 crores in defense product sales, and defense will become 20% of your overall pie this year itself. But now with the 2,000 crores that you've already got, would you be increasing these estimates in this guidance?
Hello, good morning. Thank you for having us on the call. So correctly, you said that we are very pleased to announce that the company has recently secured significant orders worth over 2,000 crore for supply of defense products to international clients. However, the delivery schedules are over the next 4 years. So, and this year we have additionally secured around 3,000 odd crore plus orders from similar for defense products to international clients. So with this, the total order book from defense for both domestic as well as international clientele stands to around 5,500 crores plus, with demonstrating the strong demand for our products.
5,500 crores, Shalini, so 5,500 crores is the total defense order book. Give us the breakup between domestic and international export, and also what will be the revenue booking of, defense revenues this year?
Mostly, if you see whatever orders we have announced during this year amounts to international export orders. So maximum part of it from international export, and we are awaiting the much-awaited Pinaka orders, which should flow in soon. The final, draft commercialization have been completed on that part. So with this, I think the order book by end of the year should be very strong.
All right. Hi, good morning, Ms. Mandhana, and thanks a lot for joining in. This is Nigel on this side. Well, what about execution? Yeah. Could you tell us? Because as of now, the street was working with around 1,500 crores, I think, for FY25. But with this order coming in, do you think it can be higher? And also, I'm looking at an ICICI Securities note. They are mentioning that they are expecting sustainable revenues from the defense vertical itself to be 1,800 to 2,500 crores in the coming years. You agree, given the kind of order book you have?
Yes, we definitely agree with that. As I said, currently it's around 5,500 crores plus and awaiting the similar numbers from Pinaka. So order book will be a massive number, which has to be executed over a period of 2 to 5 years. So current year, what we have locked in, it's now just 4 months for year end. So we feel 1,500 plus is achievable number. And going forward, obviously, we do see good numbers from defense. We should be around 25% of our total revenue.
Can you quantify it? Can you quantify it? 1,500 crores for this year? And in the next year, it goes to around 2,000 crores? Would that be a fair estimate?
That can be there. Correct.
Okay. Shalini, hi, good morning. Prashant here. I mean, the Pinaka orders that you briefly mentioned, right? I mean, that's expected to be a game changer for you. What is the size of this order? And are you expecting this by the end of this year?
Yeah, we're expecting it very soon, maybe within a month or so. And this should be similar to what we have the current order book.
Okay, so by...
plus.
Okay, so your order book then goes up to about 11,000 crores, 12,000 crores by January of 2025.
Yeah, we are very positive in that front.
And you said, and on those orders, margin profile, etc., is similar to what you make now?
So current year, last year we closed margins around 23% plus. And now if you see in the first half itself, we have crossed the last year's defense revenue. And the margins currently...
And the Pinaka orders, I think you said you have to deliver them within the next 2.5 years.
No, Pinaka orders will be over 8 to 10 years.
Okay, 8 to 10 years. And this is, it's going to be, any idea whether this is going to be recurring, this is going to be one time, any sense on that?
No, so there are various variants of Pinaka. So we have been working with different variants also. We should see similar orders coming in going forward.
And once you get in the Pinaka orders, just to complete that point on the mix, your defense order book, 5,500 crores, you said largely it's export orders. Say by FY26, how much will it be domestic India defense orders and how much overseas, and where do you get better margins?
So it's very difficult to say it currently because other international orders also should come in. So once all the orders are there, we will be able to better comment on the same.
Okay. All right. Also at the half-year mark, your overall growth is close to around 12%. And as you mentioned, margins you're holding about 25%. So for the company on the whole, what kind of a growth should we be looking at from here on, steady state for FY25, FY26?
So current year, we said that we should be able to achieve volume growth of 15% and revenue growth of around 25 to 30%. So we are on it. And the first half itself had been, the industry had experienced subdued demand in the first half, largely due to the effects of election and persistent monsoons, which have delayed the mining and infrastructure projects. However, despite these headwinds, we are proud that the growth, what we've achieved in the first half, have been robust due to robust international business and defense sectors. These areas have provided a strong foundation for continued success, and we remain positive for the year. As we look ahead, we are confident that the government's ongoing commitment to infrastructure and housing development, along with the increasing demand for power, will support our growth, and we'll be able to achieve the same. We are well positioned to meet our annual guidance backed by the solid performance across key sectors.
So
and
25%?
On this backdrop, also we have, revised the annual capex from 800 to 1,200 crores for 25 and same. For 25-26, we see good numbers similar to this year, but we'll be able to come up with the annual guidance in our, annual results.
Okay.
Shalini, just the capex increase that you mentioned, how are you funding it? 800 crores to 1,200 crores?
Mostly it's from internal accruals.
Okay. Just one last question from my side, Shalini. Do you expect, ordering to go up significantly, or even, the share to move towards drones? Because that is the trend globally. I think you delivered what they call Nagastra drones to the government, one batch over the last 2 or 3 days.
Yes,
do you expect that to be a significant portion of your defense work?
Yeah, we have been working on that product since last 2-3 years, and happy to say that we have delivered the indigenous loitering ammunition to armed forces, which have further proven our capability. And going forward, we expect similar orders in that segment.
Just to confirm on the overall revenue for the end of this year, going by the 25% revenue growth number, you should end closer to around 7,500 crores.
Let's see, currently we are positive on that. As I said, the first half had been subdued, but we see growth in the second half. So I think as housing and infrastructure perform, the mining should also do well.
Okay, all right. Thanks a lot, Shalini, for joining in. Wishing you all the best. It's been a big wealth creator for a lot of investors. We'll hold you to these numbers. I think the key numbers out there is the defense vertical moving up and that Pinaka orders, which could be an equivalent of close to around 5,000 crores, which gives you good visibility on the defense front. For the time being, slip into a short break, come back. Mitesh and Sudarshan are waiting for us with their technical calls.
Mumbai.
Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
Welcome back. Well, we've had a good pullback in the last few days. Is there more in store? Well, we have Mitesh as well as Sudarshan who join us on the show. Hi, Mitesh. You go first. Tell us, what would your trade be? It was a very, very good trading session. We crossed that 24,400 odd mark. What would your trade be on the Nifty first this morning?
Yeah. Morning, Ajay. So, look at the movement for about last 4.5-5 weeks. And you will find that at 24,500, there are at least 5 attempts when the markets tried to go beyond that and fail to sustain about 24,500. So I think that's the next level, which I had indicated a few days back as well. My sense is that the overall chart pattern and the indicator strength suggests that there should be a breakout eventually. It may not happen in the first call. So what can happen is that you might hit those levels, give a mild pullback because we've had good rallies in the last 3 to 4 days. And as long as we are about 24,350 now, which was the recent pivot, I think market will eventually cross this 24,500 and head towards 24,750, 800 zone. So the idea should be either to wait for the decline closer to about 24,400 for 390 zones, buy there with a 50-60 point stop loss, or wait for 24,500 to be cleared and then buy with a 60-70 point kind of a stop. But the idea is that trade on the long side.
Okay, be long. That's the call coming in from Mitesh. Sudarshan, morning to you as well. What's your sense given the big pullback by the bulls?
Yeah, good morning. Well, I've been saying since last week that we should be long, and yesterday I explained why we should be long without waiting for a breakout or a dip, because you don't know when that breakout will come. It could come today, it was yesterday, or it could come next week. As it happened, that breakout came yesterday itself. So once the trend is in place, in this case, the uptrend is very clearly in place. Traders must maintain at least part of their positions as positional trades so that you get advantage of the gaps, of the fact that you did not miss out on a move. So that's the first part. Keep some volume long, irrespective of what happens intraday. Now, for the day, I would expect markets to dip, and that would give a buying opportunity. Essentially, the traders, whether intraday or positional, just stay on the long side.
Just stay on the long side. Okay, both are technical experts in absolute agreement. All right, then let's boil this down to stocks beyond the index. What else can you trade today? Mitesh?
Good morning, Survi. I have all buy calls today. IRCTC is a buy with a stop at 820 for the first target of 850. Then have a buy on Bank of Baroda. I think we saw good movement in the PSU banks yesterday. So BOB is my pick. Keep a stop below 249.5. Look for a target of 264, 265. Also buy on APL Apollo with a stop at 1535 for a target of 1600. And Indus Tower is the final buy call with a buy here with a stop at 348 for targets of 365.
Okay. All right. Got that. And Sudarshan, your stock list for the day?
Well, it's also an all-buy list, and there are so many mid-caps in the F&O segment which are now giving opportunities. SAIL is a buy, the stop under 119. TVS Motors is a buying opportunity with a stop under 2500. Vedant, another metal stock, is a buy, and metals generally are giving a sense that they are coming out of that long correction. So Vedant is a buy with a stop under 460. REC, which has already been in an uptrend, is a continuation buy with a stop under 530.
Okay. All right, gentlemen, got it. So both saying stay long, and all buy lists from both Sudarshan as well as Mitesh this morning. We'll take a quick break on that note, come back on the other side. We'll have the pre-opening rates, and then we'll also have Karan Taurani of Elara Capital to talk about Swiggy and sort of what the finer details are emerging from the investor call yesterday. Welcome back. You're with us, and this is Open Exchange. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. Swiggy. Well, the numbers are looking better, especially on the food business. Food delivery, both in terms of revenue and profitability, is positive. In fact, they've actually turned, EBITDA positive on the food business. And on the quick commerce business, that's where the losses continue. But the promise is that a couple of quarters down the line, there will be profitability even there. We have Karan Taurani joining in. So let's get his thoughts on what he made of the numbers and the management commentary. Karan, so what's your takeaway? What's your report card looking like after Q2, Swiggy?
Hi, good morning. So I think the Swiggy numbers were, better, largely in terms of both the food side and the quick commerce side. The gap has kind of stopped increasing in terms of, there's no potential loss of market share further from here on. Food side specifically, I think the good part is profitability. I think second consecutive quarter where they've seen an increase in terms of EBITDA as a percentage of GOV, it's at about 1.6% right now. But the gap is still there. I think, in terms of guidance, the management was confident enough. They really gave very good guidance that, on the food side, they will probably even grow above industry average and possibly try to gain market share because of innovations around Bolt and other things put together. And on profitability side also, they did indicate that the food business will see consistent improvement in terms of profitability because of ad revenue. Quick commerce, I think, is the challenge here because that segment is now very different as compared to what it was a year ago. Increased competitive intensity, what the larger players are going to do in terms of how things are going to pan out, which verticals, which cities, non-metro markets put together is a challenge. So I think those are the monitorables here on. The food business execution remains to be, top-notch as of now.
Karan, hi, good morning. Prashant here. So we have the Swiggy management joining us and make our lives easier. Tell us the 2-3 questions we should ask them, Sri Harsha, that the market really wants to know, or we'll ask them.
So, I think the first question would be, on the food business side. So as they have mentioned that, 18 to 22% is the market growth rate. And somewhere they mentioned the call that they will potentially see increase in terms of growth rate, right? So what are the reasons that they're so confident in terms of gain in market share versus Zomato? Because all these years, it's been a very challenging task, to gain market share at the cost of Zomato. In fact, they were lagging and losing market share put together. So that's one very big question. Second thing on the food side, right? I mean, in terms of the overall profitability, today the gap is quite huge, about 220 bips, in terms of EBITDA margin as a percentage of GOV for Swiggy versus Zomato. How do they see how will the gap kind of reduce? Okay, what are the levers for the same? I mean, they obviously did speak about advertising revenue, platform fee, and so on and so forth. But how will the reduction actually happen? Is it only a function of scale? Or is it something different that they are doing, versus Zomato to kind of reduce this gap in terms of EBITDA margins? Third very big question would be around the quick commerce side, right? I mean, they've indicated that they will kind of increase the store size, increase SKUs, increase take rates. The entire plan and strategy is in place. But what are the risks over there? Because quick commerce as a business proposition today is not the same what it was a year ago. There are too many players coming in, there's overcrowding happening. So what are the kind of risk in terms of the strategy not working in their favor? I think these 3 questions are good enough to address this entire concern around the valuation gap for Swiggy versus Zomato. And also in terms of revenue scale, if they're able to execute better versus Zomato, that gap will also kind of come down. But I think net-net, what you're going to see today is that this 50 to 60% gap for Swiggy versus Zomato will persist because of these things, the scale, the valuation multiple, the entire question on profitability.
Okay, just to go back to some of the points, Karan, that you raised, this adjusted EBITDA margin as a percentage of GOV. So I think for the food business, Swiggy is now at 1.6%, right?
Yes.
And you're saying there is a 200 basis points gap with Zomato? Yes. 200 basis points. Okay. And market share, where does it stand and what is your expectation? I mean, they're talking about catching in and closing in on the number one. But what's your sense? How much are you penciling in? How will the market share move in food delivery?
See, market share movement is going to be tough as a proposition because today also, if you look at the numbers, I mean, you look at it on a Q1Q basis or if you look at it on YY basis, whatever way you want to see it, the scale gap today also for Zomato versus Swiggy is around 20-25% on the food business side, right? And it is not going to be easy to catch up to Zomato because Zomato clearly as an app has got a very strong user experience around, the dine-out proposition. They have a lot of customer traffic, primarily who want to explore restaurants. So I think that is a monitorable in terms of how this gap kind of narrows down. Swiggy has got this entire one app proposition of Instamart and Swiggy, Genie, everything put together. But what is the strategy there? Why are they so confident or how are they confident? How do they exactly see market share gain? Because all these years it does not happen. So what's going to change now?
Yeah. And very quickly, Karan, we have other stocks to discuss with you as well. On quick commerce, because that's where the burn continues and that's where the huge fight is, right? Because we all know that Amazon is coming. We've had that conversation with you earlier. While you said that it's not going to sort of throw people out of business, Amazon's entry, the question is going to be on how, and by the way, I was looking at all the notes that Swiggy released yesterday, and they were taking note of the higher competition even earlier when you had to get, the Swiggy One memberships and all that loyalty programs going a couple of quarters back. On quick commerce, what is your expectation in terms of profitability? When do they turn profitable? And anything that you picked up from the call yesterday?
The quick commerce side, I think there is still very low visibility in terms of profitability. They have only mentioned as of now that around FY27, which is Q3 FY26, at a console level, they will probably be at break even. So they have still not mentioned in terms of, they obviously mentioned the margin for quick commerce on a steady state will be 5% over the long term. But there's no proper visibility in terms of when the quick commerce business will be at break even. As I'm telling you again, the same thing, that because they are not market leaders, because they haven't, kind of pulled on these engines of ad revenue, higher take rate, AOV, SKU, larger store size, what Blinkit is doing very well right now, it's going to take time, because today the market is very different in terms of number of players, in terms of competitive intensity and everything put together. So I think that is going to be a monitorable strategically how the quick commerce turnaround happens. In my opinion, it's going to take some time. It's not going to be very easy for them right now.
Okay, all right. Hi, Karan. Good morning and good to see you. I think we've gone on for a goodish bit on Swiggy and Zomato. Let's talk about PVR. Pushpa 2. Can it fire up the stock?
Yes, I think definitely, Pushpa 2 is going to be great respite for the exhibitors. If you look at the month of October and November, October was kind of below par. As per our checks, the occupancy levels were, below 20%. November was good because of Diwali releases, and December will be blockbuster. I think in terms of opening day, we are penciling in that the overall opening collections will be anywhere between 125 to 150 crores if you look at the net box office numbers. And on a lifetime basis, this film could reach about 800 to 900 crores in terms of net box office revenue. The records today is of Bahubali 2, which is 1,000 crores net box office across languages. If the word of mouth of this film is good, eventually, you will see those records also being broken, in the month of December. And I think December month that way, because of Pushpa, because of Mufasa, which is like a large Hollywood release as well, which is coming, you could see occupancy levels of, more than 40%. So much needed respite for exhibitors. This quarter, we could end up being at pre-COVID occupancy levels, which could see better margins as well.
And by pre-COVID occupancy levels, just give us a number. What are we looking at here?
So basically, if you look at the cinema, I think it's first half. I think their occupancy levels are somewhere in the range of 24 to 25% on average. I think Q3 will be around between 30 to 31% in terms of occupancy. So Q1Q basis, box office revenues will see a growth of 30-35%.
Karan, ITC, do you have any thoughts after all those GEOM proposals? And but of course, these are all just proposals. They'll have to be, the decision has to be made. But your thoughts?
ITC we don't cover. I don't cover ITC.
All right. We'll leave it then. Thank you very much for your perspective on those questions, and we'll put them to the Swiggy management at 9:40. Thank you very much. So that's the conversation with Karan Taurani this morning on a couple of names, Swiggy and PVR specifically. I think we are towards the end of the pre-open session. The Nifty and the Sensex will come up on your screen. I think started about 100 points higher. And in the end, we are about 30 points on the Nifty, 24,488. 9-10 calls, I think, hitting them a little early. But Mitesh and Sudarshan are with us. Gentlemen, good morning. Mitesh, what do you have?
I'll go with a buy on Bank of Baroda for targets of 264, 265.
Sudarshan, what about you?
Well, consider buying SAIL. SAIL with a stop under 119.
Okay, two PSUs, BOB and SAIL. From Mitesh and Sudarshan. So those are specific trading ideas coming through at this point. Just a couple of other stocks that we want to sort of shine the spotlight on. GAIL is something that we want to address. Sonal is now standing by to tell us. Sonal, morning.
Good morning, Prashant. Well, there's an interesting note which has come by from Jefferies where they're quite bullish on the name. They have a buy call with a target price of 235 rupees a share. They say India's gas demand outlook remains very robust and GAIL would be one of the beneficiaries over there. This will be driven by new production and LNG contracts as well. They are talking about the company doing very well in their transmission segment where they expect volumes to go higher because two major pipelines will be commissioning in FY26. And this will would lead to re-rating of the transmission business. Also, if there's a tariff hike which is expected in the month of March 2025, the outlook on trading profitability is constructive in the second half because of the way spot LNG prices have been moving, and that's the reason they are projecting 9% EBITDA CAGR over FY24 to FY27, and valuations also, according to them, are undemanding at these levels, and that's why they look at it as a good entry point.
Okay, all right. Sonal, thanks very much for that. So, GAIL is going to be on our radar as well. Let's quickly revisit a lot of the defense names because of the Defense Acquisition Council looking at proposals and procurement, and it's across a range of radars and light helicopters, so on and so forth. So, which are the stocks to focus on? Let's ask Upasna. Upasna?
Well, defense will be in focus today as Defense Acquisition Council has approved 5 capital acquisition proposals worth 21,772 crore to augment defense preparedness. Now, Phillip Capital has highlighted some of the key beneficiaries based on these approvals. Now, DAC has approved procurement of new waterjet fast attack crafts, and it believes that the Garden Reach shipbuilders will be in focus and the key likely beneficiary on the back of this. DAC has also approved procurement of fast interceptor crafts. L&T is the likely beneficiary here. And the most important, DAC has approved procurement of electronic warfare suit and next generation radar warning receiver. Stocks like BEL, Data Patterns, Astra Microwave are the key likely beneficiaries on the back of this. DAC has also approved procurement of advanced light helicopters. HAL will be in focus and is the likely beneficiary on this. And lastly, DAC has approved procurement of T-72 and T-90 tanks, BMP and NGs, and Avintel and HAL are the likely beneficiaries on this front. So all in all, we are seeing these stocks that will be in focus today on back of this.
Okay, all right. Thanks a lot for that, Upasna. Well, let's hop across to Vinny, who's here to tell us about Granules. Well, Vinny, Granules stock is opening more or less flattish. They've tried to put out a clarification today. For the time being, the street is not buying into that. Tell us a quick analysis on that.
Absolutely. So the clarification that they've given yesterday, obviously we saw that OAI announcement that came in that they've received an OAI in their biggest facility, that is the Gagillapur facility. Now the company is saying that this will not impact their ongoing manufacturing as well as the distribution and sales of their existing products. But the new product launches, that maybe that could see a bit of an impact. The new approvals, that could see an impact coming in. The company is also highlighting that 80% of the corrective and preventive actions have been completed and the remainder will be completed by March 2025. There will be a closure coming in on this front. So hoping at least in the next 4 to 5 months, we will see that this would be completed, and then what is the next step? That is what we're watching out for. Other than that, they are also highlighting that, there are key growth drivers for the company, a focus area that they want to say. They said that this facility, the Gagillapur facility, that is not the only facility which will be, up for new approvals. There is a facility in the US also that is there, the GPI facility which is there, which is also eligible for new launches, as well as they want to focus in terms of large volume products in the US as well as the US market, as well as capacity addition is in one of the focus areas. So keep an eye out on that. They have other growth drivers which they are highlighting, but as of now, doesn't seem like the street will be buying into this, and we may see a fall in the stock.
All right. Vinny, thank you very much for that. So we will keep an eye on this one in a bit from now. Market opening, of course, is 3 minutes away. And, we actually, the Nifty is up at about 24,488. And we're about 30 odd points in the green at this point in time. We had Ruchir Sharma, ex-Morgan Stanley, in conversation with our sister network yesterday, and he wrote that piece in the Financial Times, which actually has gone pretty viral. Let's actually listen in. A quick 1-minute soundbite there, interesting one. We'll come back for market open.
It's the gap between America and the rest of the world in stock market terms, which is a bubble. But for example, if you look at the valuation gap between America and the rest of the world, it's the widest it's been in recorded history. The economy also seems a bit inflated when you have full employment and you're running a budget deficit of 6% of GDP, likely going to 7% of GDP. That's telling you that so much government is artificially pumping the economy well above its underlying trend, and that's also helping corporate profits get inflated. So I think that there is two elements to it, but the big thrust of the piece is that the gap between America and the rest of the world today is at levels that we have never seen before. Especially if Trump succeeds on deregulation, I feel that that's a big churn which the market is underestimating. Okay. So lots of interesting, stuff can happen here. But yes, I think that the big story is that the massive gap between America and the rest of the world today that's opened up, and that's sort of, got a further fillip after Trump's election. I think that gap is unsustainable. You just can't have one stock market in the world dominating.
Well, the gap between the U.S. stock market and the rest of the world, but also the U.S. economy and the rest of the world. That also is at, I guess, record levels. Humongous addition in terms of U.S. GDP over the last 10 years, 15 years as compared to pretty much every other large economic zone in the world. Just a couple of seconds ago for the market open, maybe we could look at Swiggy in the pre-open and how that is opening up. It should come up and should give you a sense of
Swiggy is up
what
about
that is
1.5%. The other one to focus on is going to be Honasa. Watch for that. That could be a very interesting stock for the morning because promoters have bought. They've not bought much. It's, I think, just 0.05% of the equity. They've spent about 4 crores, but the fact is that they're showing some commitment. It's a stock that's fallen off a cliff. So for now, I think there are some buyers early in the morning for Honasa.
A couple of seconds to go and we'll hit market open shortly. What do we have? 20 points on the Nifty to begin with, 24,463. So it's a slower start. 2-3 days now we've had big starts. It's a slower start. And understandably so, markets moved up quite a bit, very, very short time span. We'll be seeing some of the indicators, etc., which have been moving up as well. Nifty Bank is starting slightly higher. The Sensex is actually just nothing on it. The Midcap index is a little more pronounced, 1/3% gain on the Midcap index. The heat map up on your screen, again, 2 up, 6 down, that kind of a open is what you have. And even as far as stocks are concerned, it's mixed out there, 20-odd names lower and about 30-odd stocks which are starting in the red at this point. So let's get down to stocks. Surabhi.
Yeah, people are swinging it this morning, 4.5% up on that stock. That's a big newsmaker. And the other one is Honasa, new age companies, and both of them on the upside today.
Surabhi, NTPC green.
Yeah, exactly. It was up 6% in pre-open, and it's continuing its
8%.
massive move. And this is after a 10% move yesterday. So some of these recent listings, particularly this one, is up and about. Also, of course, it's a good morning in general for some of the PSU defense names because of the Defense Acquisition Council proposals. Anyway, that's also powering the big PSU defense name on the Nifty, which is BEL. So BEL is the Nifty winner, 2.5% up. Let's look at what else is moving. NTPC, the parent company of NTPC Green, is also positive, about 1% higher. Apollo Hospitals, ITC, HDFC Bank, Axis Bank, these are some of the stocks that are seeing early gains. Even L&T, remember, the brokerage notes told us that L&T could be a key beneficiary in one of those 5 major things that, will be procured by the Defense Ministry. There's IndusInd Bank, HDFC Bank, Adani Ports, and then the list starts thinning out. On the downside, you've got Power Grid, Cipla, some of the tech names like Infosys, HCL Tech, not a very positive start. HUL is slightly lower, and Mahindra, not that it impacts the stocks, but the headlines between Interglobe and Indigo and M&M, 6E is the contentious issue. But very quiet on the Nifty. I think it's all about individual stocks, right?
Well, that's right. NTPC Green now more than 1 lakh crore in terms of market capitalization. Remember, last year they did a bit of around 2,000 crores. They're saying in the next few years it's going to go to around 11,000 crores. And by 2032, they're promising a number of more than 35,000 crores of EBITDA. So that's a massive jump that they're factoring in. Explains why this stock, it's up more than 40% from the IPO price itself. So big one is what we're seeing out there. A few more notable movers, in early trade. You have Enviro Infra, that's a newly listed company as well. Another one that's up close to around 4.5%. The stock, I think, is up 100 rupees from its IPO price. So big move is what we're seeing over there. Niva Bupa, that's another stock that was higher yesterday. It's building onto those gains. And Ola Electric, now it's back at 100 rupees stock. Today, in fact, it's moving higher on decent volume. So a good start is what you'll have to say. 20 points higher, holding closer to around 24,500. Nifty Bank is well holding at around 52,800. The number of stocks advancing in comparison to the number of stocks declining. That's what's going to make you feel good. 3:1.
Okay, well, 20 points, 24,480 is where we now stand at. The shipbuilders are the other pack, right? So Mazgaon and Garden Reach are both up 4% and 5% respectively. BDL, that is Bharat Defense Limited, is up about 2%. And so on and so forth. I think we've kind of addressed bulk of what's coming up with decent-sized gains. Some 3:1 in favor of advances is the advances to decline ratio. I'm looking at stuff which is down, but nothing really meaningful with volumes. Castrol is down 1.5. Balrampur is down about 3. EPAC durables went one way up. That's seeing some 2% cut. But again, as I said, nothing really meaningful. And it's a slower start on the indices as well. Rajiv Batra is now with us. He's head of Asia Pacific ex-Japan China equity strategy and head of India and Southeast Asia equity strategy with JP Morgan. Rajiv, good morning. Good to have you here. Prashant this side. You have a real sense of what foreign investors are doing of all sorts. The fast money, the long onlys. What's the view? I just want to know, Rajiv, about after all of the selling that we've seen over the last 1.5, 2 months or so, are we now at the fag end of that episode? It's been one of the largest episodes of foreign selling ever in a compressed time frame. So where does that stand?
No, thanks for having me today. I'll say the conversation have now started changing versus what it was a month, 2 month, or a 3 month back. Investors are now looking for ideas because some places even value has started emerging, and global investors, particularly in the western part of the world, are largely focused on a value, which India was missing for a good amount of time. But now when we look into the financial space, some of the auto space, utility space, value has started emerging, and hence people have started drawing their shopping list. But we have not seen the full arrival yet because primary market in India is quite buoyant, and all major focus is going in primary market only. If you look at year-to-date flows, secondary market suffered 14 billion outflow, primary market seen 12 billion outflow, net still 2 billion outflow. But I will say that some interest have started coming back, but the full arrival, I'll say, will take earnings or a GDP print or even the high frequency data moving a little bit on our side. The only clarity they have now got is that policy continuity will happen in India post Haryana and Maharashtra election result. So that gives some breathing space to India now.
Rajiv, hi, morning. On the growth slowdown here in India, I just want to understand, is this becoming a bigger concern for a lot of the global investors you speak with? Or are they seeing this as maybe a one-off, a passing phase because we had elections and we had monsoons? Just want to know what they're thinking right now and how concerned they are about the GDP print, the earnings slowdown.
Yeah, Surbhi, it's a massive concern because if you look at the factor performances in India, earnings momentum or the earnings resilience, in good time earnings momentum, in bad time earnings resilience has been what driving the market overall. So last 3 quarters in a row, as you can see, deceleration in earning growth on YOY terms that has started concerning investors. And when all the plugs got pulled off, when we saw in the second quarter FY25, Nifty 50 exponential or MSCI India exponential delivered negative earning growth for you on a YOY term. So now that's the reason why, even if they are a bit clear about that India is not crowded position, policy continuity is not an issue, what is making them wait on the sideline is they want to see high frequency data which start showing that green shoots are emerging and slowdown is not a concern. We do believe that what we saw last quarter, at least in GDP growth term through or even in earning growth term through, we were at a trough level. As a house call, we believe second half fiscal year FY25 growth will mean revert to 6.7%. That's the house call. And in terms of earnings also, we believe led by strong government spending, better farm income due to the kind of acreages we are seeing in Kharif or sowing on the Rabi side. And lastly, some discretionary spending due to decent festive season and the wedding season, which is ongoing, will bring earning and GDP growth back on the radar.
All right. Hi, Rajiv. Good morning and good to see you. Well, that's heartening to hear, right? That the second half of the year is going to be better. But we're clearly not going to get the earnings that we started this fiscal year at. So given that earnings growth will be a little bit tempered in comparison to what we're working with, do you think there's a case for the PE as well to see a bit of a de-rating? The earnings pullback has happened, earnings cut. But India was getting a premium because we were going to be growing at such a fast clip. Or do you think it's par for the course and FY26 we get back to our growing whales? So the multiple stays.
So, Nigel, if we look at the valuations as well as the market performance, the recent correction which large cap index saw, 12% when we do the dissection of return, close to 6 to 7% came in form of P derating and another 4 to 5% came out of from the earnings downward revision. Now, start of this fiscal year, everybody had high hopes on India, 18% earning growth expectation. But now when we look at a picture, the sell side has become so cautious on India. The earning growth expectation for entire FY25 is 8% only. Although they are putting a lot of pressure on 2026 by forecasting 19% earning growth. So I believe near-term basis, next 6 months, there is a potential of getting an upward revision. But for 2026 or calendar year 2025, that's where some downward revision or reality checks to hit. So when we are coming up with our index target of 26,500 on Nifty, our earning growth forecast is premised on 11% in line with the nominal GDP growth of country rather than consensus sitting at 19%. But in terms of a PE2, we don't think there is a big chance of a derating from here on because policy continuity happening and geopolitical risk premia getting lower and lower because this is the third term of Narendra Modi government and geopolitical relationship is still getting better and better with time. Even some kind of an amendments happening in relationship with the neighboring country China too. That means our risk premia can decline further from here. How lower? Remember back in 2021, 2022, India risk premium was only 1.5%. Right now we are at a 3%. So we are not calling one to arrive, but if it keep on decelerating lower, we can even trade at 24, 25.
Got it. Rajiv, so, you've got so much global perspectives from your team around the world. What's the implication for Trump in the US for India? General consensus is he's going to be good for a market like India. But, I mean, we all know about consensus, right? Is it going to help at the margin? Could it hurt? What's your sense?
So our baseline scenario is emerging markets will suffer overall because our base case view is that Trump arrival means 60% tariff announcement on China during February and March and implementation by second and third quarter. Due to this, we have brought down the China GDP growth forecast to 3.9%. And that has impacted even the country that are dependent on China, where for emerging market, our GDP growth revised down from 4.1% to 3.4%. Massive cut over there. The economy like India, US, and few other who are not directly linked to China, that's where we are seeing zero impact on the GDP growth term through. In fact, it is positive for India because China being the large commodity exporter, and tomorrow if China growth goes down, commodity prices getting lower will be good news for India, Indian corporates, and even for the margins also. Because remember, India earnings story came under question mark when the margin started dwindling due to the higher commodity prices. If commodity prices goes down, India feel better. And most importantly, India still trying their level best to be the part of the secure sourcing theme of the US, where India can become part of first America, or you can say US plus one kind of a supply chain.
Okay. So Rajiv, I mean, kind of summing it up for our viewers, what you're saying is that the street is still penciling in some 19% earnings growth when you're at around 8% this year. So the gap is too much. Somewhere there will have to be a reality check. But at the same time, you're not overly bearish on India either. You're expecting things to get better in the next calendar year. So now tell us, then all these fence sitters, all these global investors that you're speaking with who are expecting improvement in earnings, what are you telling them? What's the portfolio call right now that you're going with for India if someone's taking that medium-term view?
No, so
where
it will
to
be
invest?
a very so it will be very year or 4 years maybe difficult in making for emerging market, because think about the ecosystem we are getting into. Strong dollar, higher rates or high rates overall, and then all this trade tariff or trade uncertainty related kind of a correction per se. So in this kind of an anemic growth environment for EM, anyone who can give a sustainable or a resilient earning growth, that country is going to command a premium. So when we look at our Asia allocation, what we are advising client in terms of pecking order, number 1 country on radar should be India, number 2 should be Taiwan, number 3 should be China, Hong Kong, and then our 2 underweights, number 4 is Korea, and last one is ASEAN. So that's what we are recommending. Within India, we had a barbell, or you can say a pro-defensive approach when I came last time on your channel. But we dropped the barbell approach 3 weeks back. We totally turned risk on. And we are saying if you want to play India, looking at the policy continuity, GDP uptake, growth upside coming up over there, cyclicals is a way to approach. Within cyclicals also, we are recommending to be overweight on industrials, financials, real estate, hospitals. In terms of consumers, we are much more selective. And what we are funding it through by being underweight on materials where you will have the pressure of commodity prices going down and some dumping from China, and the four-wheeler passenger vehicle play and the OEMs. That's what our underweights are.
Okay, so that was a lot to take in. Just quickly reiterating, your overweights are industrials, financials, and hospitals. These are the three biggest overweights, right?
Yes, and real estate, 4.
And real estate. So 4 top overweights. And you said India is your #1 pick in Asia, followed by which other 2 markets? So Asia and emerging markets. India is the top pick. Who's number 2 and number 3?
Number 2 is Taiwan as an overweight.
Okay.
And outside of Asia, it is Mexico and UAE.
Okay.
All right. What about positioning in the Indian markets? If you're going to see a big recovery, do you expect the broader markets to do better? Because they got hit harder.
Definitely, Nigel. Overall market will benefit, but at the same point of time, because of a higher beta and not requiring too much amount of liquidity, small and mid cap can also rally harder. Last week, we closed our underweight or a bearish call on mid and small cap also, because we believe if the large cap do well, at 1.5 times or 2x kind of a speed, even mid and small cap will also make a comeback. Again, there is a window right now to make a money for people. It will be a front-ended return year where majority amount of a return you will make start of the year itself only. But as you go into middle part of the year where tariffs are being announced, tariffs are being implemented, and suddenly the volatility and risk premium goes higher in the market, then even best of the markets may start going on the sideline. And investors, particularly global asset allocator, may start looking at safer asset classes like bond, money market to deploy money. In that, even India can go on the sideline. But initially, when it's time to make money, I think that's the right time we are approaching now.
Rajiv, great conversation. Thank you very much, and come back often because there's a lot to talk and lots changing very fast enough as well. I want to highlight one name before I toss it to Nigel. Niva Bupa, 10%. Niva Bupa. Yesterday was a big day with about an 8 or 9% pop, and it's the 3rd largest volume traded stock right now, Niva Bupa. So I just wanted to highlight it. $90 now almost on that one. Nigel.
Well, Yash has mentioned it to me yesterday that it was because of the GST exemption news. So he says that could be one of the factors at play. Big mover yesterday, big mover today. But, Raji briefly mentioned about real estate. So let's get straight to that. Brigade Enterprises. In the last 1 year, the stock has performed very, very well. To help us out with how things are panning out and what's the way ahead, we're joined by Pavitra Shankar, the MD at Brigade. Hi, Pavitra. Good morning. Always good to see you win. Well, tell us how's business. In the first half of the year, your sales number was close to around 2,800 crores and volumes were at around 2.7 million square feet. For this year, what are you factoring in now? How much better can it get by the end of this year?
Hi, good morning. Thanks for having me. Yes, we've had a good first half of the financial year. We are looking to launch additional projects through the rest of the financial year, and hopefully the year should be much better than what we've done in H1. While we're happy with our results, a lot of the numbers are dependent on launches happening, and launches are again dependent on approvals in our 3 states of focus, which is Karnataka, Telangana, and Tamil Nadu. So as these launches and the approvals come through, I think the market is still very good in terms of demand for the kind of products that we have. We're moving into more premium residential category, and despite that, with the increase in product price and ticket price, we're still seeing very good demand on ground for residential. Leasing is also doing well. Retail and hospitality also are all doing well. So I think the business in general is performing quite positively as far as we're concerned.
Right, you're sounding optimistic on the prospects, so that's good news. We're going to push you for a couple of numbers on both those 2 fronts. But first, what about approvals in Karnataka? Are things sorted out? At project level, there were some various hiccups. Has that got ironed out? Point number 1. And Pavitra, help us out with the number. 2,800 crores at the half-year mark, 2.7 million tons at the half-year mark. What do you end this year with? Guidance on both those 2 fronts.
It's always difficult to get on here because we typically do not give guidance. But I would say that we are maybe around 40% through of our financial year target. So, we are targeting to do much more in the second half of the financial year, at least as far as sales are concerned. And values are also much larger than last year. So while our Q2 numbers are, say, 47% over Q1, from a value perspective, it's 68% over Q1. Q1. So that's sort of reflecting the kind of product mix that we are putting out. And some of our new launches, especially in Hyderabad and Chennai, will also be higher ticket size. So from that perspective, I think on the launches front will be substantially higher than what we've seen in terms of the realization so far.
Okay, and project approvals improving in Karnataka. Has that got ironed out?
Approvals is a mixed bag. Some things are coming through, some things, are unexpected. There are some changes on ground in terms of, I don't want to get into the nitty gritty, but sort of the way in which we can get our approvals and the way in which, we can finalize our designs and sanctions, etc., is changing a bit on ground. So there's a bit of confusion. So hopefully all of that will get sorted out. It's affecting everyone across the board, not just Brigade, but hopefully that's something that we will all get clarity on soon.
Okay, and since you said that 40% has been done in the first half, I think for the year the sales number should look like mathematically closer to around 6,300 or 6,500 crores. That should be a ballpark range, right?
Yeah, we'll try to do that or better.
And Pavitra, hi, morning, Prashant here. And if there is a little bit of help from the monetary policy side, maybe does one need the help? I mean, the industry per se?
You're talking about interest rates and so
Yes.
on. I mean, I think it is generally fairly positive. I mean, I would still say the rates at which people are able to get home loans today, anywhere from 8.5% to 9% is still pretty competitive in the grand scheme of things. Of course, rates have been lower over the past few years and immediately after our COVID and lockdown and so on. But I think it is still it has been stable. So that has actually led to predictability in terms of what people can do in terms of their financial planning and so on. So from that perspective, it always helps to not have a shock in terms of repo rate increases or anything like that. But overall, I think the demand is still on ground. So, how you choose to finance is different, but the demand is still there for residential. And I think that's why we're feeling positive and bullish about the rest of the few months in the financial year.
All right.
Pavitra, the hospitality arm of the company, Brigade Hotel Ventures Limited, has filed draft papers for a IPO, 900 crores. Could you give us the timeline by when would this hit the markets?
So we actually filed the DRHP on 30th October. So it will take some time for the approvals to come through. There is a back and forth with SEBI on that. So not sure yet. It's maybe somewhere from 3 to 4 months in the entire cycle. But, we are still awaiting a lot of the conversations to still happen.
And how many keys do you have? How many keys do you have in the hospitality vertical?
Sorry, you cut out there. I didn't hear the
Number
question.
of keys. Number of keys. I wanted the current number of keys.
Yes, we have about 1,600 keys across 9 operating hotels and across 4 to 5 major cities. Bangalore, Chennai, Mysore, Kochi, and GIFT City in Gujarat.
All right. And it'll be around these levels as of now. That's the plan?
Yes. Again, I couldn't really hear the full question, but we have these 1,600 keys. We have some land bank as well on the hotel side. I won't be able to say too much more because we have the DRHP filed already.
Well, we thank you, Pavitra, for joining in, giving us a fair idea about how business is shaping up. Look forward to having a chat with you. If you don't speak for the remainder of this year, wish you well and look forward to 2025 as well. Well, let's focus on a couple of stocks, though, that are on the move. Solar panel makers, they are buzzing in trade. Vivek joins us to tell us exactly why. Vivek.
Well, good morning. So that's right. So this is an important development as far as, the solar value chain is concerned, especially as far as the solar cell as well as module manufacturers are concerned. And the two stocks, that are recently listed, Waaree as well as Premier Energy, are the ones that are buzzing in the session. So what's actually happened is that overnight, the US Commerce Department has actually gone ahead and proposed a fresh round of duties as far as solar imports are concerned from Southeast Asia. Remember, most of the players that we have interacted with always tell us that there is a significant price differential between India exports as well as exports that are coming in from Southeast Asia, mainly China and some of the other countries that China uses in order to go ahead and export to the US market. So Chinese firms based in Vietnam, Cambodia, Thailand, Malaysia have been flooding the market, which is what the preliminary investigation has revealed, and this, they believe, leads to artificially cheap solar panel prices. The case actually pertains to players asking for imposition of anti-dumping duties. So now what are the two kinds of duties. The first one is the countervailing duty. Remember, the final determination is scheduled on March 27, 2025, and the order is likely to be passed on April 3rd, 2025. So it's still some time away. And also, when you're talking about the anti-dumping duty, final determination is in June 2025, and order expected on June 9, 2025. And final decision will be in the hands of the US government. So when you're talking about the stocks, remember Wari, Premier, the ones that we mentioned, Tata Power as well as the Adani Group do have some exposure in this particular space. Sentimental positive definitely as far as the entire Indian solar manufacturing space is concerned.
Right. Thank you very much, Vivek, for that. So that's solar panel makers. Niva Bupa is up 14%. I mean, we tracked the open and was up 6, 8. Now is sort of ramming through higher and very, very sharply so as well. So there's a fair bit happening. Other names include gains in stuff like Medhani, which is Mishra Dhatu. It's a PSU, by the way. Defense. They provide alloys for defense companies and the government, large suppliers. C8 is up about 3%. PN Gadgil, Maharashtra-based jeweler, that's about 4%, 4.5% higher. And there's Monte Carlo, the winter time, right? I mean, at least in the north, 4.5%, 962. On Monte Carlo as well. Well, Swiggy is what we're going to talk about. It's reacting to its second quarter performance. Stock's done very well since its listing. Their food delivery business performance has improved. Quick commerce revenue has also gone up. And they're, of course, guiding for profitability by the third quarter of next year. We have the management now joining us to take some questions. Harsha Maheti is with us. He's Managing Director and CEO. And Rahul Bothra is CFO at the company. Gentlemen, great to have both of you here. Appreciate your time, as always, on CNBC TV18. Harsha, if I can start with you. I mean, we spoke briefly at the Global Leadership Summit when you were here in Mumbai for our event, and you were talking about how now you'd have to face investor questions now that you're listed. So how does it feel? This is the first one post-listing.
Feels all new and great, Prashant. Thank you so much for having us on your show. It is the first quarter. I think, as I mentioned, even in the build-up to the IPO, it's all new, and we're excited to learn what all of this entails.
You aren't doing badly at all. You're doing very well, Harsha. So the food delivery business and the guidance that you've given, right? That is what I want to begin with. 18 to 22% kind of growth is what you said in the call. That's right. And we were talking with the analyst earlier this morning, and I asked him, well, what should we ask you? He said, well, will it be 18 or will it be 22? And what will it take for you to get to 22? So let me begin there.
Look, I think there are a bunch of stuff that we're doing right now. We've maintained that a lot of the growth that we're expecting is going to be on the back of affordability as well as new consumption occasions, new use cases being unlocked. A lot will depend on our ability to, find and create opportunities that can give even more affordability to consumers. So it's going to be mostly on that band primarily.
We can hear you. Go on.
So it really is going to be a factor of how well our efforts at creating new use cases as well as creating affordability work. We have a series of new use case related work that we're pushing out to the consumers. The latest being Bolt, the 10-minute food delivery that is expected to create some new consumptions. There's things that we've been doing on affordability, but we'll continue to build on it. I think how well we do these few things are going to really dictate whether it'll be the lower end or the higher end, I guess.
Mm-hmm. Harsha, morning. Good to have you on the show. And actually, we will sort of go segment by segment. Rahul, morning to you as well. Let's go segment by segment and talk food delivery, and then we'll get to quick commerce. Now, on food, a section of the street feels that your peer is growing at an even faster rate. I mean, Mangla, my colleague, was pointing out that I think Zomato's last quarter growth numbers were at around 30%. You're guiding for up to 22%. So is that you just being conservative, or do you want to grow slow and steady? And then a little more color on this whole 10-minute delivery business as well. I think just this morning, there's a tie-up that's on quick commerce, though. I think your peers are tying up to deliver gym equipment in 10 minutes as well. Everything is 10 minutes, right? But what are the economics and the business rationale of 10-minute delivery for food? What are the margins like, and how will it help you, achieve your margin and revenue targets on the food side?
Awesome. Thank you. So I think in terms of our overall growth itself, and since we're going segment by segment, if you look at this calendar year, and if you look at the overall 3 quarters that have gone past, we've either kept pace with or grown faster than the category overall. So this year, our growth has been on a pretty good trajectory, and we expect that to continue even going forward. As for, let's say, the 10-minute delivery of food itself, I think it is palpable that now as consumer expectations change, and if they're able to get a host of other needs available in 10 minutes, I think it's only clear that they're probably also going to look at their food deliveries and wonder why they're taking 30 minutes. And it is happening. And for us as platforms, it's the challenge to figure out how to offer a meaningful selection of food even to consumers at really, really good speeds. And it's not just like, how does 30 minutes to 10 minutes change everything? Of course, we do see already that the conversions or how much consumers buy on the platform is linked to the speeds. But more importantly, we think that this is a lot more about use case unlocks. If you're probably stepping out in half an hour for your office commute, you can't probably plan a coffee around it today or until today. But if there is an offering that gets you maybe your favorite coffee in 10-15 minutes, you are potentially going to be...
Harsha, from a consumer perspective, it's great. I mean, when I'm on the app, I also want food to come as fast as possible. Yes. I'm asking this from your perspective, and maybe Rahul can sort of, throw in some light here as well. Does 10-minute food delivery mean more feet on the street, so you have to invest more? And what does that do to your margin expectations, right? Because you're at 1.6% adjusted EBITDA margin now. You're saying it should go to 3%. Tell us by when. And eventually you said your ambition is to reach 5% margin in food delivery. By when? What are the timelines? And what does this whole 10-minute business do to these targets?
Sure, maybe I'll take that. So if you talked about the margins on, say, the specific bulk initiative that we have launched, that's an initiative that has come out of the playbook of the quick commerce business. So as you know, we have pioneered this quick commerce category in the country. And there are learnings of that business that we are now applying on the food delivery side. There is a curated menu. There's also a last mile that is kind of cut off at 2 kilometers. From an overall economic standpoint, this is at best equal or better than our core business. And as Harsha mentioned, this is unlocking a lot of new consumer use cases, and we do expect pretty good tailwinds on this category expansion. Now, talking of the overall margins, we have grown our EBITDA. If you've seen, we have doubled our EBITDA on a quarterly basis to 1.6%. Our steady state guidance is 5%. We do believe that this is not years away, but quarters away. Our overall take rate continues to expand. We are ahead in terms of overall category take rates that exist in the industry.
How many quarters away? How many quarters away? 5%.
No, so that specific guidance we wouldn't like to give, but you should assume that there is operating leverage that is already existing in the business. If you look at over our last 4 quarters, we've added 90 basis points in EBITDA just on scale, right? And you should expect a similar kind of number to play out even with the rising scale. And there are opportunities on the take rate side. Our advertising business, we have talked about it, having another 100 basis points of leverage existing still. And some of the cost equations, especially on the subscription program, which we have successfully run over time, we do expect leverage to also come through the overall affordability initiative that we have launched. So you should assume that it's a good trajectory, and steady state is not very far away.
All right. Hi, Harsha, as well as Rahul. Welcome to the show. I'm with Surbi on that one. Very, very happy to use the app. And as a consumer, I'm thrilled. So that's good news. But from a stock market perspective, they want to know numbers, right? I mean, when do you move towards profitability? You all have put out this long-dated EBITDA as well as profitability guidance. Are you being conservative on that front? Can you get there sooner? I ask this because your peer, they are guiding for better times ahead. So are you being conservative in that long-dated guidance? First on that, and then I have another question for you.
Sure. So if you look at our guidance, this is on the overall corporate EBITDA. So as you say, food delivery is already on a positive trajectory and will continue to do so. Overall, in the investment that we are seeing is in the quick commerce side of business, we are seeing significant acceleration of category growth, which means there is an expansion of the overall dark store network. We are guiding for increasing our dark store footprint by 5 times in H2 compared to H1. We added 86 stores in H1. And we are, guiding for 400 plus store additions in H2. So there are these investments that are being, taken into account for our overall guidance of corporate, adjusted EBITDA, positive by December 2025, the quarter, October to December 2025.
Okay, all right. Since you mentioned about the dark stores, how many of them are profitable? You're going to be doubling it, as you said, by the end of this fiscal. As of now, if you have a count, how many of them are profitable? Point number one. And point number two is, both Zomato as well as Zepto, they have tapped the markets. You have as well raised some money. How much of that money is enough for you to sustain? Or do you need to come in and tap the markets yet again? So on 2 points, one is the dark stores, and the second point is funds are adequate for how long?
Sure. So on the first question, it's a question of scale as well as maturity of stores. So if you look at 3 out of the top 10 or top 7 cities are already profitable, and within these cities, 75% of the stores which are say 12 months and above are already profitable. So as we kind of guide for accelerated store expansion, there is going to be the certain investment that will be baked in for the overall neutrality at the corporate level to come by in 4 quarters from now. In terms of the overall cash balance with the IPO proceeds, we have a little over 8,800 crores in bank. So it's a very, very strong balance sheet. As we have said in the past, a lot of this is actually defensive capital to ensure that we continue to have the firepower to continue to remain invested in the category growth. Food delivery business is already generating positive free cash flow and will continue to accrete to the corporate treasury. So overall, we feel a very good place from our balance sheet strength point of view, and we don't expect to raise new capital in the near future.
Okay, in the near future is at least 2 quarters.
It's no, I think at least you should expect don't as I said, we don't expect to raise more capital.
Okay.
So how
foreseeable
long?
future then?
So I mean, 8,800 crores is a lot of money, folks. So I think even if you look at the overall profile of the investments that we are guiding, we wouldn't need to dip into a lot of that treasury balance.
Harsha, just one question, right? Dark stores are how you grow because you got to deliver stuff and you got to have all these stores around neighborhoods and 10-minute deliveries. This is I was reading this with regards to other markets where there is these quick deliveries. Are there wherever I have one dark store near my where I live, and it's always crowded and there are bikes going in, bikes going out, there are traffic jams, all kinds of things. This has been in other markets, and I think it was maybe the South Korean market, you'd know better. This is one of the issues which was as a small, not small, but a pushback, and the government had to step in, etc. to kind of anything there. Have you gotten any feedback? Is this an issue at all or no in the Indian context?
Prashant, I think you bring up a valid point. I think we do hear back. It's like we have hundreds of stores, none of which existed 2-3 years back. So there's a frenetic pace of expansion. But from time to time, we do get feedbacks. I get email, we get feedback from the ground. And sometimes if it is indeed adding inconvenience and not making lives of consumers better, then we will have to change course and move our store to a better located part. Because what is also clear is that unlike any other market in the world, the Indian consumer in these households is enjoying quick commerce way more than any other global peers. At the same time, I think it is our responsibility to keep listening to the overall stakeholders on the ground and keep just our eyes and ears open and act on the feedback that we get. I mean, to your point, like we don't get any large scale feedback around this. Out of the few hundred stores, are there 1 or 2 or 3 incidents where we get feedback? It may be creating some disturbance, then we act on it and just change track.
Just one more point, and I think we've discussed this earlier. Rahul, if you can come in terms of order size, order value in tier 2, tier 3 cities, etc. when you go down to, as compared to the cost of operating these stores. I mean, is it clear in terms of how this is going, or is it still work in progress in terms of coming up with, because order value size is going to be smaller. Presumably rents, etc. for these stores, the dark stores are also lower, but does it, are margins going to be similar when you expand out of the larger cities?
Sure. So what we have observed is that, the overall expansion, activity outside, say, the top 25 cities is a more recent phenomena. What we have seen is consumers in many of these smaller cities are taking up very nicely to the overall proposition, more so from the selection and convenience, on offer. Because a lot of SKUs that are available on the quick commerce network is typically not available, in the neighborhood stores. So that has meant that there's a section of consumers there who are trading up in terms of the overall selection as well as purchase behavior on the platform, and we aren't seeing significantly different ordering patterns compared to the larger cities. But again, this is data which is more recent vintage, and over time we will have a lot more clarity. In terms of cost of operating these stores, there are obviously leverage and scale benefits that we will continue to accrue. So very hard to kind of say today whether when they will become as profitable as larger cities. But it is fair to assume that they operate at an incremental cost, and we don't necessarily have to invest a lot of the supply chain investments, because a lot of these cities get serviced by the nearby larger metro town.
Sure. Harsha, final question, and I can tell you this is from a consumer user perspective. I've been probably the most sticky user of the platform. I haven't changed for various reasons. Maybe it's the interface or whatever. But Amazon is coming. Now, I checked last time, I think it was a food order, and the platform fee that you guys are able to charge today is about 10 rupees. If I order on Instamart, I think the handling fee, etc., whatever that term is, it could be 6 to 7 rupees. Amazon is coming. If they start slashing those charges down, which the industry has worked very hard to build, what happens? How worried are you about big competition, especially in the quick commerce space?
So I think we are no strangers to competition. If you've tracked our overall company, we were born as like the 8th company in food delivery. When we came up, like there was heightened competition even from Amazon in food delivery for a few years in between. So we feel very good about our chances. Ultimately, I think we have a lot of respect for Amazon, but at the same time, the quick commerce business and the needs are different and are emerging. They're not even clear. So I think it'll come down to which companies understand consumer needs better and serve them over the next few quarters.
But if they start a pricing war of sorts, because they're huge, right? If they just say free delivery or 1 rupee delivery, then what? Where do the projections go then?
I think the market's already super competitive, and it will stay that way. That's what we've talked about even in our report as well as the earnings call yesterday. So we're prepared for competition. We welcome competition, but the consumer will ultimately vote with their thumbs.
And then that 8,000 crore rupee cash that Rahul was talking about, that perhaps comes in handy as well. Thank you very much, Harsha, Rahul. Appreciate your time here on CNBC TV18. Great conversation, and good luck to you guys as you continue to execute. That's the management of Swiggy post their first quarter results. We'll take a quick commercial break here. Markets up 100 points. So we were up 20-30. It's triple-digit gains now, 24,560 on the Nifty. Stay tuned. We have Girish Kausgi of PNB Housing joining us on the other side to talk about their H2 outlook and maybe a little beyond that as well. Stay tuned.
Welcome back. So the market has been holding up. The Nifty, just a quick check, 93 points. It's nicely cruising along. 24,550 is here. Well, let's now move on to the next company, the next corporate on our radar. PNB Housing is the company that we're looking at. The company has set a retail loan book target of about 1 lakh crore by FY27, and affordable housing loan book target of about 15,000 crores by FY27. To talk about the growth expectations also in the near term, second half, and then as we're looking at the next financial year, we have with us Mr. Girish Kausgi, MD and CEO of PNB Housing Finance. Mr. Kausgi, always a pleasure to have you on the show. Thanks so much for joining in. So let's break this down. I mean, these are some of the projections that I think you had given analysts in a call earlier. But let's talk about this year itself, the second half. How strong is growth looking, and what is the what are the sanction expectations, disbursals? What are you working with for H2?
Well, good morning, Surbhi. I think if you look at last year, the growth on retail was 14.1%. June, the growth was 14.4%, and Q2 as of September, the growth was 16.2%. Against a guidance of 17%. So I think this year we'll be able to breach that 17% guidance on retail book growth. Now, in terms of next couple of years, we plan to grow at about little over 17-18% on retail book. because largely now in the overall portfolio, retail is about 98%. Overall book is about 69,500 crores and retail is about 68,000. So out of this, our focus is going to be on affordable, which is Roshni, what we call as, and emerging, and prime will grow at a slower pace. The growth in prime is going to be about 9%. Growth in emerging is going to be over 30% for next 2 to 3 years time. And the growth in affordable, considering the base is quite small, we've just crossed a book of 3,000 crores. So the growth is going to be slightly higher on the Roshni.
Mr. Kausgi, since you've given us a breakup and you're expecting Roshni, which is your affordable housing segment, you're expecting that to lead growth. Just give us the difference between, yields and the margin profile of all of these segments. How does affordable compare with the mass segment? And, what makes you optimistic of reaching that 1 lakh crore rupee mark as well by FY27?
I think if we grow at about 17-18%, we'll get to 1 lakh crore by FY27. And by FY27, the split of 1 lakh crore retail book is going to be 15,000 crores affordable, 25,000 crores emerging, and the balance 60,000 crores would be prime. And in addition to this, we plan to restart corporate in next couple of months. So book by FY27 will be about 7,000 to 8,000 crores. In terms of all the 3 segments within retail, out of 4, that is super prime, prime, emerging, and Roshni, we don't focus on super prime. So on prime, the yield is going to be about 9.5%. Emerging yield will be about 10.5%. And Roshni from coming year, it will be about 13%. So I think this is the yield split.
All right. Hi, Ms. Kausgi. Good morning and good to see you in. This is Nigel on this side. Help us out with the NIM guidance from here on, and going by the yields that you're talking about, what will your ROAs look like as your book scales up?
If we talk about NIM, we have guided 3.5%. We've been maintaining about 3.6 to 3.65 for last few quarters. I think for next few quarters, we'll be able to maintain NIM at the current level. And from next year onwards, NIM will start inching up. And in terms of ROA, currently we are at about 2.4 to 2.45. That is to a certain extent supported by the recovery of the write-off pool. I think standalone by FY27, NIM should be around 3.9 to 4-ish types. And ROA should be about 2.5 to 2.6.
Okay, got that. Mr. Kausgi, pretty granular detail, right? All the way mapped till 2000 and FY27. Good morning, Prashant here. Let me ask you a very near-term kind of question. I mean, at least from a market point of view, all attention on the monetary policy this Friday, and whether there will be something which will be coming. Maybe not outright rate cut, but a CRR cut, some liquidity measures, etc. Any expectations from your side?
I think expectation would be before March. Definitely rate cut is going to come in. I'm not sure about this month, but definitely in Feb, I think it is expected. There could be certain liquidity easing measures which could be taken probably in this MPC, but definitely next MPC rate cut is going to come in.
Okay, all right. We'll leave it then. Mr. Kausgi, thank you very much for joining us, and a good sort of detailed guidance all the way till FY27. Okay, I think, guys, I think the market's up triple digits.
Yeah, absolutely. 93 points higher on the Nifty. And it's a very steady morning so far. There's been no jitters of any sort. Let's talk about what's leading the charge. Once again, it's the Bank Nifty. And, I think that's the point that we were discussing with Mr. Kausgi as well. The expectation is that maybe the RBI will come in with that CRR cut. And already there are different brokerages noting which banks perhaps have greater sensitivity to that CRR cut. And I think Federal is one that's been pointed out. Maybe we'll get Abhishek actually to revisit that note that came in from Citi. Anyway, right now, HDFC Life and SBI Life, these are the 2 life insurers that are surging. They're at the top pie. Yesterday, our colleague Yash had reported that there could be some changes in life insurance laws that could allow IRDAI, the regulator, to set investment limits, how much of foreign investment can come in life insurance companies. And that obviously is going to be a big positive for the stocks for the companies. Right now, they're all up about 2%. Beyond that, NTPC, Wipro and TCS, some of the tech names have turned around. They were sluggish in the morning when we opened. And there's L&T as well, which is in the top tally. So basically, IT has reversed. And now IT, along with banks, 2 of the twin engines are fighting well
So
for the market.
you know, the insurers have seen lots of price damage. The high on SBI Life was 1950. From 1950, yesterday it fell to a low of 1400. So I think for life insurance, especially names like HDFC and SBI, etc., is just a bit of a rebound after the sharp corrections which have come through. And we've, of course, reported on 3-4 of the large proposals which have been part of the Insurance Amendment Act, which the government put out. Mitesh is with us now with what he wants you to do. It's 10 o'clock. Mitesh, good morning again. What do you have?
Good morning, Prashant. Buy on realty finance. I think, another stock which is reversing from extremely oversold levels. So buy here. Keep a stop below levels of 144 and look for a target of 155 or thereabouts. And the other one is a buy on REC with a stop at 540 for targets of 580. And I would want to give a disclaimer that we have positions in REC, so there's clearly vested interest.
All these newer listings are all surging, but there's no price data. Mitesh, any thoughts on HEG? By the way, HEG was nowhere in the mix in the morning when we were looking at least for the first 20 minutes, but it's the biggest volume-led gainer, and HEG moves up 8% after yesterday's, I think, 10% rally. And graphite can't be far behind. Graphite is up 5% as well. There you go. So that's a big volume-led gainer. Any thoughts here on these two names?
Prashant, one, I think, HEG is a part of my portfolio as well. I think yesterday both these stocks moved very well. And, today we are seeing some follow-through. My sense is that HEG has started a trend which could see the stock head towards first target, which is now close to at 588. But eventually, if you give it about 3 to 5 months, my target is in excess of 725, 740 zone here. So very positive on HEG and graphite, but between the two, I like HEG more. And as I said, I think it is a part of my portfolio. So disclaimer that I have interest in.
It's by the way, back to October 2021 levels. So it seems to be, and that was, by the way, the high after which the stock completely collapsed. So it's right there as we speak at this point. We'll take a quick commercial break here. Mitesh, thank you for that. Manisha is going to be here, and we put the focus on commodities on the other side. Stay tuned.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay, and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports.
We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India in with us.
Celebrating 25 years of CNBC-TV18. For 20 years, it has been India's most coveted stage for business leadership. The benchmark of unparalleled excellence.
We have to dream big and even bigger for India.
An accolade that celebrates character, integrity, and decisive action.
You just have to do your best.
Not identified by any single name, nor defined by a single achievement.
The best years are to come, and you don't have to wait for long, it's round the corner.
But redefined every year by visionaries who inspire and legends who lead. A A journey that honors those who set the bar higher year after year. This is not just an award, it is fully.
Okay, welcome back. 100 points on the Nifty, 24,560 is where we are at. Manisha is with us to tell us the commodity top of mind. Manisha, morning.
Morning, and thank you for that, Prashant. Well, overnight has been good for commodities. New York session saw some buying, and Asia seems to be following up on that. But I'm looking at copper because that one is trading at a 2-week highs. We've seen a percentage point of gain in the overnight market. Well, a bit of a pause in the US dollar rally absolutely seems to be supporting many of these industrial commodities here. Apart from that, the China manufacturing is expanded for a second straight month in the month of November. That has led support. And then it is about market now pricing a 75% probability of a rate cut in the month of December. This is higher from 55% in the previous week, and that in turn also has been positive. I want to tell you on what copper prices really have done in this year. Well, in the last 2 months, we've seen 10% of decline, but for the year, it is up by nearly 6% there. If you look at the overall markets there, well, it was in this year itself that we saw copper prices hit all-time highs in the month of May. On LME, we saw the prices hit a high of around $11,500 a ton. And on New York session, we saw it at $5.2 per pound there. So from those kind of levels from 11,000, we are trading at below 9,000 at this point in time on LME. So clearly pretty off from the kind of highs that we saw in this year. What the markets will watch from here on is going to be the Powell speech that is today. You have non-farm payroll data that comes in on Friday. And then China Economic Work Conference is happening in this month. And we might be looking at an outlook for 2025 from China in sense of economic growth. That is going to be pretty important to watch out for. The factors that you will need to watch in 2025 for copper is going to be potential trade war between US and China. We already are looking at a lot of volatility in case of prices because of the shifting trade policies, and that perhaps could continue going into the next year as well. Well, there also is demand from decarbonization, EVs, renewable energy that is going to bring supply and other demand continuing in case of copper there. And then there are some supply constraints as well. There also is fluctuating global demand where the markets are not able to put a finger on, and that is going to be the uncertainty in the next year. Having said that, most of the Wall Street banks and brokerages have come out with their numbers on copper as well for 2025. And as you can see, UBS, Goldman Sachs, Citi, JP Morgan all believe that $10,000 and above is what we could be looking at in sense of copper. It's only Bank of America which believes that another $400 of a gain from these current levels is where the average could come in for 2025.
All right. Thanks very much, Manisha, for that. You know, that big copper rally was in 2021 got interrupted. We'll see if that resumes later in 25. Well, we'll take a quick commercial break here. On the other side, our segment is the economy. My colleague Lata joins Ashish Gupta of Axis AMC and Devanshu of Axis Mutual Fund to discuss whether, from a market point of view, the RBI should concentrate more on liquidity in the upcoming policy meet this Friday. Stay tuned. That's coming up.
Leadership in action. CNBC-TV18's 20th India Business Leader Awards.
Presented by Standard Chartered in association with Reliance Industries Limited.
Committed more than 400 million to the retrofit program back in 2022. We also selected the seats back in 2022. There is a regulatory design, certification, and then subsequently manufacturing process that we need to go through. And that is where the supply chain constraint has hit us. Two different manufacturers came back to us and said, look, we just cannot deliver to the time frame that we had committed. There's going to be a delay. In one case, it was 6 months. In the other case, it was a little longer. So the program that actually should have physically started on the aircraft already will now not start until next year. The 787 aircraft, the first of the retrofit ship sets, will come in April. It'll take a few months to install and be certified. First aircraft hopefully in service by October next year. The 777s will have a refresh next year, but then go for a full retrofit starting in 2026.
So that 400 million that you spoke of, that was committed as far as the retrofit program was concerned. Do you believe you may need to now allocate more capital towards the retrofit exercise?
Well, the sad fact is yes. In one case, we've had to change seat vendors. This refresh I talk about, which is an interim step on the 777s, is something that we hadn't provisioned for originally and is only necessary because of the delay to the seat deliveries. But look, we've made this decision to invest more because we realise that this is, we can change everything else about the airline, and we nearly have changed everything else about the airline. But until we change the last 40 of our legacy wide-body aircraft to the standard that we expect of ourselves, let alone what customers expect of us, I think people will not consider the job complete, and we won't consider the job complete.
So how much more are you going to have to spend over and above the 400 million which have already been committed?
Well, I won't say, but it's in the tens of millions.
We're going through a second phase of consolidation. The last one we saw was in the early 2000s or the mid 2000s. But what does that mean in terms of pricing power for airlines like yourself? And also on the back of the merger and the integration, what are the cost efficiencies that we're talking about? I mean, what does that realistically mean in terms of margin improvement for Air India?
Well, there's a whole regulatory and legal structure that you'd need to maintain if you're an independent organisation or an independent airline. There's duplication of many positions. There aren't the economies of scale that you can enjoy when you're a 300 aircraft airline. So clearly there are efficiencies, and we've realised some, and there are more that we wish to realise. That was part of the motivation for putting the businesses together. But I wouldn't want to give you particular figures. With respect to pricing power,
fully.
Welcome to It's the Economy. Today, ahead of the monetary policy, we look at liquidity in the banking system. Now, how does liquidity enter the banking system? These are the factors. When RBI gives a dividend to the government, or when it buys dollars or bonds from the market, it is putting in liquidity. Buying of the bonds is what you call OMO purchases. And when old government bonds mature, that also brings in liquidity. Now, liquidity can be infused by a CRR cut, but that is a one-off. So let's not consider that. Now, how does liquidity go out of the banking system? One, when you and I withdraw cash from the system, when we pay taxes, but the government doesn't immediately spend. There is a near-term deficit in the banking system till the government spends our taxes. Liquidity also goes out when Reserve Bank sells dollars and, pulls back rupees. Now, Devang Shah, one of our guests today from Axis AMC, argues that liquidity is poised to become deficit from November to March. And so the Reserve Bank should provide liquidity. But how is the question? Should it cut CRR, which is, the percentage of deposits that banks cannot lend? They have to keep as idle cash, or should they do OMO purchases? In which case, OMO, buying bonds, in which case you can infuse liquidity. Joining me in this discussion is, of course, Devang Shah, the author of a report called Acumen on Liquidity, and Ashish Gupta, the CIO of Axis Mutual Fund. Gentlemen, thank you very much for your time. For once, I'm not starting with Ashish. I'm going to start with Devang. Since you are the author of this piece, why do you think liquidity is going to become deficit?
So thanks, Lata, and good morning. So what we are trying to probably highlight in this note is that the best of the liquidity surplus is behind us. You also already spoke about it, but I'll just try to cover some numbers. I'm sure we have all noticed the fall in the durable liquidity, and durable liquidity is important because durable liquidity is a total liquidity into the system, which is with the banking as well as with government put together. And we've actually seen a fall from 5 trillion 2 months back to 1.5 trillion. And it's largely because of FX outflows, some 30 to 40 billion. Government balances at the same point of time also have reduced massively, and they're now into WMA. Like for mid of September, government was holding 4 trillion of balance, and today now they are into deficit. All this has actually led into fall in banking liquidity. And our base case is that Q4 banking liquidity conditions continue to worsen due to various reasons. This first, the currency in circulation will increase to the tune of 1 to 1.5 lakh crores. That's the general trend. If you look at the last 5 years trend, the Q4, we actually see liquidity to tighten by around 1 to 1.5 lakh crores. Credit growth and the buildup of government balance. So all this will cumulatively worsen conditions in Q4. Our actual calculation is that banking liquidity, which is durable liquidity today, is around 1.5 lakh crores. will go into deficit if we don't see any RBI action. And that is why we came up with this piece on liquidity.
Okay. Ashish, so now let me toss to you. Would you therefore say that a CRR cut is needed? Or can the Reserve Bank just, buy bonds or do, very long-term repo operations whereby they give money for a month, 2 months to the banks?
So I think my sense is RBI will be probably keener to do either open market operations or VRR. I think we have seen RBI has been reluctant to use CRR really as a monetary tool, as a liquidity tool rather, and want to use CRR as a monetary tool along with it. So just to address liquidity, I think RBI prefers to use OMOs, VRRs, but really they believe CRR and rates are the more indicators of their monetary policy stance. So I think to address liquidity, their preference will be for the former rather than the latter. I think earlier in the year, even when banking liquidity was tight, the RBI was not so keen to step in because really the aggregate liquidity, if we take into account the government cash surplus with RBI was large. So it knew that when the government spent that money, the banking liquidity will improve. Unfortunately, as Devang highlighted, over the past couple of months, there have been forex outflows, and you would have seen RBI using about $25 billion of forex reserves to stem the depreciation in the currency, right? So when they sell the dollars, they are actually taking out rupees from the system, and that's why the liquidity in the system has come down. So I think that can be replenished by some of the tools like OMOs and repo, as you mentioned.
Okay.
Of course, the other construct that MPC will start to consider now that growth has come off much sharper than they were expecting. And do they need to move on the monetary side? And therefore, would a tool like CRR also come back into the equation? So I think if the disappointment on growth would not have been there, I don't think the discussion on CRR would have been on the table. But with the growth disappointment, I think at least CRR cut can be considered.
Okay. Well, Ashish, two things. RBI will not bring CRR in the MPC discussion. They have made it very clear in prior policies that MPC has control over repo. CRR is an RBI instrument. So it's quite possible that they announce it even the day before or after the meeting is over. It's quite possible, but it's not MPC's domain. The other thing I wanted to point out is during the Rajan Urjit Patel era, there was this big discussion in RBI and the banking system, and you're probably aware of it, that there is something like the psychology of bankers to give loans and to reduce deposits. As long as they're borrowing from RBI, there is a tendency on bankers not to cut deposit rates. So, this argument was made very strongly by FIMDA to Rajan, and then he infused liquidity. Do you think that will come into force again? There is a clamor, hunger for deposits, which is psychologically, making banks compete with one another. To just quell that, do you think a CRR cut will come?
So I think at least in the recent weeks that we have seen, some of the fight for deposit has reduced, at least in terms of the rates, right?
Okay.
So at least we do not see as much aggression in terms of rates being offered. We have actually even seen some of the public sector banks reduce their 3-year term deposit rates as well. This is not to say that banks are not aggressive about raising deposits, but I think banks are at least not using rates as a tool to garner more deposits. And it is also potentially because of the margin pressures, the challenges they are facing in terms of growth in loans and particularly in the higher yield segments. So I think in that sense, the competition for deposits has come down. I'm not too sure that without a CRR cut, whether there is going to be an easing in really the deposit competition among banks. I think the challenge is that the message from the central bank is clear that banks have to grow loans lower or at least equal to the growth rate in deposits. They have to maintain or bring down their loan deposit ratio. So I think you are going to see this quest for deposit continue, but at least recently we have seen in this quest for deposits, rates are not being used as aggressively as they were a couple of months ago.
Okay. Ashish, is there even a slight chance of a rate cut? There is a strong argument that yes, the lagged inflation number is 6.2. Reserve Bank may have to bring up arithmetically the full year inflation number also from 4.5 to 4.7 or 8. But if you look 1 year down, there could be, Chinese dumping. There could be even slowdown in growth because of the noises made by Trump. So you can make an argument that 1 year down, inflation is going to be 4, and it takes about 3-4 quarters for rates to come into to take an effect. So is there even a 10% chance, 20% chance of a rate cut?
So while I will not rule it out, I would kind of put it as a very low probability event because I think the other factor that the central bank has to keep in mind is the exchange rate. As we talked about earlier, even in the last 2 months, they've had to use about $25 billion of forex reserves. So we have seen post-US election, the dollar continuing to strengthen. US yields have moved up since September. Of course, more recently, the US 10-year has come down by from about 4.4% to 4.2%. But really, the narrative is for higher for longer rates, right? And
I take your point.
That reduces the degrees of.
Ashish, I'm sorry I'm cutting you because I have to squeeze another question in and I'm running out of time. I take your point. The forex, the external sector is very important. It doesn't give elbow room to cut. Devang, very quickly, do you think that there could be more liquidity inflows now? See, already yesterday and today, we have seen the foreign mood change. After days of outflows, weeks of outflows, it's changed. And it's quite possible now that that narrative has played out. We could see a Santa rally, we could see a coming back of inflows. Have you accounted for that? If there is inflows, then liquidity problem is solved.
Yeah, so actually in our calculations, we have actually taken in around 50,000 crores of inflows.
You do only bond inflows.
And with that also probably we need at least 1 trillion of liquidity infusion. So our assessment is, yes, personally, I also believe that probably the dollar rally and everything is largely overdone for the near term. So somewhere down the line, we should get some inflows. You pointed out FI inflows in equity. In fact, FI inflows have also come in debt in the last 2 days. So
very quickly, Ashish, I agree. Sorry, I'm pushing you all. Very sorry. Ashish, last word on banks. Do you think now banks become attractive as liquidity comes in?
So I think a bank in terms of valuations are already attractive. I think, but what is really needed is elbow room for banks and NBFCs to grow loans faster. And I think there are challenges both from liquidity and regulatory pressures that loan growth has been tempered down. And I think easing in both of these is really needed more than rate cuts, because even at these rates about a year ago, you had loan growth in the system at 16%, right? And so it's not that rates are really holding back credit growth. So I think it is liquidity, it is kind of regulatory action that is holding back credit growth, and I think that needs to ease.
Okay, I'm not very sure if the Reserve Bank was wrong in those regulatory rules because we have seen a growth in MFI and unsecured defaults, but that discussion for another day. Completely out of time. Thank you very much, Ashish and Demang, for putting new light on how we should look at the Reserve Bank policy. Markets gung-ho, believing that the banks are going to get more liquidity. Bank Nifty is leading. Wrap up on Bazaar. Chartbusters coming.
An article that was literally just released by IATA, which traces the real, how airfares have tracked relative to the CPI and relative to oil prices, not just in India, but in many countries. And what you will find that if you index back to 2015 or 2019, airfares have gone down. And not only gone down, but gone down dramatically relative to inflation and relative to oil price. So I think just the competitive dynamic of aviation and the market will mean that airfares will remain affordable. And of course, we want to fill our planes. So there's always going to be a benefit to the customer in that respect.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand.
Defense stocks like HAL and Bharat Electronics surge even as Defense Acquisition Council approves purchases worth over 21,000 crore rupees. Swiggy surges close to 5% following positive management commentary. The company tells CNBC-TV18 that they expect to hit profitability by the third quarter of FY26. Honasa Consumers founder Varun Alag raises stake to 31.93%. The company's founders now own 35% stake in the company. Stock rises. PNB Housing is also buzzing on the back of bullish commentary. The stock is up close to around 3% as it lays out a target of 1 lakh crore in retail loans by FY27. The management also tells CNBC-TV18 they expect the NIMs at around 3.9 to around 4% by FY27. Wonderla rises in double digits as the company launches its QIP to raise funds at a floor price of 829 rupees per share. Hello and welcome to Chartbusters. I'm Nigel. With me is Mangala. We have another green day and the markets are looking quite strong right now. 24,500 is where we are at. And also the broader markets, the breadth of the markets were fairly good. So We've seen a good pullback in the last few trading sessions, and now, in fact, more than 1,000 points from the recent lows. Hey, Mangalam.
Nigel, the financials are doing extremely well this morning. We have a bunch of these stocks, the NBFCs, banks, all of them doing extremely well. We also have a couple of these, wedding-related plays doing well. So the last few trading sessions, we did see a big move come by in a small jewelry companies. So now you have Titan, which is now moved to the high point of trade, recovered a fair bit from the lows, currently at the high point of trade, along with the financials that we spoke about. Bajaj Finance is doing well, and the key contributor to the Nifty has to be HDFC Bank, has been going from strength to strength, currently extremely well bid at the high point of trade as well. But the stock on our radar is Lumax Auto, has made a new acquisition, buying 60% stake in Green Fuels Energy Solutions alternate fuels business for about 150 odd crores. To discuss this and talk about the synergies from this acquisition, we have with us Anmol Jain, who's the managing director at the company. Thanks a lot, Anmol, for joining in. Always a pleasure speaking with you. Let's talk about this acquisition itself. What does it do to your overall business, prospects? So what is the reported revenue and margins of the business that you've invested for 60% in? And what are the plans of you increasing your stake further in this company? At what milestones?
Thanks, Mangalam. Thanks, Nigel, for having me. So I've always said this, Lumax is a very diversified product portfolio company. And as a part of our inorganic growth strategy, we want to continue diversifying into new product segments. We were not present in the alternative fuel segment, and this actually leapfrogs us into that zone or that strategic focus. We're quite bullish of the whole CNG evolution in the passenger car space as well as in the CV space in India. This company already has strong inroads into passenger car makers like Maruti Suzuki as well as Tata Motors. And if you look at the industry landscape, I believe almost close to 16% of the total passenger car industry was CNG, with Maruti leading it by 28% of their total production in CNG, and they want to take it up to 35%. So clearly a big growth which lies ahead for us, and that's the reason we bought 60%. In terms of revenue, for a full year, annualized revenue, perhaps in FY25 or 26, it should be looking at around 300 to 350 crores. Obviously, for this year, it will be much lesser given the 4 months only of the financial year. And we do expect this to be growing at anywhere between 25 to 30% CAGR over the next few years.
All right. Hi, Anmol. Good morning and good to see you in. This is Nigel on this side. It's been a while since we spoke. So we're going to hold you at that number of around 350 crores for FY26. And from there on, you're saying a 25% growth is what is possible. Give us a few more details. What kind of profitability will you be looking at for this particular business? Point number one. And what plans of buying out the remaining 40% stake?
So as of now, Nigel, let's say the margins are maintained at around 18 to 20% EBITDA. We do expect that with this CAGR of, let's say, 25 to 30%, the margins should be sustained. Given the fact that Lumax has always been a more partnership-driven company, so when we say acquisition, the promoter who has founded and built this company continues to be invested with the 40%, and we're going to co-create the value. Lumax has great relationships with the OEMs, and the technology is there already with the current entrepreneur. So jointly, we will co-create value and take this to greater heights together. So there is absolutely no plan as of now to expand or increase the stake from Lumax side.
All right, no plan to expand the stake right now. But what's interesting is, through these partnerships, what has happened is that you've increased the content per vehicle for Lumax over the years itself. So let's just talk about that. The last time you joined us, it was close to around 15,000. You expected that to grow by at least 20 odd %. I just wanted to understand, of this 15,000 content per vehicle, how much of that is, fuel agnostic? And with the addition of this, how much does the potential content per vehicle increase for you?
So Lumax Technologies as a whole, let's say, of all the joint venture subsidiaries put together, the higher end of the spectrum for us would be close to around 30 to 35,000 per vehicle on a particular platform. This obviously would include largely from IAC, which would have the cockpits and the door panels and the interiors and whatnot. Again, added to that, the certain other joint venture products which we do. So we're looking at 35,000, let's say at a peak right now for passenger vehicles. Coming specifically to green fuel, I think right now, if you look at the area which this company operates, which is largely the delivery system, what happens essentially is that from high pressure to low pressure, there is a whole delivery system which goes onto the vehicle. That delivery system by itself would be around 15,000 per vehicle, which comprises of 4 key core products. This company presently operates in 2 of those core products. So thereby about 7,000 to 8,000 per vehicle is our addressable market. But again, we will grow the wallet share with both the OEMs and expand this to other OEMs in due course. Also, we have plans to enter the other 2 core products where the company is not currently present. So addressable market for us would be anywhere between, let's say, 15,000 upwards per vehicle in the near future for this particular company.
Okay, all right. Anmol, what about for the company on the whole? What kind of growth can you deliver, say, in FY25? I think the margins have been early teens, 12% or thereabouts, with potential to improve in the second half of the year. So could you tell us revenue growth for this year with margins as well as for FY26, given that this acquisition as well will come into play?
So overall, Nigel, if you look at the numbers which we reported in H1, Lumax Technologies grew at about 20% on a top line, maintaining the EBITDA margins at about 14%. The outlook for current year would be similar. I would say 20% for the full year. We do expect, let's say, Q3 had certain hiccups, but I think Q4 should be smooth sailing, specifically in the two-wheelers and pass cars. So I would say anywhere around 18 to 20% for the full year with a sustained EBITDA margin is what my guidance would be for Lumax Technologies as a whole. Going forward, I think we continue to believe that Lumax Technologies will offer a much better return, probably grow 50% more than that of the industry. So anywhere between 15 to 20% should be the total consolidated CAGR of Lumax Tech over the next few years. And from an EBITDA margins, clearly our endeavor would be to expand margins further. But I would say on a safer side, we will be able to at least maintain it in FY26.
All right, take that point. Just final question before we let you go, and a quick one. You said that you have plans to enter the other two products in this space beyond the two that this acquired company gives you as well. So can we hear of any more JVs, at least in the next 1 quarter or two? Or what are the timelines of you entering that other part of your addressable market here?
So those two product lines would be addressed by the same company, Lumax Green Fuel. We already have certain technical partners with whom we will, get these products into the market. So as of now, there are no new JVs on the anvil. But again, given a midterm perspective, we're always looking out for, new ways to grow both inorganic and organically.
Got that. The street likes what you said. The stock was holding up in the green, but as you were talking about growth prospects for this business itself, increasing total addressable market, at the same time increasing content per vehicle, the stock has moved to the high point of trade. Wish you good luck on the execution of this deal itself. With that, we move forward. Let's get you an idea of a profit coming in from our colleagues at Money Control Pro. Anant Chaudhary joins in today.
We like Shivalik Bimetal Products Limited, a manufacturer of bimetal parts and shunt resistors used in industries like switchgears, smart meters, electrical vehicles, and electronic devices. With an 85 to 90% market share, it is India's largest supplier of thermostatic bimetal and a global leader in ultra-low ohmic shunt resistors. It is the only company domestically to produce shunts using electronic beam welding technology. Entry barriers are high for a new entrant in this industry due to lengthy product approval cycle of 4 to 5 years. The company is the only Indian manufacturer with approved shunt resistors for smart meters, positioning it well to benefit from government Smart Meter National Program, which aims to replace 250 million conventional meters by 2026. The rising adoption of energy storage devices, including solar energy, which requires low ohmic shunt resistors, with penetration of EV leads to boosting demand for battery management systems. Despite facing headwinds from a slowdown in the North American automotive market over the past few quarters and a decline in realization due to passing on lower raw material costs, domestic demand remains strong. Margins came down due to lower revenue from high margins shunt business. However, management expect demand to revive from Q4 onwards. And we believe stock trades at very reasonable valuation of 29 times on FY26 earnings.
All right, with that, we'll take a short break, come back. On the other side, we'll get you more stock-specific action, perhaps get in a conversation as well with the management of Monte Carlo. Sandeep Jain, who's the Executive Director, joins in.
Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18, weeknights at 7 p.m.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports.
Welcome back. Well, Monte Carlo, the stock has been in focus of late. We have winters that are due and sometimes that has a bit of a ripple impact on the stock price. But to understand how's business shaping up, we're joined by Mr. Sandeep Jain, the Executive Director at the company. Hi, Mr. Jain. Good morning and good to see you win. Well, in the last few days, the stock price is quite excited. It appears winter is coming and people believe that there's going to be a lot of demand for your product. So tell us, how has demand been on ground? Are you noticing a better than expected demand? Point number one. And what about the guidance for the year? You were guiding for single-digit revenue growth with margin improvement of around 150-200 basis points. Is it still on the cards for this fiscal in comparison to last? Sandeep? Oopsie. All right. Let's try.
I think we've got him on a wrong line, I guess. So we'll just try and, get him back once again. But we should just look at the stock over the last few trading sessions. It's up around 15% at a near record high, if not, fresh record high itself for Monte Carlo. What's very interesting, however, Nigel, is that, while every once in a while we do feel cold here in Mumbai, the western part of the country. Yesterday we had the IMD chief join us here on our channel, and said that we might actually have the hottest winter in this year itself. So if that were to happen, then what happens to their business is something that we'll most definitely keep an eye out on. Manisha was speaking to the IMD person who did say that November has actually been hotter than what we've seen in the last 5 Novembers. And also, December is likely to be much hotter as well. We'll just try and repatch that connection with Mr. Sandeep Jain.
I'll tell you what.
He's ready. Let's go.
All right. Hi, Sandeep. I think we have got you back on the line right now, so that's good to hear. We are talking about a stock price being quite excited, and that's why it's moved big time from around 800 to around 960. But tell us, how is business on ground? Point number one. And what about your guidance for the year? You were guiding for single-digit revenue growth with margin improvement of 200 basis points. Is that still on?
Yeah, good morning, Nigel. So, yeah, you're right that we have guided for a flat revenue for this financial year, but seems like this year has begun well in as far as winter is concerned. It is basically October, November have been good for us. So I think that we still have 1 month left, but as far as this quarter is concerned, we see a positive growth coming out of this quarter as compared to last financial year. And definitely, as you rightly said, there would be improvement in margins as well.
All right, because at the halfway mark, the margin improvement hadn't yet come about. So the second half of the year, the margins will have to be much better. So in comparison to FY24, you're saying margins will improve by around 200 basis points. Is that doable?
Yeah, I can't say it's 200 basis points, but there would be definitely improvement in the margins because we don't give a quarterly guidance, we give annual guidance. So on annual basis, you will see that once we end this year, we will have a definitely improvement in the margins.
Right. On revenue itself, the first half, there has been a mild decline. October, November, you said have been good for you. Could you give us a sense of what October, November growth has been this year over last year's October and November?
There was single-digit growth in revenues in October and November, and December is also very important for us. So overall, we think that a third quarter basically contributes around 55% of the revenues. So we're very hopeful that we'll have a good growth coming up, at least single-digit growth coming up in this quarter, and that will compensate the decline which happened in first half of this year.
So October and November in single digits. Can you tell us mid-single digits, high single digits, low single digits?
Because we don't have a data from across India because we only have EBO's data. So it's very difficult to say. But
so how much has EBO's grown?
EBO's growth around low single digit.
Okay, all right. Sandeep, one factor that you have worked on is getting rid of the seasonal aspect. I recall earlier woolens was bulk of your sales, and then gradually I've been getting cottons in as well. And I've seen a couple of t-shirts, in fact, that have been made from your stable itself. So you have de-risked the business to some extent. Could you give us a few more details then? Quick commerce channel, how much of your sales come in via this channel? I believe you have tied up with various companies, Blinkit, Swiggy, Zepto as well. So how is that shaping up?
Yeah, so fortunately, I think they're working well. We have tied up with Blinkit also and also with the Minutes. So the sales have started, but it's probably to comment about the overall sales which will happen in this financial year. But earlier response, like it started from last 2 months only, and we have been selling good number of pieces every day. So it has just picked up. And at the same time, as far as online business is concerned, I think we should be doing around 9 to 10% of the revenues in this financial year from online sales.
9 to 10%, is that?
Yeah.
And how much of that will come from QCom?
QCom is a very small business right now because it has just started. So I can't quantify as of now.
Right. What about, home textiles? That has been one of those strong growth drivers for you going forward as well. That is a business that has been growing in double digits, a lot harder, a lot higher on a smaller base than all the other parts of your business. What does it stand at in terms of contribution right now, and what is that growth rate likely to be?
Yeah, I think because you rightly said that it's growing double digit as compared to single digit for overall company. So definitely contribution from home textile would be more in this financial year as compared to last financial year. And we would see a double digit growth going forward also in the home textile segment, even in this year.
How much does it currently contribute?
So I think this year we should end around 15 to 16% of the revenues in home textiles of overall sales.
Okay, all right. Thanks a lot, Sandeep, for joining in. all the best. You seem to be indicating that that the third quarter was better than what you've seen in the past. And for the year, you're optimistic about some kind of revenue growth in this fiscal versus the last. And you're still sticking to that number that there will be some margin improvement in this fiscal as well. Thanks a lot for joining in. The stock is still up close to around 4.5%. But the reason we invited the management was in the last few days, the stock has moved up more than 10%. You pull up a week-to-date chart, it'll tell you a clearer story. For the time being, slip into a short break, come back, continue to focus on markets, stock-specific action as well.
We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen. We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18. For 20 years, it has been India's most coveted stage for business leadership. The benchmark of unparalleled excellence.
We have to dream big and even bigger for India.
An accolade that celebrates character, integrity, and decisive action.
You just have to do your best.
Not identified by any single name, nor defined by a single achievement.
The best years are to come, and you don't have to wait for long, it's round the corner.
But redefined every year by visionaries who inspire and legends who lead. A journey that honors those who set the bar higher year after year. This is not just an award, it is a celebration of leadership in action. CNBC-TV18's 20th India Business Leader Awards.
Presented by Standard Chartered in association with Reliance Industries Limited.
Committed more than 400 million to the retrofit program back in 2022. We also selected the seats back in 2022. There is a regulatory design, certification, and then subsequently manufacturing process that we need to go through. And that is where the supply chain constraint has hit us. Two different manufacturers came back to us and said, look, we just cannot deliver to the time frame that we had committed. There's going to be a delay. In one case, it was 6 months. In the other case, it was a little longer. So the program that actually should have physically started on the aircraft already will now not start until next year. The 787 aircraft, the first of the retrofit ship sets, will come in April. It'll take a few months to install and be certified. First aircraft hopefully in service by October next year. The 777s will have a refresh next year, but then go for a full retrofit starting in 2026.
So that 400 million...
Fully.
Welcome back. The markets continue to do well, even as the indices on the top of your head. We have the Nifty Bank outperforming with a gain of almost 0.9%. The small cap index is the one that really is doing a lot better than the Midcap index itself, up around 0.6%. And we've seen a bunch of these cash stocks surge just as we speak. Double-digit gains coming in for a bunch of them, including the likes of Yatra and Bharat Dynamics, which is now up 6%. Kaya has done well. HEG itself is up around 11.5%. We take your leave on this edition of Chartbusters. Stay tuned. Trading Hour comes up next.
I'm really happy to be here, and congratulations on completing your 25 years of CNBC.
committed as far as the retrofit program was concerned. Do you believe you may need to now allocate more capital towards the retrofit exercise?
Well, the sad fact is yes. In one case, we've had to change seat vendors. This refresh I talk about, which is an interim step on the 777s, is something that we hadn't provisioned for originally and is only necessary because of the delay to the seat deliveries. But look, we've made this decision to invest more because we realise that this is, we can change everything else about the airline, and we nearly have changed everything else about the airline. But until we change the last 40 of our legacy wide-body aircraft to the standard that we expect of ourselves, let alone what customers expect of us, I think people will not consider the job complete, and we won't consider the job complete.
So how much more are you going to have to spend over and above the 400 million which have already been committed?
Well, I won't say, but it's in the tens of millions.
We're going through a second phase of consolidation. The last one we saw was in the early 2000s or the mid 2000s. But what does that mean in terms of pricing power for airlines like yourself? And also on the back of the merger and the integration, what are the cost efficiencies that we're talking about? I mean, what does that realistically mean in terms of margin improvement for Air India?
Well, there's a whole regulatory and legal structure that you'd need to maintain if you're an independent organisation or an independent airline. There's duplication of many positions. There aren't the economies of scale that you can enjoy when you're a 300 aircraft airline. So clearly there are efficiencies, and we've realised some, and there are more that we wish to realise. That was part of the motivation for putting the businesses together. But I wouldn't want to give you particular figures. With respect to pricing power, I'd refer you to an article that was literally just released by IATA, which traces how airfares have tracked relative to the CPI and relative to oil prices, not just in India, but in many countries. And what you will find that if you index back to 2015 or 2019, airfares have gone down. And not only gone down, but gone down dramatically relative to inflation and relative to oil price. So I think just the competitive dynamic of aviation and the market will mean that airfares will remain affordable, and of course we want to fill our planes. So there's always going to be a benefit to the customer in that respect.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with
Good morning. Welcome to Trading Hour. It's a Wednesday morning. Things have been steady, through the course of the morning. We're higher now for the fourth day in a row. So Sonal, on Thursday, the Nifty closed off at levels of about 23,900. And now we've climbed close to about 650 points from that level, as the markets are now, closer above that 24,500 mark. Banks are outperforming for the second day in a row. The Nifty Bank is up nearly 3/4 of a percentage point. And there's so many individual stocks like these recent IPOs like Enviro Infra, Niva, Bupa. These are stocks which are up 20% in the last 2 days. Swiggy, Ola too have been making some solid gains. So the broader market is very, very vibrant and active.
It is. And you spoke about the recent listings, right? That has been the flavor for last 2 days.
NTPC Green Energy is another one.
Even that one is doing really well. And two names from the broader markets which I highlighted yesterday as well during Midcap Radar, HEG and Graphite. These two continue their up move today as well. So HEG is up another 12%. We have Graphite, which is up around 6%. So we'll have to figure out what's really happening with these names. But the uptick continues. The realty space also, second day running, is seeing higher levels. So Nifty Realty, that is one of the top gainers that we are tracking today. And apart from that, the small cap index continues to do well, 0.4% higher there. But it's really about the financial space, and it's really about the banking space that continues to do well. So let's put focus on that. PSU banks are buzzing ahead of the RBI monetary policy on Friday. on hopes of a potential CRR cut. And Citi has written a note on how this move could impact banks. Abhishek is here with the details.
Well, Citi has written on banks. They have tried to analyze the implication of a potential CRR cut, especially given the fact that there are improvements with respect to prospect of repo rate reduction as well. So they say that RBI could consider a phased reduction of 25 basis points each in consecutive policies, that is 2 policies. So durable liquidity has reduced to more than rupees 2 trillion in just 1 month because of substantial forex operations that's being carried out by RBI. So a reduction in CRR from 4.5% would be a normalized process to go towards a pre-COVID level of 4%, and that would mean a release of more than rupees 1 lakh crore liquidity into the system. So CRR cut can be viewed favorable with respect to HDFC Bank, Axis Bank, Federal Bank as well as Bank of Baroda. A 50 basis point repo rate cut that would give an NII return negative which would impact the highest to Federal Bank as well as HDFC Bank, Kotak Mahindra Bank and Axis Bank. It would have lower impact on some of the PSUs like SBI and PNB, up 2.8 and 2.7% impact on their NII. Lenders who will not have adverse impact from rate cut is IndusInd Bank, AU Small Finance Bank and RBL Bank on their NII momentum. Rate cut could benefit sooner for some of the NBFCs like LIC Housing Finance. 58% of their debt is from market borrowing, so a rate cut would mean immediate transition of reduction in the cost of funds. Bajaj Finance as well, 48% of their debt is from market borrowing. L&T Housing Finance as well as MMFSL. Back to you.
Thank you very much for that. Let's move on now. Swiggy is surging close to about 5% following positive management commentary after their Q2 numbers. Mangalam is here to tell us the details and what he took away from the management commentary. Mangalam.
Well, so the key takeaways from numbers post, the basic numbers itself tells you that Swiggy is on its path to improvement, where the food delivery business operational metrics continue to improve with operating leverage, and quick commerce continues to grow because of the investments that the company is making in it itself. So food delivery in the second quarter, the EBITDA grew by about 2 times. Margins came in at 1.6% versus 0.9%. And Bolt, which is a recent innovation, 10-minute food delivery, is now about 5% of their sales itself. On Instamart too, the orders jumped by about 21% quarter on quarter. Orders per dark store increased by about 10%. And the companies announced that they will double their dark stores itself by March 2025 itself, and the average size of these stores increased by 30-35% as well. In the conference call, they spoke about profitability. Profitability on a consolidated basis by the third quarter of FY26. Food delivery business, they believe, can grow at a steady 18 to 22% on a GOV basis, and improvements in the margins from 1.6% could go all the way up to 3%. On a steady state, the company believes this can actually be at around 5% as well. And in the quick commerce business, EBITDA break-even comes in at around the second quarter of FY27 itself. The good part about Swiggy is that we already have a precedent in the form of Zomato, and as a result of which, the path that Zomato has taken, Swiggy is following in that itself. At current price, Swiggy is trading at around 50% discount to Zomato, as against 60% at the issue price itself. Further narrowing the execution timeline gap between both of them would narrow the valuation gap between the companies as well. In fact, this morning we spoke with the management, and this is what they had to say to us.
Factor of how well our efforts at creating new use cases as well as creating affordability work. We have a series of new use case related work that we're pushing out to the consumers. The latest being Bolt, the 10-minute food delivery that is expected to create some new consumptions. There's things that we've been doing on affordability, but we'll continue to build on it. I think how well we do these few things are going to really dictate whether it'll be the lower end or the higher end, I guess.
There is, operating leverage that is already existing in the business. If you look at over our last 4 quarters, we've added 90 basis points in, EBITDA just on scale, right? And you should expect a similar kind of number to play out even with the rising scale. And there are opportunities on the take rate side, advertising business. We have talked about it, having another, 100 basis points of leverage existing still, and some of the cost equations, especially on the subscription program, which we have successfully run over time. We do expect leverage to also come through the overall affordability initiative that we have launched. So you should assume that it's a good trajectory, and steady state is not very far away. So if you look at, 3 out of the top 10 or top 7 cities are already profitable. And within these cities, 75% of the stores which are, say, 12 months and above are already profitable. So as we kind of guide for accelerated store expansion, there is going to be the certain investment that will be baked in for the overall neutrality at the corporate level to come by in 4 quarters from now. In terms of the overall cash balance with the IPO proceeds, we have a little over 8,800 crores in bank. So it's a very, very strong balance sheet. As we have said in the past, a lot of this is actually defensive capital to ensure that we continue to have the firepower to continue to remain invested in the category growth. Food delivery business is already generating positive free cash flow and will continue to accrete to the corporate treasury. So overall, we feel a very good place from our balance sheet strengths point of view, and we don't expect to raise new capital in the near future.
Okay, that's Swiggy. The stock is up 2% and not 5%, as I said earlier. And Zomato too is up nearly 1.5%. So it's pretty much a stable duopoly now in the market. There's one stock which is getting affected by Q-commerce's dominance and aggression, and that's D-Mart. So this is an interesting note which has come out from IIFL, where they're saying that D-Mart is no longer the go-to destination for the most affordable daily groceries. So it's not the cheapest option. So they did a recent survey, and that shows that Flipkart is offering grocery products at a 3 to 4% discount to D-Mart. Zepto, through the Super Saver program, and even Flipkart's quick commerce venture, Minutes, is now offering pricing which is 2% lower than that of D-Mart Ready, and even Amazon's Fresh pricing is now at par or comparable to that of D-Mart. So basically this is showing that D-Mart's once unquestioned dominance in terms of a price advantage may now be fading, which is why IIFL is not very bullish on Avenue Supermarts. They have a reduced rating, and the target price is pretty much where the stock is currently at 3,800. But interesting, numbers coming out from the recent survey about how peers are now offering groceries at a cheaper rate compared to D-Mart.
Oh, yes. So that has been a conversation for a long time as well, right? How Q-com has been impacting Avenue Supermart, something that they've spoken about in their post-results commentary as well. But with that, we'll slip into a break now. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Stay tuned.
The steep fall in the second quarter GDP growth to 5.4% makes the RBI policy very crucial, especially because inflation too is high at 6.2% in October, with food inflation at over 10%. Can the RBI MPC prioritize growth over inflation? Can they cut rates, or will they choose to cut the cash reserve ratio or CRR? And what can both these actions mean for your investments, loans, and your businesses? Catch the RBI policy live straight from Mint Street, along with instant analysis from bankers, economists, policymakers, and veteran investors. RBI monetary policy
on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits, and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage actionable intelligence and in-depth reporting that make CNBC-TV18 India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups.
Welcome back. You're still tuned into Trading Hour on CNBC TV18. Now, while equity markets are doing well, let's talk about commodities now. Manisha is joining in now, and today we are focusing on crude oil prices. Manisha, what's happening here?
Oh, well, yes, finally back above $70 a barrel after trading below that level for almost 2 weeks is what we've seen for WTI. Overnight has been 2% of gains, and this is after US has sanctioned 35 Iran entities and vessels. Also, the markets have seen a bit of a gain ahead of the OPEC and allies meeting on 5th of December. This is online in Vienna, with an expectation that the output cuts could perhaps get extended for a third straight time this time. Also, China is preparing for 2025 economic targets. China manufacturing also is expanded for a second straight month into the month of November. So all of those are supportive factors. And then market is pricing a 75% chance now of a 25 basis points of a rate cut in the month of December. That is yet another thing which has led to decline in US dollar index and gain in many of these dollar denominated commodities. Well, the markets also will watch out for the Powell speech that is happening today. You have the US non-farm payroll data that is on Friday, and then it is about China stimulus measure expectations via China Economic Work Conference that is happening next week. So there's plenty to watch out for before we end this 2024.
Thank you, Manisha. As always, get into a break. On the other side, Vinod Agarwal, MD and CEO at VECV, will join in on the other side to discuss the November auto sales for the truck and the bus business.
Congratulations to CNBC TV for doing 25 years and all the best for next 25 years.
Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18. For 20 years, it has been India's most coveted stage for business leadership. The benchmark of unparalleled excellence.
We have to dream big and even bigger for India.
An accolade that celebrates character, integrity and decisive action.
You just have to do your best.
Not identified by any single name, nor defined by a single achievement.
The best years are to come, and you don't have to wait for long, it's round the corner.
But briefly.
Welcome back. Now, Eicher Motors is the next stock which is currently on our radar right now. The company's November sales came in muted but largely in line with street expectation. The pressure continues in the higher range of truck segment, while the lower range truck and bus sales have seen some improvement. To talk more about the numbers, we have with us Vinod Agarwal, MD and CEO of VECV. Mr. Agarwal, thank you very much for joining in. So while on a year-on-year basis, we are seeing a pickup in the overall numbers, month on month, there is a fall. So this month, we are at about 5,600 units. In October, it was 7,100. In September, it was 7,600. Are we seeing a slowdown per se? And what can you guide for the full year?
First of all, I think in the commercial vehicle sales, it is never seen month on month. Because November is traditionally a lower month. October is festive month, numbers are higher. September is also first half end, so therefore numbers are high. So November, if you compare with the previous year November, then the situation is not so bad. So therefore, I will not take it as a sign of that the industry is not growing or it is going to go down based on the month-on-month figures.
Okay.
You have to look at year-on-year. And year-on-year, as far as we are concerned, we have grown by 7.5% in November, even though our sales were just around 5,500, but we have grown by 7.5% as compared to November of last year. Similarly, yes, yeah.
Go ahead.
No, I was saying that even the industry also, year on year, for the month of November, the industry was flat. It was almost same numbers as were there for the last year. But then, of course, that was driven more by the buses growth. the growth in buses in November was 33% as compared to previous year November. Whereas there has been a drop of around 4-5% in heavy duty trucks, similarly around 4-5% in light and medium duty trucks. So therefore the figures are driven by growth in bus sales. So based on that, year on year also, the industry overall 3.5 ton and above, that is down by around 2%, and whereas we have grown by 2.6%.
Okay. So looking at your numbers then on a year-to-date basis, right, about 7 months in, your total sales are up 2.6%. Domestic sales are only up 1.3%. So is this low single-digit 1, 2, 3% kind of growth expected for the full year, FY25? And what is the expectation for the industry, your company and industry?
As far as this overall performance of industry is concerned, I think this year the industry has not done as well as was expected in the beginning. Of course, there are reasons. One is that the traction in the infrastructure investments, that has been slow to take off. And now, of course, we are expecting that there is going to be a lot of action in balance 4 months, because if we have to catch up with the expenditure on infrastructure projects for the Government of India targets, I think a lot of action will be there in these balance 4 months. And similarly, you will see more buying happening based on that. So therefore, balance 4 months, we are expecting that there will be better growth in the industry. However, at the same time, last year also these 4 months were very strong. So therefore, maybe there will be a little bit marginal growth only, because last year also base was high. So overall, you will see this year will be a sort of a, you can say, a stagnant year, or full year will be very, very marginal growth. And as far as we are concerned, we will do slightly better than the industry only, because first 8 months also we have done better, and balance 4 months also we expect to do better. However, at the same time, the growth figures, you also have to see with respect to the tonnage growth. Even though the numbers growth doesn't look so well, but if you convert it into metric tons, based on the capacity of trucks that are sold, I think there is a good growth in the metric tons, because a lot of migration has happened to the higher tonnage trucks. Like, for example, a lot of migration has happened to tractors, which is 55 ton. Similarly, in the light and medium duty trucks, a lot of migration has happened to 18 ton trucks, which is medium duty trucks.
Right.
So on that migration, the overall tonnage growth is there, even though numbers growth look to be very, very stagnant.
Okay, we get that point. Mr. Agrawal, hold on to that thought. There are important flashes at the bottom of our screen. The announcement with respect to Mr. Devendra Fadnavis being the Chief Minister for Maharashtra is expected very shortly, because his name has been proposed in BJP core committee meet today. So we will be expecting that announcement shortly, and that is an important update, something that the Maharashtra government has been talking about for a while after the election results, and there had been no clarity on who would this Chief Minister of the state be. But it looks like today there could be a final name that could come out, and it looks like it is Mr. Devendra Fadnavis would be named as the Maharashtra CM shortly. So we'll keep updating you on these important political updates as far as Maharashtra is concerned. Mr. Agrawal, let me come back to you. You spoke about you'll grow faster than the industry, and second half is when you're seeing that capex which would come back. The last 4 months would be strong as well. So Ashok Leyland in the Q2 call had mentioned that they're expecting an industry growth in the second half to be around 6 to 7% and full year to be around 0 to 3%. Will you do better than these numbers? That is what you mean. And what would the overall CV outlook be for the business?
Hopefully, if you look at our track record, we would like to maintain the same track record. So first 8 months, we have done better than the industry. Industry had dropped by 2%. We have grown by 2.6%. So I think we would like to keep the same track.
So you will do better than the 6 to 7% industry growth that your peers are expecting?
6 to 7% looks to be difficult, as I mentioned a little while back. It will not. The growth will be less.
No, I meant in the second half, Mr. Agrawal, not for the full year, but for the second half.
Second half also, like first 2 months has been very muted numbers. First 2 months, October and November. So, and as I mentioned last year also, the 4 months, the base was high. Like for example, heavy duty trucks. Last year, December to March, it was 100,000 units sale. So this year, these 4 months, I'm expecting it will be almost similar, maybe 100,000 or 105,000, which will be just around 3-4% growth. Or similarly, the light and medium duty trucks. Last year also it was around 40,000 units sale in December to March. So this year also it should be around similar. So therefore, last year also these 4 months were strong. So I am expecting it will not be a very high.
But so far this year, you've grown 2.6%, while the industry has degrown 2%. Yes. So there has been good outperformance. So why is buses doing so well? You've spoken about it in the past as well, and that momentum in buses continues. So what's driving it, and will it extend, say, to FY26 too?
Buses sale are driven by, first of all, the schools. Schools are buying more and more, and tier 2, tier 3 cities, there are more buying of school buses. Similarly, the staffing segment has come back because work from home is almost gone now. So a lot of people are now started coming back to offices, and a lot of buses sales are happening for staffing segment. Then intercity segment, the coaches sale, that also has come back. The state transport undertakings have started buying. That's why you see very heavy growth in the bigger buses. Heavy duty buses, the growth is much higher. It is almost 50% growth. When we say growth of overall YTD growth of 22% in buses, out of that the heavy duty trucks growth, buses growth is around 40 to 50%. That is based on the STUI. So these are the factors which are driving the buses growth, and I am expecting next year also will be good growth in buses, because you will also have some more buying in the electric buses. So therefore, buses segment will remain strong.
This 22% is for the industry or for you? The expectation of...
I was talking of the industry. We have in buses, we have grown by around 12%.
Okay. All right. Take that point, Mr. Agrawal. Thank you so much for joining in with all those details and the outlook going forward, most importantly for the industry and for the company as well. With that, we'll do one thing. We'll slip into a break. When we return, we'll discuss market technicals with Mitesh Thakkar and also talk about his top trading bets.
For 20 years, it has been India's most coveted stage for business leadership. The benchmark of unparalleled excellence.
We have to dream big and even bigger for India.
An accolade that celebrates character, integrity, and decisive action.
You just have to do your best.
Not identified by any single name, nor defined by a single achievement.
The best years are to come, and you don't have to wait for long, it's round the corner.
But redefined every year by visionaries who inspire and legends who lead. A journey that honors those who set the bar higher year after year. This is not just an award, it is a celebration of leadership in action. CNBC-TV18's 20th India Business Leader Awards. Every year by visionaries who inspire and legends who lead. A journey that honors those who set the bar higher year after year. This is not just an award, it is a celebration of leadership in action. CNBC-TV18's 20th India Business Leader Awards.
Presented by Standard Chartered in association with Reliance Industries Limited.
We committed more than 400 million to the retrofit program back in 2022. We also selected the seats back in 2022. There is a regulatory design, certification, and then subsequently manufacturing process that we need to go through. And that is where the supply chain constraint has hit us. Two different manufacturers came back to us and said, look, we just cannot deliver to the time frame that we had committed. There's going to be a delay. In one case, it was 6 months. In the other case, it was a little longer. So the program that actually should have physically started on the aircraft already will now not start until next year. The 787 aircraft, the first of the retrofit ship sets, will come in April. It'll take a few months to install and be certified. First aircraft hopefully in service by October next year. The 777s will have a refresh next year, but then go for a full retrofit starting in 2026.
So that 400 million that you spoke of, that was committed as far as the retrofit program was concerned. Do you believe you may need to now allocate more capital towards the retrofit exercise?
Well, the sad fact is yes. In one case, we've had to change seat vendors. This refresh I talk about, which is an interim step on the 777s, is something that we hadn't provisioned for originally and is only necessary because of the delay to the seat deliveries. But look, we've made this decision to invest more because we realise that this is, we can change everything else about the airline, and we nearly have changed everything else about the airline. But until we change the last 40 of our legacy wide-body aircraft to the standard that we expect of ourselves, let alone what customers expect of us, I think people will not consider the job complete, and we won't consider the job complete.
So how much more are you going to have to spend over and above the 400 million which have already been committed?
Well, I won't say, but it's in the tens of millions.
We're going through a second phase of consolidation. The last one we saw was in the early 2000s or the mid 2000s. But what does that mean in terms of pricing power for airlines like yourself? And also on the back of the merger and the integration, what are the cost efficiencies that we're talking about? I mean, what does that realistically mean in terms of margin improvement for Air India?
Well, there's a whole regulatory and legal structure that you need to maintain if you're an independent organisation or an independent airline. There's duplication of many positions. There aren't the economies of scale that you can enjoy fully.
Welcome back. You're still tuned into Trading Hour, and one of the stocks that's on our radar today is Oberoi Realty. It's surging in trade. Nomura has initiated a buy on the stock with a target price of 2,500 rupees a share. The stock is right now at around 2,150. They expect solid pre-sales and cash generations, and they expect the company to be looking at aggressive business development. Now, do remember, last 2 years has not seen major launches come by, but now Nomura sees some addition to their business development pipeline, because of which pre-sales could witness a 40% CAGR over FY24, FY27, with 50% plus embedded EBITDA margins as well on some of these projects, because there would be high-end luxury projects. The cumulative hotel and annuity revenue could record a 35% CAGR over the next 3 financial years, and they're also expecting cash flows to improve, so around 3,000 to 4,000 crore per annum until FY27. This is before the new business development or annuity asset investments come through. So this is all before investments, the cash flows. Of course, there could be some deduction from these levels, but these are good numbers that Nomura expects from Oberoi Realty, and that's why that's big surge that we are seeing on the stock right now. With that, let's move on and talk about technicals of the market. Mitesh Thakkar is joining us just for that. Mitesh, what's the next important level to watch out for in the Nifty and your individual picks?
Yeah. So I think getting past 24,500 to me is a positive. I think we should now sustain about 24,460, and very likely that in the next few days with some volatility, we'll head towards 24,770, 24,800 zone. So the idea is to stay positive until we see the Nifty break below levels of 24,460.
And stocks?
So on the individual stock side, I think the PSU banking lot is looking good, as well as the IT pack. So I've picked up a TCS, which is a buy with a stop at 43.45. Look for targets of 44.50, and Canara Bank, which I would recommend buying with a stop below 104.5, targets of 111.
Okay, all right. Thank you, Mitesh, for joining in as always and taking us through your technical picks. With that, we'll slip into a short break. When we come back, we'll discuss market fundamentals with Devang Mehta from Spark Private Wealth Management. Stay tuned to that.
I think you've got 25 years and beyond, and it really is a galaxy of stars out there. I mean, CNBC has put some heavy weight out there, and I think the galaxy of stars that are arrived, I think it's a great list from India and beyond. So congratulations for that.
A 300 aircraft airline. So clearly there are efficiencies, and we've realised some, and there are more that we wish to realise. And that was part of the motivation for putting the businesses together. But I wouldn't want to give you particular figures. With respect to pricing power, I'd refer you to an article that was literally just released by IATA, which traces the real, how airfares have tracked relative to the CPI and relative to oil prices, not just in India, but in many countries. And what you will find that if you index back to 2015 or 2019, airfares have gone down. And not only gone down, but gone down dramatically relative to inflation and relative to oil price. So I think just the competitive dynamic of aviation and the market will mean that airfares will remain affordable, and of course we want to fill our planes. So there's always going to be a benefit to the customer in that respect.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC TV18 and CNBC-TV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust, giving unparalleled access to global thoughtfully.
Welcome back. You're still tuned into Trading Hour on CNBC TV18, where markets, they continue to trade higher. 90 points of an uptick that we're looking at for the Nifty right now. So steady at the 24,550 mark. What's doing well, of course, is the Bank Nifty. That is the one that is supporting the gains that we're seeing on the benchmark as well. In the broader markets, we have some of these names, the likes of Honasa, which after that big fall is making a comeback. We've seen that the promoter group has bought some stake, Varun Alagh that is. On the back of that, that stock is higher by around 10%. The Graphite India is higher. We do have some of these names like UCO Bank, Central Bank of India, IOB, some of these PSU banks which are doing really well in trade. And let's talk about Aurobindo Pharma as well. That company is name tagged in news related to Auro Infra and Kakinada Seaports. They are doing, there is a clarification which has come in, and they say that they're in no way connected to these two names, and that's why there is a recovery on the stock after this clarification that has come by from Aurobindo Pharma as well. We'll of course get more details on this one. But for now, let's get some some fundamental conversations going on the markets. Devang Mehta from Spark Private Wealth Management is joining us now. Devang, good morning. Thank you so much for joining in. Well, that's the next question. Now that the first half of earnings disappointment is over, what's the outlook for the second half? You're almost done with most of the quarter three, data as well. What have the conversations suggested that you have had with corporates?
Good morning, Sonal. Thanks for having me on the show. Pleasure to always be on CNBC TV18. I think very clearly we are past that earnings. There was a narrative of earnings downgrade. There was a narrative that money would flow towards US risk assets after the New World Order, after Trump was elected. Also, I think the thing that money would flow towards China, that has also sort of waned away. It just happened for a brief while, and then again, I think after this correction, and that correction which was seen because of one, the earnings
not meeting expectations. And second, of course, we saw the GDP print, right, which was more a lag indicator for the markets. Yes, you are absolutely right that I think people have now again sort of shunned that in the next couple of quarters, the earnings are bound to come. We know that around 7 trillion rupees would be spent by the government in the next 4-5 months to again spur the infrastructure and the capex that was slowed down because of the general elections, the state elections, and many such events in the last 7-8 months. I think the next 4 months we would see a lot of capex, private capex also coming back to the fore. I think the marriage season, the wedding season also, what we are talking about is again going to see a lot of consumption coming back. And I think if you hear a little bit of green shoots from the rural economy is where a lot of people are also talking about, a lot of corporates which we met are saying that yes, that there was a time of the last quarter was a bit of a hibernation. But I think I was very encouraged by the commentaries, the positive commentaries of companies who are in the capex universe, or companies who are talking about growth plans as well. And I think everything seems to be on track. So my sense is after this 10% correction, we have seen 5% rise again. I think this is good time again to go back to the drawing table, look at the sectors and themes, revisit them. And again, I think it's good time. Maybe probably there will be a couple of months of time correction more, but I think no problems emerge as a larger type of problems for the market.
But is there a risk that this expected recovery in the second half of the year doesn't play out? So much of the heavy lifting in terms of an expected pickup in capex, green shoots in rural consumption. What if it doesn't play out? Is there a risk to that? What have you heard from the corporates?
So, of course, there are always two parts to it. And yeah, you can probably look at the optimistic part of it and say that the recovery will happen. But yes, the question is absolutely on the right track, that if it does not happen, I think, yes, then maybe a bit of valuation correction, a bit of time correction. Yes, earnings, probably we talk about 8-9% type of single digit earnings growth for this year. Which is for FY26, there is still expectation of 18-19%. That may be pruned to around say 14-15 mid-teens type of an earning expectation, which may lead to a 4-5% correction more on the market side. But yes, it may again see. I think the times that everything and anything would do well to be over. The time of easy money seem to be over. Now one has to be very, very focused on the quality of earnings, on the quality of growth, and most importantly on companies which are generating free cash flows. That is, I think, going to be a paramount importance, that everything and anything would not do well. You have to be very, very picky and choosy about what theme and what businesses particularly you are going to buy. So yes, there is the risk, probably a downside risk, if the recovery on the rural side as well as the recovery on the capex side does not happen.
So what are you looking at buying right now, Devang? We have seen that fall, but there's been a recovery from the lower levels as well. Any segments that you think are still looking reasonable?
I think, yes, most of our segments, which we have been very positive about in the last 1.5-2 years, we're not seeing any correction because of the market momentum we saw. But yes, I would not say thankfully, but we saw some correction in some of the segments. We have been extremely bullish on something in power automation, power ancillaries, a company like Hitachi Energy, which I talked about on your show, I think at least 3 or 4 times. We like the business after seeing a correction of 20-25%. The company is right now at an EPS of 22 rupees, and the EPS is going to go to around 180 rupees in the next 3 years. This is one theme we are extremely positive on. We are very positive on engineering/manufacturing type of themes, stamping and lamination type of companies, engineering companies. ER&D has been one of the segments that we have been bullish on. EMS is another segment. I think these are segments which are linked to manufacturing, segments which are linked to FDI, segments which are linked to PLI. I think this will do very well. Another business which immediately comes to mind is something called port infrastructure, right? Port end-to-end logistics. We have been positive on a company called JSW Infra since some time, and I think this is a company which is sort of growing at 35% on the revenue side in the last 3 years, 34-35% EBITDA growth. It's being looking at inorganic acquisitions, doing a lot of end-to-end logistic work. I think these are the segments of the economy where if the GDP growth is going to bounce back, if capex is going to come from either government or private, I think these segments will do well. Apart from it, yes, you can't forget the consumption universe, which has gone through a bit of correction, a bit of, I think, discretionary consumption, travel, themes like travel and tours, themes like aviation. I think these are segments one should look at. We are not buying all these themes, but yes, some of those are on the radar as well.
Okay. Any clear avoids for you for the next 6 months?
I think the sectors somehow where there would be a lot of global dependence. I would not say it's a complete avoid, but on a case-to-case basis, if there is a lot of dependence on China, for example, we don't know the trajectory of China, whether it is again going to slow down or there is going to be some recovery coming back. So sectors like metals, where somebody has made a huge sort of money, can probably be on a little bit of sideline. Again, I'm saying that 6 months to 1 year, there can be cyclical recovery. But for a 3-5 year horizon, you can avoid sectors which have huge global dependence. And something which is domestic centric will find more favor in our type of portfolios.
Okay, all right. Take that point, Devang. Thank you so much for joining in today with those with the fundamental outlook on markets and specific sectors as well. That's the word coming in from Spark Private Wealth Management. Time for a short break now. When we come back, we'll get you more on the markets on the other side. From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18. Empowering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai.
Fully.
Welcome back. There is news coming in on Bajaj Auto where they've cut the price of Freedom 125, which is their CNG motorcycle. They had launched it just a couple of months back in July and August. So within 5 months of launch, there is a price cut in Freedom 125. The entry-level variant price has been cut by 5,000 rupees, while the price of the mid-level variant has been cut by up to 10,000 rupees. Now, this is what UBS has picked up, and their take on this is that since launch, Bajaj has dispatched nearly 80,000 units to dealers, while the Vahan retails stand at just 34,000 units, which explains the price cut. They go on to say that even select Pulsar variants have seen price cuts post-Diwali, and therefore there is a potential downside risk to the street estimates. So Bajaj Auto is now reacting to the news flow. The stock is down close to about 1%. Just in case you tune in, Bajaj Auto has cut the price of Freedom 125, which is the first CNG motorbike, by 5,000 rupees for the entry-level variant and up to 10,000 rupees for the mid variant price. And this has been launched this has been cut within just 5 months of launch. Now, according to UBS, the reason for this perhaps could be that the company has dispatched 80,000 units to dealers, while the Vahan retail stands at about 34,000 units. So maybe, because dealers are sitting with inventory, that's the reason why they're looking at some price cuts. But even post-Diwali, prices of Pulsar, select Pulsar, not all of them, select Pulsar variants have also been cut. So not good news for those who were suggesting that the uptick, the little bit of a recovery that we saw in Diwali is lasting post the festive period as well. The stock continues to fall and now is down more than about 1%. Just take a look at if some of the other auto companies are also seeing a bit of a reaction to this development. Hero MotoCorp will come up for you on your screen. Hero MotoCorp is also down 1%. There you have. Hero MotoCorp is also down at the day's low, and there was a bit of a fall once this news flow came out. This is what UBS has picked up. Just yesterday, 2 days back, yesterday or day before, we had a chat with Bajaj Auto post the November sales numbers, and they said that the festive season started off slow, but then it picked up, and by the end of it, it was pretty solid. But now, maybe this is an indicator of either excess inventory or perhaps the demand being not as per what they were anticipating. Well, that's Bajaj Auto and the latest news flow there. For the markets, it's 24,530 on the Nifty, 70 points higher, a third of a percentage point gain on the benchmark indices. We're going to take your leave on Trading Hour from the entire team. Thank you for watching.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Hello, I'm Surabhi Upadhyay, and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18. For 20 years, it has been India's most coveted stage for business leadership. The benchmark of unparalleled excellence.
We have to dream big and even bigger for India.
An accolade that celebrates character, integrity, and decisive action.
You just have to do your best.
Not identified by any single name, nor defined by a single achievement.
The best years are to come, and you don't have to wait for long, it's round the corner.
But redefined every year by visionaries who inspire and legends who lead. A journey that honors those who set the bar higher year after year. This is not just an award, it is a celebration of leadership in action. CNBC TV18's 20th India Business Leader Awards.
Presented by Standard Chartered in association with Reliance Industries Limited.
Committed more than 400 million to the retrofit program back in 2022. We also selected the seats back in 2022. There is a regulatory design, certification, and then subsequently manufacturing process that we need to go through. And that is where the supply chain constraint has hit us. Two different manufacturers came back to us and said, look, we just cannot deliver to the time frame that we had committed. There's going to be a delay.
Stocks continue their climb, pushing a tad higher with mid-caps leading the way. Realty, IT and capital goods are the bright spots, while auto and healthcare are the big laggards.
The Swiggy team is optimistic about the growth and profitability trajectory, hoping to turn profitable at the consolidated level by December 2025 and the quick commerce business by the second quarter of FY27 following the expansion of its dark store network.
India's Defence Ministry clears purchases worth 21,772 crore rupees to strengthen the Navy and coastal security ahead of Navy Day. The 5 orders spell fresh orders for local vendors like L&T, HAL, Bharat Electronics and Garden Reach shipbuilders.
The SEBI has asked Traffic Sol ITES Technologies, which had raised about 45 crore via an IPO, to refund the proceeds to investors following a plaint on likely diversion of funds. SEBI found misstatements in financials and uncovered efforts to conceal material facts. Good afternoon, you're watching us here on Halftime Report. As you can see at the top of our screens, a bit of a dip in the markets from the day's high, but importantly, we have the news at the bottom of your screen, something that we all have been waiting for as well. Devendra Fadnavis elected as the legislative leader of BJP. Our sister channel had earlier said that maybe shortly there would be some notification coming by on Devendra Fadnavis. Tomorrow's the swearing in as well. The question is, does this pave the path for him being the Maharashtra Chief Minister? Seems like yes, it is. He has been named the Maharashtra Chief Minister. And the impasse on that ends. We have clarity now. Devendra Fadnavis comes back as the Chief Minister of Maharashtra.
It's a full circle for him, right? He became Chief Minister in 2014 and then for a very brief period in between as well where he failed to prove majority, and then now again when Deputy Chief Minister under Eknath Shinde for a period of 2.5 years, and now he's been elected as the legislative party leader of the BJP. Remember, the BJP won 132 seats in the recently concluded assembly elections and paving the way for the Mahayuti to form the government. Now the process is here that the Mahayuti will now head towards the governor's residence to also stake claim for the government formation. Remember, the swearing-in ceremony takes place tomorrow evening. So it'll be interesting to see an official announcement for Devendra Fadnavis to be elected as the next Chief Minister of Maharashtra for the third time.
But, you know, while that news was going on, and that news is extremely important, we'll try and get some more on this as well, some more visuals as well, and some more details on how, you know, it goes on from here. What we know for now is that he has been elected as the legislative leader of the BJP and in all likelihood the next Chief Minister of Maharashtra itself. The market's actually taken a bit of a tumble right now. The Nifty is down about 75 points from the day's high. It has seen a bit of a knock, and you know, the day's high on the Nifty closer to that 24,550 mark. From there itself, we've seen about 175 points shaved off. It's the Nifty Bank which is lower, and alongside that we have a lot of the other stocks which are lower as well. So pull up something like the IT index. Seems like a bit of a basket sell that we've seen on the index itself, because across the board we've seen decline. So pull up HDFC Bank, that too, which was a contributor on the way up, has seen some selling. Reliance, that's dragged the index, was an underperformer today as well, but currently at the low point of trade for that stock too. But in this market, we have a stock which is doing well, that's Oberoi Realty, after Nomura has initiated a buy call on the stock. Sonal joins in with the details.
Well, yes, Nomura is very bullish on Oberoi Realty. They have initiated coverage on the stock with a target price of 2,500 rupees a share. They say they expect a solid pre-sales for the company and solid cash generation as well. Now, remember, last 2 years didn't see the impact of launches, but now they expect it to come by. And the company is poised for aggressive business development going forward. That is something that Nomura likes. They are expecting a pre-sales CAGR of around 40% over the next 3 fiscal, that is from FY24 to FY27, with 50% embedded EBITDA margins. So these are super luxury projects where EBITDA margins would be higher as well for the company. The cumulative hotel and annuity revenue will record a 35% CAGR over the same time period, that is FY24 to FY27, and they expect cash flows of around 3,000 to 4,000 crore rupees. This is before any new business development or annuity asset investments. So yes, the number could be lower if we net it out, but generally the cash flows from new projects could be higher to the tune of 3,000 to 4,000 crore rupees. So good cash flows and good growth in their pre-sales, something that Nomura likes about Oberoi Realty.
Showing up in the stock price as well, right? 4% higher in our market that is otherwise taken a bit of a tumble from higher levels. But Bajaj Auto as well, now down to the lowest point of the day, 1.7% lower, and has slipped from the highs after UBS came out with a note regarding a price cut for its Freedom 125. We'll get you more on that, but we'll take a short break for now. More on the markets and specific stocks on the other side. Stay tuned.
Months, and the other cases were a little longer. So the program that actually should have physically started on the aircraft already will now not start until next year. The 787 aircraft, the first of the retrofit ship sets, will come in April. It'll take a few months to install and be certified. First aircraft hopefully in service by October next year. The 777s will have a refresh next year, but then go for a full retrofit starting in 2026.
So that 400 million that you spoke of, that was committed as far as the retrofit program was concerned. Do you believe you may need to now allocate more capital towards the retrofit exercise?
Well, the sad fact is yes. In one case, we've had to change seat vendors. This refresh I talk about, which is an interim step on the 777s, is something that we hadn't provisioned for originally and is only necessary because of the delay to the seat deliveries. But look, we've made this decision to invest more because we realise that this is, we can change everything else about the airline, and we nearly have changed everything else about the airline. But until we change the last 40 of our legacy wide-body aircraft to the standard that we expect of ourselves, let alone what customers expect of us, I think people will not consider the job complete, and we won't consider the job complete.
So how much more are you going to have to spend over and above the 400 million which have already been committed?
Well, I won't say, but it's in the tens of millions.
We going through a second phase of consolidation. The last one we saw was in the early 2000s or the mid 2000s. But what does that mean in terms of pricing power for airlines like yourself? And also on the back of the merger and the integration, what are the cost efficiencies that we're talking about? I mean, what does that realistically mean in terms of margin improvement for Air India?
Well, there's a whole regulatory and legal structure that you need to maintain if you're an independent organisation or an independent airline. There's duplication of many positions. There aren't the economies of scale that you can enjoy when you're a 300 aircraft airline. So clearly there are efficiencies, and we've realised some, and there are more that we wish to realise. And that was part of the motivation for putting the businesses together. But I wouldn't want to give you particular figures. With respect to pricing power, I'd refer you to an article that was literally just released by IATA, which traces the how airfares have tracked relative to the CPI and relative to oil prices, not just in India but in many countries. And what you will find that if you index back to 2015 or 2019, airfares have gone down. And not only gone down, but gone down dramatically relative to inflation and relative to oil price. So I think just the competitive dynamic of aviation and the market will mean that airfares will remain affordable, and of course we want to fill our planes.
Fully.
Welcome back. The stock of the moment right now is Swiggy. Even as the markets recovered from that interim big decline that we had seen, the Nifty is now sitting with a cut of about 50 odd points, holding on to around that 24,400 mark. Swiggy is on our radar largely because a lot of the details for the company's second quarter numbers came in post markets, including the conference call takeaways. And we did speak with the management this morning as well. The stock opened 5% higher, thereafter settled about 2.5% in terms of gains. The food delivery business showed an EBITDA growth of 2 times in the last 1 year, year-on-year in the quarter, and margins quarter-on-quarter as well increased from 0.9% to 1.6%. Bolt doing extremely well for them. In the Instamart business, which has been the revenue growth driver, the orders increased by about 21% quarter-on-quarter. Orders per dark store actually increased by 10% quarter-on-quarter as well. The companies announced that they will double their dark store count by March 2025, taking it effectively above that 1,000 stores by March 2025 itself. And not just that, they're also increasing the space per dark store by about 30-35% odd. So in effect, the growth would be a lot higher than just 2x is what one's understanding of that is. The company targets profitability by December 2025, which is Q3 of FY26 on an operational consolidated total basis. Food delivery business can grow between 18 to 22% is what they've spoken of in the GOV, and they are expecting steady improvement towards 3% EBITDA margin for the food business itself. So we will keep an eye out on that one. The EBITDA for the second quarter, QCOM, comes by in a break-even by the second quarter of FY27. Just before we, toss to what the management had to say to us this morning, it has come by the news. It's official. Devendra Fadnavis will take oath as the Maharashtra Chief Minister tomorrow, has been officially named as the Chief Ministerial candidate for Maharashtra. So there it is. The impasse ends right now. We have clarity. The next Chief Minister for Maharashtra will be Devendra Fadnavis. But let's move back to our conversation with the management of Swiggy, and this is what they had to say to us early this morning.
Factor of how well our efforts at creating new use cases as well as creating affordability work. We have a series of new use case related work that we're pushing out to the consumers. The latest being Bolt, the 10-minute food delivery that is expected to create some new consumptions. There's things that we've been doing on affordability, but we'll continue to build on it. I think how well we do these few things are going to really dictate whether it'll be the lower end or the higher end, I guess.
There is, operating leverage that is already existing in the business. If you look at over our last 4 quarters, we've added 90 basis points in, EBITDA just on scale, right? And you should expect a similar kind of number to play out even with the rising scale. And there are opportunities on the take rate side. Our advertising business, we have talked about it, having another, 100 basis points of leverage existing still, and some of the cost equations, especially on the subscription program, which we have successfully run over time. We do expect leverage to also come through the overall affordability initiative that we have launched. So you should assume that it's a good trajectory, and steady state is not very far away. So if you look at, 3 out of the top 10 or top 7 cities are already profitable. And within these cities, 75% of the stores which are, say, 12 months and above are already profitable. So as we kind of guide for accelerated store expansion, there is going to be the certain investment that will be baked in for the overall neutrality at the corporate level to come by in 4 quarters from now. In terms of the overall cash balance with the IPO proceeds, we have a little over 8,800 crores in bank. So it's a very, very strong balance sheet. As we have said in the past, a lot of this is actually defensive capital to ensure that we continue to have the firepower to continue to remain invested in the category growth. Food delivery business is already generating positive free cash flow and will continue to accrete to the corporate treasury. So overall, we feel a very good place from our balance sheet strengths point of view, and we don't expect to raise new capital in the near future.
All right, no new capital in the near future, have decent cash in their books, no strangers to competition as well. We'll take a short break. On the other side, market technicals with Ajit Mishra of Religare Broking.
Many congratulations on completing 25 years in the industry.
Going to be a benefit to the customer in that respect.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself.
You're watching us here on Halftime Report. Now, typically what happens with intraday basket sales is that they, recover with as much ferocity as which we saw the selling. So if you just take a look at the intraday chart of the Nifty, you would see that, there was this big dip here, and then thereafter we've seen a recovery. The Nifty is now mildly in the green as we speak. What's doing well for the index are the other, indices. So if you look at the market now, you have the Nifty mildly in the green, the Nifty Bank up 0.2%, the Midcap index doing a shade better. What is it that is supporting the Nifty in today's trading session? We have HDFC Bank, which is up 1.5%, and that explains the outperformance of the Nifty Bank. And the Nifty IT index too is up about 0.5%. On the other hand, draggers include the likes of Reliance, etc. But it's travel and tourism, that is a theme which is doing well as we move into December, the holiday end of the year, so to say. You have Yatra, Park Hotels, Wonderla, all of them buzzing around in today's trading session as well. With the Nifty now being back in the green, important part would be 24,500. Those put writers are still fairly active, telling you that the Nifty support at around that 24,350, 24,400 is extremely crucial to track. On the way up, however, it is important to cross the 24,550 mark. Why do I say that? Because today as well, we saw a bit of a sell-off at those levels. So 24,550 call writers, pretty active for a premium of 67 rupees. On the way up, 24,600 call writers too, active for a premium of 50 rupees, telling you above 24,600 to 24,650, there is some resistance zone, and that ties in with the technical levels as well. So if you look at the Nifty 50-day moving average and the 100-day moving average, they're placed between 24,625 and 24,700 as well. A lot of stocks on our radar. A bunch of them actually are from the new F&O entrants lists, which are seeing some fresh long positions. Jindal Stainless, Sona, BLW. We have Zomato as well, which is gaining up around 2%.
New F&O entrants seeing fresh long positions. The bulls will be happy for that. But the Nifty, as we speak, is back in the green, and Ajit Mishra of Religare Broking is joining us now to give us a chart check on the markets. Ajit, good afternoon. Thank you so much for joining in. Now we crossed that one important hurdle for the Nifty, which was 24,350. Now we are heading to 24,500. How important or how big of a resistance is that for the index? What should one do now until then? And in case if the Nifty crosses 24,500, what happens then? And couple that up with your stock specific recommendations as well for the afternoon.
Yeah, good afternoon. So yes, in the last trading session, we could finally manage to surpass the hurdle at 24,350 after spending almost more than a week. The challenging part is that IT and banking, they are the one basically who is doing all the liftings, while others are sitting on the sidelines as of now. Today also we are seeing that the intraday dip is largely because of some profit taking in the IT heavyweights. So that may result in further consolidation like on every uptick. But eventually, yes, we are eyeing 24,700 to 800 to be tested shortly. So one should be focusing on buy on dips until Nifty breaks 24,300 decisively. And among the sectors, still we feel that IT and banking is likely to play a critical role in maintaining this overall positive momentum. Coming to the stock-specific ideas, based on the overall sectoral front view, I feel that banking is something that one should still focus on, and Federal Bank within the banking basket is something which is outperforming. The stock has witnessed a fresh breakout after almost 4 months of consolidation, and we are eyeing roughly around 220 levels in the near future. So one can go long in Federal Bank at current levels with 207 as a stop loss. Other stock that we like from the pharma space, which is outperforming within this space, is Divi's Lab. So almost around the record highs, we've seen almost 2-3 months of consolidation. And now it looks set for the next leg of the up move. So here also one can look to go long at current levels with 64.60 as a target, with stop loss at 61.50.
Interesting. Divi's Laboratories and Federal Bank, the two recommendations from Ajit, and he also advises buying the dip on the Nifty until 24,300. Ajit, thank you so much for sparing time joining us this afternoon with your views on the index and on specific stocks as well. Time for a short break. Up next, we'll be joined by the management of TBO Tech to discuss their growth outlook going forward. Stay tuned.
India's longest running show on startups and entrepreneurship. celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC TV18.
Celebrating 25 years of CNBC TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC TV18. For 20 years, it has been India's most coveted stage for business leadership. The benchmark of unparalleled excellence.
We have to dream big and even bigger for India.
An accolade that celebrates character, integrity, and decisive action.
You just have to do your best.
Not identified by any single name, nor defined by a single achievement.
The best years are to come, and you don't have to wait for long, it's round the corner.
But redefined every year by visionaries who inspire and legends who lead. A journey that honors those who set the bar higher year after year. This is not just an award, it is a celebration of leadership in action. CNBC TV18's 20th India Business Leader Awards.
All indices in the green right now. We have TBO Tech. The stock is on our radar. We had around 6% equity that, was traded on the exchanges yesterday. Ankush Nijhawan and Gaurav Bhatnagar, the co-founders and the joint managing directors of the company, now join us to discuss the future plans of the company, but also the large trade, which was interesting because Augusta TBO sold about 3.75% stake. TBO Korea Holdings sold about 2% stake, with buyers being the likes of ICICI Pru MF, SBI MF, and a couple of other domestic mutual funds as well. Thanks a lot, Gaurav and Ankush, for joining in. Let's go across to Gaurav first. Gaurav, the sellers, Augusta TBO and TBO Korea, while they're not classified as promoters, the letters TBO being on it tells you that there are some relations. So just wanted to understand what the rationale for them selling was, and they still hold a fair amount of stake in the company. Are they looking at paring their stake further, or is this for now?
No, so they are private equity partners.
Okay.
The naming of the firm TBO Korea is slightly unfortunate, and I think it happened because of some historical reasons. Both Afirma and TBO Korea are actually part of Afirma Capital. They've been on a cap table since 2018. So they've been in the company for 6 years, but absolutely no relationship with the promoter. They're not classified as promoters. They have nothing to do with us. It just happened that Standard Chartered Private Equity sold their private equity business to Afirma Capital back in 2018. So when that restructuring happened, it just so happened that the equity went into a company called TBO Korea, but there's absolutely no relation with the promoters.
All right, but they still have together, as of September, they had around 27% stake. This is Augusta TBO and TBO Korea. Even if you take into account the 6% that they've sold yesterday, they still have 21% stake. So could you, tell us what their plan with this stake is? Because this 21% is substantial. If they decide to, offload it, it can cause a bit of a, overhang on the stock, so to say.
I think they're down to about 15% now. They were 21% before what they sold yesterday. They're around 15% right now. Look, I think they're private equity players. They invested in the company quite a few years ago. And, they are sitting, they had come in at a significantly lower valuation back then. So we are not surprised that they chose to do this block yesterday. What we are happy about is how the market has reacted to it. Even though the trade happened about 7-8% discount to the previously traded price, we were pretty much back. I think we were down 1 or 2%, and today we can see that we are, actually up since yesterday. So I think the bigger point is that when this trade has happened, this is the first, large trade that has happened in the stock since listing. The good thing for us is that, the market has reacted positively to it, and we haven't seen a significant pressure on our price because of this large trade. So, on the whole, I think it is positive outcome for everyone, both the incoming shareholders and the selling shareholder.
Gaurav, Ankush, firstly, good afternoon. Thank you for joining in. That still doesn't answer the question, right? Have you guys had any conversations about whether your private equity partners intend to sell any further stake going forward? Has there been any communication in that regard?
No, not at all. Not at all. So there has been no communication, on certain things. I think it's important to remain arm's length. And this is one of those things. We absolutely understand they are public market investors, just like everybody else. So they have right, they have right and ability to create liquidity at a short notice.
What's also interesting is that, as of September, they were 27%. And in this quarter itself, they've offloaded about 12% stake. Basis what you've just told us, they still hold around 15%. So it will be very interesting to see whether that continues into the next few quarters as well or not. But let's move on to the second part of this. That supply was very well absorbed, partly because of the strong domestic liquidity that we're seeing, because a lot of the participants are domestic funds. And secondly, also because the underlying macro trend of travel and tourism doing well in India itself. Now, the third quarter typically is strong for B2C travel companies, not as much for companies like yours, which are more B2B. So you have other quarters which are doing well. So let's go across to Ankush now. Ankush, what are the expectations of growth in this year so far? The first half, we've seen, GTV is growing at 19%, revenue is growing at 25%. The second half, what's your outlook?
So, first of all, thank you for inviting us today. From an outlook perspective for this quarter, I think for us, we are still kind of, making sure that we continue our growth on the GTV. But what we are witnessing, there are some margins pressures, which are happening, especially on the air business. But Q3 typically is generally it's a decent quarter. I wouldn't say it's the worst out of the four because of New Year and Christmas season. So I think we should be continuing at the same trends. But yes, we do have facing some margin pressures when it comes to the airline business at the moment. But yes, we are winning and kind of still growing on our GTV, both for our air and hotel business.
Since you said it's not the worst, could you quantify how has the quarter been? And since you spoke of margin pressures as well, could you quantify that? What kind of pressure are you facing on your margins and why?
No, it's basically, I think, some competitive pressure, I would say, because I think some of our peers are obviously losing share probably, and that's why some kind of discounting is happening. But I think that's part of, business. We've seen this enough in the last many years. So nothing abnormal. And I'm sure as we finish this year, we will be coming back to the margins, what we have, which we have decided, and planning as we move forward.
So have you guys taken any price cuts as well in line with your competitors?
No, they're discounting, not price cuts. So, sometimes...
So what does this do to your overall margins? I mean, the first half, you've managed to hold on to around that 18.5% mark. In the second quarter, at least, what happens to your margins by the end of this year? How should we look at it?
I think we should
sorry, go ahead, Ankush.
No, I think we should be maintaining in the same lines, Mangalam, because, our hotel business is a very significant piece of our business, where kind of the mix is something which you see has changed over time, which will obviously ensure that we continue to deliver the margins which we have done in the H1. Yeah.
Right. The more interesting part is that I was looking at your presentation. You've spoken about artificial intelligence, technology, the use of all of that in lead generation, pricing, and all of the businesses that you undertake right now. I just wanted to understand if you guys have put any number to the efficiencies in lead generation and scale that you can get through all of this, because the world is talking about these things. You're incorporating this in your business model. How much of an efficiency can you see in terms of maybe increased revenue or better margins?
So very early days, though we are doing extensive work around incorporating AI in various parts of our business, but very early days for us to quantify it in terms of what metrics are going to move by how much. All we can say is, look, the early trends are very positive, right? We talked about it in our last earnings call as well. We are running some voice bot automation solutions, which are showing pretty promising results over a few thousand hours of calling. But there is always, there is some loss in translation from doing a pilot to actually rolling out into production. So I'll not hazard a number on this, but needless to say, there is going to be investment in building out solutions around AI. And for sure, in the long term, it will lead to both efficiency and improvement in operations as well.
Final question, gentlemen. It's a two-part question, actually. Now, what is your airline to hotel mix likely to be going forward? Currently being 25-75. Do you see any change to that? That's part one. And part two of my question is, besides hotels and airlines, is there any other segment that you are targeting when it comes to growth going forward?
So, look, our hotels business is growing faster than our airline business. And hence, when Ankush was talking about, even though there is margin pressure on the airline business, the saliency is quite low. So overall, we do believe that hopefully from an EBITDA margin perspective, we'll maintain, margins. It's again, the saliency between air and hotel changes a little bit basis the seasonality as well. But yes, the hotels will continue to grow faster. So you will see the share of pie continue to increase. And sorry, what was your second question?
The second question was that besides hotels and airlines, is there any other segment that you are targeting for growth going forward?
Yes, so we are starting to build out our ancillary businesses as well, especially around experiences, transfers and car rentals. You would see, the travel agents really get involved in complex itineraries, right? The whole thesis is that when you go to a travel agent, you're really looking to book a complex itinerary. It's not just a flight and a hotel. So in that line, we are also starting to build out our businesses around transfer products, car rental products and sightseeing products. Very small today, so may not be making meaningful contributions, but growing at a fast pace.
Do you have an aspiration here? How much should it be as a part of your overall revenue? Because, I'm just looking at the spending of a person on travel. Majority of that is airline ticket and hotels. The rest is internal transfers, etc. So would your revenue mix reflect the spend mix of the consumer?
It will, but this is a big bet we are taking. And I think that's the change in consumer behavior that's happening. Over the next 5-7 years, you will see that experiences will dominate your travel spend. Right, you will start thinking of, in fact, it's already happening. You think of what experience I want to, do, and then you decide where to travel to. And that's the bet we are taking. So, but it's a 5-7 year horizon. I don't think you will see very meaningful differences or contribution coming in the next 2 or 3 quarters.
All right, Ankush, Gaurav, thank you so much for joining in, sparing time and taking us through the road ahead for your company. Wish you good luck for the second half of the year as well. The management of TBO Tech on the road ahead for the company. Time for a short break. Up next, we get you a sneak peek of the process breakdown of India's chocolate market in our special offering, Nuts and Bolts.
CNBC has done a wonderful job in upgrading the whole business environment and spreading the information, and I think that they should continue this for the next 75 years. The equity culture, CNBC would be one of the biggest contributors to that. I know most people have CNBC running throughout the day or at least during the lunchtime. So that's a very, very big factor for the equity culture and therefore for the whole economy as well.
by Standard Chartered in association with Reliance Industries Limited.
Committed more than 400 million to the retrofit program back in 2022. We also selected the seats back in 2022. There is a regulatory design, certification, and then subsequently manufacturing process that we need to go through. And that is where the supply chain constraint has hit us. Two different manufacturers came back to us and said, look, we just cannot deliver to the time frame that we had committed. There's going to be a delay. In one case it was 6 months, in the other case it was a little longer. So the program that actually should have physically started on the aircraft already will now not start until next year. The 787 aircraft, the first of the retrofit ship sets, will come in April. It'll take a few months to install and be certified. First aircraft hopefully in service by October next year. The 777s will have a refresh next year, but then go for a full retrofit starting in 2026.
So that 400 million that you spoke of, that was committed as far as the retrofit program was concerned. Do you believe you may need to now allocate more capital towards the retrofit exercise?
Well, the sad fact is yes. In one case, we've had to change seat vendors. This refresh I talk about, which is an interim step on the 777s, is something that we hadn't provisioned for originally and is only necessary because of the delay to the seat deliveries. But look, we've made this decision to invest more because we realise that this is, we can change everything else about the airline, and we nearly have changed everything else about the airline. But until we change the last 40 of our legacy wide-body aircraft to the standard that we expect of ourselves, let alone what customers expect of us, I think people will not consider the job complete, and we won't consider the job complete.
So how much more are you going to have to spend over and above the 400 million which have already been committed?
Well, I won't say, but it's in the tens of millions.
We're going through a second phase of consolidation. The last one we saw was in the early 2000s or the mid 2000s. But you know, what does that mean in terms of pricing power for airlines like yourself? And also on the back of the merger and the integration, what are the cost efficiencies that we're talking about? I mean, what does that realistically mean in terms of margin improvement for Air India?
Well, there's a whole regulatory and legal structure that you'd need to maintain if you're an independent organisation or an independent airline. There's duplication of many positions. There aren't the economies of scale that you can enjoy when you're a 300 aircraft airline. So clearly there are efficiencies, and we've realised some, and there are more that we wish to realise. That was part of the motivation for putting the businesses together. But I wouldn't want to give you particular figures. With respect to pricing power, I'd refer you to an article that was literally just released by IATA, which traces how airfares have tracked relative to the CPI and relative to oil prices, not just in India, but in many countries. And what you will find that if you index back to 2015 or 2019, airfares have gone down. And not only gone down, but gone down dramatically relative to inflation and relative to oil price. So I think just the competitive dynamic of aviation and the market will mean that airfares will remain affordable.
Fully.
Welcome back. On to our special offering, nuts and bolts. Do you know how dairy milk is made and delivered? Well, Mangalam and our crew has taken the trouble to get you a sneak peek of the process breakdown of India's chocolate market, from tracking the production to packaging and delivery of Mondelez's dairy milk. Take a look.
Let's go. The Mondelez India Sri City factory, inaugurated in 2016, is a state-of-the-art facility. It's the largest manufacturing plant for Cadbury dairy milk in the AMEA region, responsible for fulfilling 3/4 of India's Cadbury dairy milk demand. It's got an annual capacity of 100,000 tons, or a staggering 300 crore dairy milk bars. The Sri City plant is where tradition meets technology. You might imagine it as something straight out of Charlie and the Chocolate Factory, but it's more like a cutting-edge pharmaceutical plant with every detail focused on safety and hygiene. Why is it? Because, well, it's food that we all love to consume, kids more especially. They have a machine which actually packages nearly 1,000 candy bars per minute, and they have 16 of those. So think of 16,000 5 rupee Cadbury dairy milks per minute being packaged in a plant like this.
As per the latest report, chocolate confectionery market in India is worth nearly 20,000 crores, growing at a near 11% CAGR over the next 5 years, making it almost 32,500 crores by 2028. In that, Mondelez India is the leading player with a retail value share of nearly 58%. Cadbury Dairy Milk alone accounts for nearly a third of the chocolate market in India. 31.5% was its latest share.
If I had to break down, a bar of chocolate, a 10 rupee bar of chocolate, what would be the key cost elements on that?
Probably somewhere around 50 to 60% of it is the cost of some of these ingredients with the packaging material, and also then you also have the other costs like, a lot of other costs that you would have in terms of people and transportation and all.
But this was just one part of the challenge. As we saw, this was fairly controlled. The real challenge for chocolate in India happens outside the factory, from the factory to the store. Let's go there. So I thought, why not go down the entire rabbit hole of finding out the supply chain of how chocolate business works in India.
Once the product leaves the factory, there are 3 distinct legs to it. The first leg being the transportation from the factory to the depot and from the depot to the distributor. We have refrigerated trucks, all fitted with IoT devices where we monitor the temperature and ensure that the temperature is being controlled and we kind of get the stocks to the distributor point. At the distributor point also, every single distributor of ours, it's mandatory for them to have a cold room. Right? And in the cold room is where all the chocolates are stored and unloaded into. That comes the second leg. The second leg is from the distributor to the retail. So what each and every one of our distributor has, and we keep ensuring that they kind of replenish them and invest more into it, are called shipper bags, which are insulated and have got and are Cadbury specific bags that are given to them, and they use those to kind of transport the stock to the retail. And the last leg comes in from the retail to the shopper or the consumer, right? So once the stock is received by the retailer, then it's kept in the visi-coolers that are given to maintain the quality.
To maintain temperature at stores, we usually see branded refrigerators of different sizes, typically called visi-coolers. And this is where the real advantage lies. Not every store has the space to have all brands visi-coolers. It's the wide reach and penetration of these visi-coolers that gives an edge to Mondelez over others who are looking to gain market share in this category.
We invest in those visi-coolers to drive the quality at the retail outlet. Not only that, we have almost a good 450 service engineers on the field who ensure that every time a visi-cooler complaint is lodged, within 24 hours they go and kind of solve for the complaint and the issues rectified at any given point in time. Ballpark, we reach more than 2 million stores directly, and we overall, it depends upon which urban versus rural. In the urban India, at least, we should be close to around 40% plus in terms of our visi-coolers that are there.
Chocolate being an impulse category, more than 90% is still sold offline. But increasingly, quick commerce is a fast-growing channel that is catering to the digital impulse.
And that's how your chocolate comes to you. So the next time you go to a store or perhaps order one of these chocolate bars on your quick commerce app, you would realize that it takes a lot more for it to come to you in a way that it does not melt and is still very delicious. So that's basically the nuts and bolts of the chocolate business, and we learned it from the leaders, Mondelez.
The steep fall in the second quarter GDP growth to 5.4% makes the RBI policy very crucial, especially because inflation too is high at 6.2% in October, with food inflation at over 10%. Can the RBI MPC prioritize growth over inflation? Can they cut rates, or will they choose to cut the cash reserve ratio or CRR? And what can both these actions mean for your investments, loans and your businesses? Catch the RBI policy live straight from Mint Street, along with instant analysis from bankers, economists, policymakers and veteran investors. RBI monetary policy.
Our planes. So there's always going to be a benefit to the customer in that respect.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs.
Welcome back, and joining us on the show now is Peter McGuire. He's CEO at Exim Australia. Peter, hi, good to have you. And overnight has been good for the crude oil prices, more than 2% of gains coming in. And then there are, of course, conversations about those sanctions on Iran entities and vessels. How sustainable do you see the crude oil prices? I mean, this year is into negative, and do you think much would change for the month of December to make any gains here at all?
Well, good afternoon, Manisha. I think a couple of things. First off, if you look at volatility over the last month, it's really cratered. So there's the first part across the crude complex compared to other markets, of course. So I think that probably I wouldn't be surprised to maybe a little bit of a leg up from here, maybe another couple of % over the rest of the week. you've got to take on board also what's happening as far as OPEC and the whole fabric, geopolitical concerns running into the storyline. So, yeah, maybe a couple more percent and keep an eye on it over the next, week or so. There's going to be good opportunity for trading, I'm sure.
Yes, absolutely. Peter, I was reading various reports because most of the Wall Street banks and brokerages have until now come in with their forecast for 2025. And 60 is what Citi says, Bank of America says 65. Then you have 73 from JP Morgan. The most bullish really comes in from UBS at 80. Otherwise, it really is between 60 to 75 for most of them. But 60 to 80 in that sense also is a big range. What's your sense? Where do you see Brent averaging for the next year?
Well, I think you've got to be in that band, Manisha, and the other side of it, of course, is the President Trump initiative as far as drill, baby, drill. So what that's going to do to the market and what's it going to do naturally to OPEC and to other, big producers. So it's unless you see something dramatic happen from a geopolitical stance or weather outages, that's where you might see a further spike to the upside. But President Trump has said that he wants cheaper energy prices. I'm not sure what Saudis or the Russia contingent are going to think of that, or naturally the other OPEC members, but he's producing 22 million barrels a day. He wants to take that up to possibly 25 to 30 million barrels a day. So, yeah, it's going to be a very, again, interesting first half of 25, Manisha.
Oh, well, absolutely. So how do you see the second year then? Would you break it into two halves, first and the second one? When do you see prices settle? And if it is the first half that we're talking about, then where do you see the crude prices going?
Well, I think I've got to be in that same bandwidth as far as 60 to 80. I know it's a fairly wide spread, but, as well as I do, you can really see it oscillate between those 2 points. And you've got to give it, we've got to see what happens and how quickly President Trump turns the engine on. And yes, I think the year's got to be very much a first half and a second half. And do we see geopolitical concerns re-enter the market? What happens as far as Russia and Ukraine? The Israeli situation and naturally in the fabric across the Middle East and Iran. So yeah, it's going to be, I think price volatility will come back, and I think it's going to be again a dynamic market to be a part of.
Well, yes. Peter, almost every of my commodity guests, I'm asking this question on what is their top commodity that they would want to recommend for 2025. And until now, it is silver, which is topping the list. What's your sense?
I think it's got to be silver, Manisha. I've said that, a long time. The reason is I think it's undervalued. If you look at the gold to silver ratio, it's been crushed. Underinvestment for the last 2 decades across the whole complex. And I remember the storyline, what Jim Rogers used to say 20 years ago to me, silver, it's going to be it's time to shine will come. And I think it's time to shine will certainly be next year. And we're not very far from the start of it. And so when we look at it at the moment, you're running at that $31.50, $31 sort of market. I think it's going to really take off. And I think the overall theme is going to be strong demand. Naturally, gold will lead the way, but silver will start to narrow from that, the silver ratio to gold.
What also is your sense on the OPEC meeting that comes in tomorrow? I mean, is it factored in that they would perhaps postpone output cuts?
I think so. I think it's going to be probably the best, everything that I'm reading and all the analysts are saying 3 months. It could well happen, Manisha, a delay in output by 3 months. The story quite simply is they'll probably extend it out. And I was a little bit taken back. If it was going to be anything dramatic, it would have happened last Sunday. That's when the meeting was, and they pushed it back to Thursday. So I'll just wait for it to drop, and I feel as though that'll be the storyline. OPEC Plus, they'll firm up a deal, and let's see how it rolls.
Before we let you go, Peter, are you any interested in the India-Australia test match? Pink ball test is starting on 6th. My directors are really, really interested in that.
Manisha, of course I am, and we had to give you guys a start. We gave you the first start, and we let you win that 1-0, and now it's catch-up. So that's how we're going to run. I don't know. If you guys played the same way you played in Perth, then we haven't got a chance.
Oh, we'd be cheering for that for sure, Peter. We hope to play the way we did in Perth. But thanks a lot for joining in and sparing time to talk about the outlook for the commodities going forward. Manisha, thanks a lot for joining in as well. All eyes on the OPEC meet tomorrow. But that's a wrap on this edition of Halftime Report. Business Lunch takes the action forward.
From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai.
Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen. We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18. For 20 years, it has been India's most coveted stage for business leadership. The benchmark of unparalleled excellence.
We have to dream big and even bigger for India.
An accolade that celebrates character, integrity and decisive action.
You just have to do your best.
Not identified by any single name, nor defined by a single achievement.
The best years are to come and you don't have to wait for long, it's round the corner.
But redefined every year by visionaries who inspire and legends who lead. A journey that honors those who set the bar higher year after year. This is not just an award, it is a celebration of
Stocks continue their climb, pushing a bit higher, with mid-caps leading the way. Realty, IT and cap goods are the bright spots, while auto and healthcare drag. The Swiggy team is optimistic about the growth and the profitability trajectory, hoping to turn profitable at the consolidated level by Q3 FY26 and in the quick commerce business by Q2 FY27, following the expansion of its dark store networks. India's Defence Ministry clears purchase worth around 21,772 crores to strengthen the Navy and coastal security ahead of Navy Day. The 5 orders spell fresh orders for local vendors like L&T, Hindustan Aeronautics, Bharat Electronics and Garden Reach shipbuilders. SEBI has asked Trafixol ITS Technologies, which had raised rupees 45 crores via IPO, to refund the process to investors following the plaint on the likely diversion of the funds. SEBI found misstatements in the financials and uncovered efforts to conceal material facts. The suspense ends as the BJP endorses the candidature of Devendra Fadnavis as Maharashtra's next chief minister. The oath-taking ceremony will take place tomorrow at Azad Maidan in Mumbai. Hello, good afternoon. You've tuned into Business Lunch on CNBC-TV18 and I'm Vinny Motiwala. A quick look at what the market is doing today. Not much of an up move, but surely the Nifty at one point of time was seeing good moves and as of now also holding on to some bit of a gain of 0.1% in a trade. Nifty Bank too holding on to gains of 0.7%, and do not forget that Nifty Bank yesterday was outperforming, today also is outperforming the benchmark indices. So Nifty Bank surely is something that is supporting the up move today even in the markets. Mid and small cap, let's look at that because there also we're seeing some bit of an outperformance coming in. Nifty mid cap up 0.7%, small cap up 0.5%. So yes, that also outperformance seems like continues today as well. Yesterday's trading session also we had seen that up move. Top sectoral gainers, what's doing well today? We have Nifty Realty that's holding on to good gains. PSU banks are holding on to good gains in trade as well. While on the flip side, we do have Nifty Energy as well as some of these Nifty Auto names which are under pressure, and that is why the drag coming in these two sectors. Some of the stocks that are buzzing, let's look at that. We have HDFC Life and SBI Life. So these life insurance names, let's pull that up because it seems like that is holding on to some bit of a strong gain. HDFC Life up 2%, SBI Life up almost 1%. And other than that, we have HEG and Graphite. I'm highlighting these two stocks today, HEG, Graphite, because yesterday also they were buzzing in trade. They were seeing a sharp uptick. Today also HEG and Graphite, both of them are managing to see strong gains. HEG holding on to 13% gain as of now. But yes, that's how we're seeing the market setup looking like. Nifty today also is managing to hold on to a green. So yes, not much of a worry coming in on that front. But the top story that we should be talking about this afternoon is the suspense over the next Maharashtra chief minister. That has ended as BJP party has named Devendra Fadnavis for the job. Now this comes after days after the deadlock between the alliance partners was there. The finance minister Nirmala Sitharaman, who was one of the central observers for each Maharashtra legislature party's meeting, congratulated Devendra Fadnavis. She has said and doubled the engine that the double engine government will take Maharashtra forward and the government will do whatever it takes to develop Maharashtra. Let's go across to Santya, who's going to get us the latest on this update. Santya.
So the deadlock over the next Chief Minister of Maharashtra is finally resolved. Devendra Fadnavis is all set to return as the Chief Minister of Maharashtra. This is going to be a Fadnavis 3.0. Remember, his first term as the Chief Minister of Maharashtra was from 2014 to 2019. In 2019, when he sworn in for the second time, it was barely for 72 hours. After that, in July 2022, he sworn in as the Deputy Chief Minister of Maharashtra. So this is going to be his third term. Today in its party meeting, the MLAs of BJP, they selected him, they chose him as the legislative leader of BJP. Now today, all the leaders of Mahayuti Alliance will go to the governor and stake claim to the government. In fact, the core committee meeting, core committee BJP will also hold a meeting. And as I said, Devendra Fadnavis is all set to return as the Chief Minister of Maharashtra. The swearing-in ceremony is going to take place tomorrow. It's going to be a grand ceremony. Beneficiaries of welfare scheme Ladki Bahin will be invited. They will be gifted saris. Along with that, the invitation card for the swearing-in ceremony have already been distributed. There were two sets. One where there was no mention of the name of the CM. And the second set has the mention of Devendra Fadnavis' name as the CM. So the second set, the party has started distributing the second set of cards today. The swearing-in ceremony will be attended by the Prime Minister.
Okay, Santya, thank you so much for the latest update coming in there. Now keeping an eye out on the swearing-in ceremony. But moving on to some more stock-specific news, Swiggy reported its Q2 earnings and the company's food delivery business performance has improved, while quick commerce revenue has seen a rise as well. Now, EBITDA loss has also narrowed on a year-on-year basis. Management tells CNBC-TV18 that they are optimistic about the growth and profitability trajectory. Listen in.
Factor of how well our efforts at creating new use cases as well as creating affordability work. We have a series of new use case related work that we're pushing out to the consumers. The latest being Bolt, the 10-minute food delivery that is expected to create some new consumptions. There's things that we've been doing on affordability, but we'll continue to build on it. I think how well we do these few things are going to really dictate whether it'll be the lower end or the higher end, I guess.
There is, operating leverage that is already existing in the business. If you look at over our last 4 quarters, we've added 90 basis points in, EBITDA just on scale, right? And you should expect a similar kind of number to play out even with the rising scale. And there are opportunities on the take rate side, our advertising business. We have talked about it, having another, 100 basis points of leverage existing still, and some of the cost equations, especially on the subscription program, which we have successfully run over time. We do expect leverage to also come through the overall affordability initiative that we have launched. So you should assume that it's a good trajectory and steady state is not very far away. So if you look at 3 out of the top 7 cities are already profitable, and within these cities, 75% of the stores which are say 12 months and above are already profitable. So as we kind of guide for accelerated store expansion, there is going to be the certain investment that will be baked in for the overall neutrality at the corporate level to come by in 4 quarters from now. In terms of the overall cash balance with the IPO proceeds, we have a little over 8,800 crores in bank. So it's a very, very strong balance sheet. As we have said in the past, a lot of this is actually defensive capital to ensure that we continue to have the firepower to continue to remain invested in the category growth. Food delivery business is already generating positive free cash flow and will continue to accrete to the corporate treasury. So overall, we feel a very good place from our balance sheet strengths point of view, and we don't expect to raise new capital in the near future.
Now let's shift focus from Swiggy to PNB Housing. That's the stock that is buzzing in trade today as well, holding on to gains of more than 2% as of now. Now, this is coming and after it lays out the target of 1 lakh crore rupees in retail loans by FY27. The management also tells CNBC-TV18 that they expect net interest margins of 3.9 to 4% by FY27. Listen in to what more they had to say.
If we talk about NIM, we have guided 3.5%. We've been maintaining about 3.6 to 3.65 for last few quarters. I think for next few quarters, we'll be able to maintain NIM at the current level. And from next year onwards, NIM will start inching up. And in terms of ROA, currently we are at about 2.4 to 2.45. That is to a certain extent supported by the recovery of the write-off pool. I think standalone by FY27, NIM should be around 3.9 to 4-ish types. I think if we grow at about 17-18%, we'll get to 1 lakh crore by FY27. And by FY27, the split of 1 lakh crore retail book is going to be 15,000 crores affordable, 25,000 crores emerging, and the balance 60,000 crores would be prime. And in addition to this, we plan to restart corporate in the next couple of months. So book by FY27 will be about 7,000 to 8,000 crores.
And let's shift gears, and the Monetary Policy Committee meeting beginning today will decide on key policy rates against the backdrop of lower GDP print of 5.4%. Let's listen in to the expectations from CNBC-TV18's Monetary Policy Committee panel on rate cut expectations. What are they expecting there?
Let me take the vote first. The first question I'm going to ask my panel is, what will the Reserve Bank do to interest rates on December 6th. Sajid,
we have a cut in February, so a hold in December.
Hold, okay. Nothing, no action. Samiran, Soumya?
We are hold.
Okay, hold.
Very similar to Sajid, the hold now and cut in
okay.
February.
None of you want a cut. Sonal?
25 basis point repo rate cut.
Okay, there you are. We have the first cut. And Dr. Sen?
Hold.
Hold. Okay, so this is 4:1 in favor of holding. Let me take the CRR question. Your thoughts, your vote.
Some liquidity management for sure, not necessarily CRR, but some liquidity management.
I'm taking a no for CRR.
But some liquidity.
Okay.
Yeah.
Shaumya?
I would paraphrase it saying that CRR should be used as a counter-cyclical tool.
No or yes?
Some, not headline CRR, but yes on some specific products.
Okay. Yes, I'm going with a yes for Shaumya. Shaumiran?
I think it is likely, it's possible to do.
Okay, I'll take it as likely then, which is more a yes than a no. Sonal?
Yes, CRR cut.
Okay. Dr. Sen?
No.
Okay, on that note, we're going to slip into a very short break, but after the break, we'll get you more on news on updates, so don't go anywhere.
In action. CNBC-TV18's 20th India Business Leader Awards.
Presented by Standard Chartered in association with Reliance Industries Limited.
We committed more than 400 million to the retrofit program back in 2022. We also selected the seats back in 2022. There is a regulatory design, certification, and then subsequently manufacturing process that we need to go through. And that is where the supply chain constraint has hit us. Two different manufacturers came back to us and said, look, we just cannot deliver to the time frame that we had committed. There's going to be a delay. In one case, it was 6 months. In the other case, it was a little longer. So the program that actually should have physically started on the aircraft already will now not start until next year. The 787 aircraft, the first of the retrofit ship sets, will come in April. It'll take a few months to install and be certified. First aircraft hopefully in service by October next year. The 777s will have a refresh next year, but then go for a full retrofit starting in 2026.
So that 400 million that you spoke of, that was committed as far as the retrofit program was concerned. Do you believe you may need to now allocate more capital towards the retrofit exercise?
Well, the sad fact is yes. In one case, we've had to change seat vendors. This refresh I talk about, which is an interim step on the 777s, is something that we hadn't provisioned for originally and is only necessary because of the delay to the seat deliveries. But look, we've made this decision to invest more because we realise that this is, we can change everything else about the airline, and we nearly have changed everything else about the airline. But until we change the last 40 of our legacy wide-body aircraft to the standard that we expect of ourselves, let alone what customers expect of us, I think people will not consider the job complete, and we won't consider the job complete.
So how much more are you going to have to spend over and above the 400 million which have already been committed?
Well, I won't say, but it's in the tens of millions.
We're going through a second phase of consolidation. The last one we saw was in the early 2000s or the mid 2000s. But you know, what does that mean in terms of pricing power for airlines like yourself? And also on the back of the merger and the integration, what are the cost efficiencies that we're talking about? I mean, what does that realistically mean in terms of margin improvement for Air India?
Well, there's a whole regulatory and legal structure that you'd need to maintain if you're an independent organisation or an independent airline. There's duplication of many positions. There aren't the economies of scale that you can enjoy when you're a 300 aircraft airline. So clearly there are efficiencies, and we've realised some, and there are more that we wish to realise.
Fully.
Thanks for staying tuned into Business Lunch on CNBC-TV18. Now let's move on. And the SEBI has ordered Trafixol ITS Technologies to refund the proceeds to the investors following a complaint on the diversion of the funds a day prior to its listing. Now Yash is joining in with us to give us more details on this one. Yash?
Well, quite an unprecedented order of something that we've not heard from market regulator SEBI so far. What SEBI has done is that it has asked Trafixol a company which was expected to list on the SME exchanges to return all the money that it collected from its investors, which came through subscription for its IPO, back to those investors along with the interest accrued on that amount, in the days of the investigation. What had happened is that SEBI had kept the listing of this company, that is TrafficSol, which was supposed to happen on the SME exchange, in abeyance when it received a complaint right after the subscription period for the IPO ended and a day prior to the listing of the company. Of course, the listing was kept in abeyance. SEBI started its investigation. There were show cause notices which were sent on the complaint which the SEBI had received on this particular company. What was the complaint exactly? The complaint was that objects of the IPO included a purchase of software valued at about 17.5-18 crore from a vendor which had questionable financials, as well as a vendor which had failed to file its annual statements with the Ministry of Corporate Affairs also. As far as SEBI's investigation is concerned, it found three things as far as this transaction is concerned. First one, intent of diversion of funds through misleading objects of the issue. Second one, misstatement of financial statements disclosed in the prospectus of TrafficSol. Third one, concealment of material fact as far as the prospectus of the company is concerned. Because of which, finally, yesterday the order came through under which TrafficSol will have to return all the money it received through its IPO to its investors along with the interest accrued on it.
Okay, Yash, thank you so much for that update there. But, let's just focus on PI Industries as well. You can see the flashes at the bottom of your screens. We have Kumiai, who's revised its earnings for the last fiscal and no guidance revision for the next fiscal. The revision is for the period of November 1st, 2023 to 31st of October 2024. And this revision is in FY24 due to higher sales, weak yen rates. Do not forget, this is one of the major clients for PI Industries, and that is why we're seeing PI Industries in focus, recovered from the day's lowest point, up almost 0.5% in trade as of now. But that is PI Industries that we are focusing on. But let's move on, and surely exciting, something that is coming up tomorrow. Some news around the moviegoers, and for the moviegoers, Pushpa 2 will hit the screens tomorrow and has become the fastest movie to surpass 1 million tickets sold on Book My Show. December sees a healthy pipeline for movies. Shilpa is joining in with us with more details on that. Shilpa, seems like Pushpa jhukega nahi, and nor will the industry because of that.
Well, you're absolutely right there, Vinny. As the dialogue of the movie goes, right, in Pushpa ki main jhukega nahi, that seems to be, sort of the trend for the movie also. So this Allu Arjun and Rashmika Mandanna starer has become the fastest movie to surpass 1 million tickets that was sold on Book My Show. And PVR Inox also is already close to selling about 6 lakh tickets. The craze is such that the ticket prices have gone up to 1,800. That's how much people are willing to shell out to watch this. Now, once released, Elara Securities expects the gross, box office collection that to cross about 1,000 crore worldwide, with the Hindi version bringing in half of it. Now, remember, this is even though the star cast and the movie originally was made in Telugu. Now, remember the last two biggest films in India, those were Bahubali and KGF Chapter 2, and these saw gross collections of about 1,200 crores and about 1,000 crores each. And on the day one of the release, which is tomorrow, it is expected to bring in about 200 crores, and Pushpa 2 alone is expected to push up occupancy levels for movie theaters to up to 40% in December. This is as against a regular average occupancy that we see of about 25%. Now, this is a huge positive for the industry, especially for players like PVR Inox, which have been suffering with a poor content pipeline in Q2 and in October. Whilst things have started picking up in November with movies like Singham Returns, Bhool Bhulaiya 3, December could be the month of recovery, with movies other than Pushpa 2 like Baby John and Sitare Zameen Par also coming in. Now, overall, the occupancy levels are expected to reach about 30% for the third quarter on the back of this. And, the Hindi gross collections, in fact, is likely to be at about 1,700 crores for the industry. In fact, the next year also looks quite positive, with release of some big Hollywood movies also coming in, like Captain America, like Jurassic World. And there are also some Hindi movies also that are expected, like Raja Sahib, amongst others. But for this quarter, Vinny, what we really need to see is whether Pushpa 2 will be the flower or the fire for the showbiz. We'll know that tomorrow, if you know what I mean.
Absolutely. Flower or fire, that's what we're keeping an eye out on. Thanks so much for that, Shilpa. Interesting numbers coming in there. But on that note, we're going to slip into a very short break. And up next, we'll get you the latest on political updates that are coming in from South Korea. So stay tuned in for that.
Congratulations on 25 glorious years for CNBC-18. I think it's fantastic. It's not only 25 years young, but the kind of work which CNBC has been doing in the last 25 years has been phenomenal. Congratulations for the past and all the best for the future.
For putting the businesses together. But I wouldn't want to give you particular figures. With respect to pricing power, I'd refer you to an article that was literally just released by IATA, which traces the real, how airfares have tracked relative to the CPI and relative to oil prices, not just in India, but in many countries. And what you will find that if you index back to 2015 or 2019, airfares have gone down. And not only gone down, but gone down dramatically relative to inflation and relative to oil price. So I think just the competitive dynamic of aviation and the market will mean that airfares will remain affordable, and of course we want to fill our planes. So there's always going to be a benefit to the customer in that respect.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC TV18 and CNBC-TV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats.
Welcome back to Business Lunch on CNBC-TV18, and let's move on to some national updates. Now, the former Deputy Chief Minister of Punjab, Sukhbir Singh Badal, escaped an assassination attempt after a man carrying a pistol fired at him at the Golden Temple in Amritsar. The man was later overpowered by the people present on the spot. The Shiromani Akali Dal leader was serving punishment in the temple when the incident took place. Now, 62-year-old Badal, along with other leaders, are performing duties at the temple imposed by the Sikh highest temporal body for the party's misrule from 2007 to 2017. And some update on the international front, and coming in from South Korea after President Yoon Suk Yeol initiated a martial law in the country last night. The opposition lawmakers are putting together an impeachment bill to be passed in the parliament tomorrow to remove the president of the country, that's President Yoon, defense minister, as well as the interior minister on charges of treason. News trickling in from the country suggests that ministers in the cabinet are resigning, and demonstrations continue outside South Korea's National Assembly demanding the resignation of the president. Okay, and with that, we're absolutely out of time on this edition of Business Lunch on CNBC-TV18. Thank you so much for tuning in. Up next, you have Midcap Radar.
Business journalism. On air. Online. On social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC TV18, Mumbai.
Hello, I'm Surabhi Upadhyay, and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC TV18.
Celebrating 25 years of CNBC TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC TV18.
The markets are betting big on affordable housing. You look at the kind.
Well, good afternoon and welcome to Midcap Radar. I'm Vivek Iyer, and joining me a little later on the show today is Hormaz. Well, markets are off the day's lowest points. Remember, we did see a very sharp intraday sell-off as far as the Nifty was concerned, but it has been bought into, and markets once again are trading in the green. The broader end of the markets, when you're looking at the breadth over there, and especially the Nifty Bank, the breadth there is very, very strong. But we have quite a lot lined up on the show for you today. So let's start off with the top headlines. Market off day's low, but trades in a range with Midcap leading the way. Realty and PSU banks are the bright spots, while energy and autos drag. India's Defence Ministry clears purchases worth rupees 21,772 crore to strengthen the Navy and coastal security ahead of Navy Day. The 5 orders spell fresh orders for local vendors like L&T, Hindustan Aeronautics, Bharat Electronics and Garden Reach shipbuilders. Solar panel makers like Waaree Energies and Premier Energy surge in trade after US Commerce Department announces fresh round of duties for solar imports from Southeast Asia. Stocks gain nearly 1% each. Suzlon Energy gains after it banks a 302 megawatt wind project order from Jindal Renewables in Karnataka. This comes after a 400 megawatt captive wind project from Jindal Renewables last month. Oberoi Realty surges over 4% after Nomura initiates coverage with a buy rating on the stock with a target price of 2,500 rupees a share. The brokerage firm expects solid pre-sales and cash generation and says the company is poised for aggressive business development. Well, good afternoon. The market and the screen both look very strong at this point of time. The mid-cap index is up 0.8%, largely led, like yesterday, like the PSU banks. In fact, if you look at some of the PSU bank names, like Canara Bank, Bank of Baroda, all of these names are doing very, very well in the session today. Along with that, in the last half hour of trade, quite a lot of contrasting news flow coming in as far as PI Industries was concerned. That particular stock, if you could pull that up, seen quite a bit of a sharp up move and then immediately has cooled off, now up just around 1%. But Hormaz today, he's standing at the wall and he'll be joining me later as well. Hormaz, what are the top mid-cap movers in trade today?
Well, good-looking screen on the broader markets, even though the benchmark indices are a little choppy ahead of the RBI policy outcome on Friday. We start off with some of the gainers, and most of the gainers today within the broader markets are the new entrants to the F&O space, be it the like of PB Fintech, Paytm, Poonawalla FinCorp, all of them seeing gains between 3 to 4%. Suzlon too, after a partnership extension with Jindal Renewables, is up 3.5% in today's trading session. PSU banks continue to do well in today's trading session, but before that it was the defense names that have received a 21,700 crore boost. The shipbuilders and Bharat Dynamics seeing healthy gains in today's trading session, though most of the others have come off the highs of the day. Speaking of PSU banks, as Vivek highlighted just a few minutes ago, and it is these names that continue to shine. All constituents on the PSU bank index trading with gains today 6.5 to 9% higher. But more, mind you, most of these names have very little float in the market. Stocks that are doing well on the back of strong volumes in today's session, and HEG has now surged to a 6-year high after a 13% move today as well, carrying on from where it left off yesterday. Graphite India in parallel has surged another 7% as well. Phenolics Cables and Newgen Software too seeing volume-led gains in today's trading session. And lastly, some of the underperformers in today's trading session. Easy Trip continues to fall after trading ex-bonus, as does Kalyan Jewellers now, as is the low point of the day. Balrampur Chini and VIP Industries too now down to the lowest point, down 3% in today's trading session.
Thank you so much for that, Hormaz. Very few red on the screen, more green than red. But moving on, solar panel makers like Waaree Energies and Premier Energy surge in trade after US Commerce Department announces a fresh round of duties on solar import from Southeast Asia. Nikhil Ligania, Director and Senior Analyst at Bernstein, joins us now to decode this as well as talk about some of the recent listings as far as the renewable energy space are concerned that have done very well. Nikhil, first up, if you've had a chance to look at the news, we have been discussing off late about how Indian players especially are benefiting from various protections, from government, both within India and also some of the export players like USA who are benefiting from duties that have been put on Chinese origin players, especially in the module as well as panel places. How are you looking at the space, and do you feel that these duties can further aid the kind of growth that Indian companies have seen?
Sure. So if you look at the Indian solar cell and module players, especially the two specialized entities listed recently, Waaree and Premier, the benefits they are getting are twofold. So the second and third largest solar installations in the world are happening in US and India. And both these markets don't want modules made in China, which is making 90% of the modules globally. So that way, the domestic players are in a very sweet spot, given protective measures in India due to an ALMM list, which is there. So hence, you have to use Indian-made modules in utility-scale projects. And similarly, in the US, there have been duties imposed on imports from China. Now, the second part, which is the latest news which has come, is now regarding Southeast Asia. So what US is doing, so this is not a new development. This is a development which has been ongoing. This is a preliminary confirmation by the US Department of Commerce on putting anti-dumping duties up to 270% on solar cells made in Southeast Asia, specifically Vietnam, Malaysia, Thailand, and Cambodia. So what was happening is Chinese companies were setting up manufacturing facilities in those markets to ship product to address the US demand. Now this fresh round of duties, which is being in the process of being implemented, would be imposing up to 270% of duties on those Southeast Asian countries as well, specifically on solar cells and modules made of solar cells made in those markets.
Understood. So, Nikhil, currently two players, Wari as well as Premier, they are the ones that are doing very well. And, even post the recent listing, the stocks have given significant return. So, number one, you've also recently done a valuation exercise. So, valuations, where do they trade at currently? Are they justified? And do you see further scope as far as stock price movement is concerned?
Yeah. So, specifically on their valuation, we won't be able to comment. But on relative terms, if you see, from a capacity standpoint, let's take a Wari Energy for that part. The capacity is about 13 gigawatt and has a enterprise valuation of close to $10 billion. Similarly, if you look at Chinese companies like JA Solar, for example, they have substantially higher capacity, close to 90 gigawatts across module, cell, and even ingot wafer, which is the more capex intensive part. And their valuations are similar to what Wari Energy trades today. Now, in terms of our view on the sector going forward, so we think right now in a very sweet spot. But going forward, we see a supply glut happening in India as a lot of companies are entering this space. It's easy to enter. Doesn't take too long to set up a solar module or even a solar cell manufacturing plant. And the barriers to entry are low, right? So we see supply glut happening in India. And even in US, there's a government push to set up a US-based solar module manufacturing facilities, cell manufacturing facilities, which could hurt the US export story for these players as well in the medium to long term. So we think the next 1-2 years is a very sweet spot, but post that, there could be challenges both in domestic market and in the export market in this area.
Nikhil, good afternoon. Thank you for joining in. That is what I was coming to, right? There's this overhang that persists from the new administration that is coming in the US with regards to these solar companies. And the second part being that now that you mentioned that the competitive intensity is going to rise with the fact that barriers to entry are low. Now, when it comes to execution, right, it has to be earnings that should justify the valuations. With these recently listed companies, the way they have run up, do you think that in the middle of all of these, in this rising competition and this overhang that comes in from the new administration in the US as well, do you think that they will be able to deliver on these lofty expectations that the street has?
Again, so very hard to comment on valuations, but yeah, I think earnings near term for these companies should be good, right? Because of the protective measures both in India and US. Even, if you look at rooftop solar scheme which the government has, it is incentivizing domestically made, cells and modules. So they are in a sweet spot for the near term. So near term earnings should be good, but medium to long term is where we think the concerns are, and if that puts the valuation part in question.
Understood. Nikhil, so, we've covered solar cells, solar modules, in the solar value chain. But one particular company that we need to discuss is actually NTPC Green Energy. When the company listed at a market cap of close to 91,000 crore, even then, the street was of the opinion that for a company with a capacity of close to 3.3 gigawatt, the IPO was perfectly priced. After that, it's up almost over 30-35%. NTPC Green, we know you don't have formal coverage on the stock, but what is it that you can share, and does it have a right to win, like the company themselves have been saying?
No, fair. So firstly, on the fundamental part of NTPC Green's right to win in the renewable space, see, renewable is a relatively simple business to do, especially compared to thermal. The biggest differentiators one can have, number one is cost of debt, number two is land, and number three is receivables, and number four is transmission. right? So especially on cost of debt, NTPC Green does have an advantage against the private sector players. They borrow money at 150 basis points or even lower than the competitive private sector players. So in a sector which is 80% debt funded, 20% equity funded, that is a big advantage for a player to have. Second, even in terms of land, they have got a good land parcel. As per us, I think about 50,000 acres is what we could read from the DRHP. They have access and they have transmission with it as well. And lastly, on receivables as well, NTPC, what we understand is a tripartite agreement with RBI and state governments, which gives it a priority on getting receivables on time. So all of that fundamentally puts them in a strong place. But to your point, when on the valuation front, when we cover NTPC, the parent. In our SOTP, we ascribe a lower value than what it is trading at for the parent entity. Yeah. And we are positive on the parent, but the portion of value allocated to renewables in our valuation is lesser than what it's at.
Nikhil, I think most analysts will now have to go ahead and give a higher value as far as the parent is concerned. NTPC itself, given the fact that they have so much higher capacity, NTPC Green, still a nascent company as far as operational capacity is concerned. Nikhil, one last question. You track the entire space. What are your top picks? And as far as FY25 is concerned, or FY26 is concerned, what is it that you'll be looking for, especially in terms of announcements in the power space?
So top picks continue to be actually public sector entities in our coverage. So NTPC is one name we like still. And I think especially given the green valuation, it looks an easier option to buy right now, NTPC, the parent. The second space we like are the power sector lenders, PFC, REC. They are cyclical plays. They obviously carry higher risk than what an NTPC does. But we think they're a good cyclical play and leverage play into the power cycle. Strong loan book growth, low risk of NPAs. And reversal of provisions, which we expect to continue. So those are the names we like. Power Grid is another name we like, though the key catalyst we had been playing for was their capex guidance going up, so which has happened already. Hence, our preference would be more towards the first three names I mentioned. Now, coming to the second part of the question, what to look out for next year? See, more than policy, what we are all waiting for is power demand to sort of start picking up. Last 3 to 4 months have been slow. Largely due to monsoons and cooler temperatures. But power demand is, the fundamental driver of capex and growth in this sector. And our longer-term expectation is of a 1x real GDP kind of a power demand growth. And that's what we are waiting for coming in the coming months, December, Jan onwards. So other than that, on the policy front, not a lot, to be honest, at this point on our radar. I think the thermal announcements already of 80 gigawatts addition are in place, a transmission plan already out there. So nothing major we are waiting for on the policy front as of now.
All right, Nikhil, thank you so much for sparing time and joining us today to share your views on the sector as well as your top picks there, Nikhil Nigania of Bernstein. Well, time for a short break. Up next, we get you more on the markets. Deep Shah of SBI Securities joins us on the other side.
The TV, the news that you guys have been doing is the only news in India from a business point that at least I watch, and I think most people would agree with that. So I have to just congratulate you guys on 25 years and say you guys are doing a very good job.
We are stepping into our Silver Jubilee year, our 25th year. And we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18. For 20 years, it has been India's most coveted stage for business leadership. The benchmark of unparalleled excellence.
We have to dream big and even bigger for India.
An accolade that celebrates character, integrity, and decisive action.
You just have to do your best.
Not identified by any single name, nor defined by a single achievement.
The best years are to come, and you don't have to wait for long, it's round the corner.
But redefined every year by visionaries who inspire and legends who lead. A journey that honors those who set the bar higher year after year. This is not just an award, it is a celebration of leadership in action. CNBC TV18's 20th India Business Leader Awards.
Presented by Standard Chartered in association with Reliance Industries Limited.
Committed more than 400 million to the retrofit program back in 2022. We also selected the seats back in 2022. There is a regulatory design, certification, and then subsequently manufacturing process that we need to go through. And that is where the supply chain constraint has hit us. Two different manufacturers came back to us and said, look, we just cannot deliver to the time frame that we had committed. There's going to be a delay. In one case it was 6 months, in the other case it was a little longer. So the program that actually should have physically started on the aircraft already will now not start until next year. The 787 aircraft, the first of the retrofit ship sets, will come in April. It'll take a few months to install and be certified. First aircraft hopefully in service by October next year. The 777s will have a refresh next year, but then go for a full retrofit starting in 2026.
So that 400 million that you spoke of, that was committed as far as the retrofit program was concerned. Do you believe you may need to now allocate more capital towards the retrofit exercise?
Well, the sad fact is yes. In one case, we've had to change seat vendors. This refresh I talk about, which is an interim step on the 777s, is something that we hadn't provisioned for originally and is only necessary because of the delay to the seat deliveries. But look, we've made this decision to invest more because we realise that this is, we can change everything else about the airline, and we nearly have changed everything else about the airline. But until we change the last 40 of our legacy wide-body aircraft to the standard that we expect of ourselves, let alone what customers expect of us.
Back with us here on Midcap Radar, the PSU Bank Index continues to move to the highest point of the day now, 2% higher there. The Realty Index also continuing to grow from strength to strength, 600 points up on the Nifty Bank, and the Nifty is back above the levels of 24,500. Good time to get in a chart check as well. Sudeep Shah of SBI Securities is joining in. Sudeep, good afternoon. Thank you for joining in. Well, how important is sustaining above this 24,500 mark for the Nifty? Now, if it does so, what happens to that? And couple that up with your stock recommendations as well for the afternoon.
Yeah, good afternoon, Hormaz. That's the way Nifty has moved in the last 4 sessions. Post that Thursday's cut of 300-350 points and Nifty closing around 23,900. Since then, it is a higher top, higher bottom formation. That was just one day of that down move. Nifty closed that gap post election results of 23,900, and now what we have seen is Nifty has even taken out this 24,350, 24,400 resistance. So from here on, we feel that the markets are constructively placed, and from here, we feel that 24,300, 24,350 will now act as a strong support on the downside. And Nifty on the upside could inch up slowly and steadily up to 24,750, 24,850 zone. And this, the main reason behind this is that apart from the banking, which is showing exemplary strength, it is the IT index which is equally supportive, and even Reliance, although not moving today, but has seen a good rebound in the last few days. So we feel that all dips would now act as buying opportunities here, and 24,300, 24,350 zone will act as a strong support going from here. The stocks that we like, one is from the PSU space, PSU banking space, which is Bank of Baroda. Now here we have seen a decent breakout on a short-term chart, and in the last few sessions, a move about 255, which was the 200-day moving average, has confirmed this breakout. So we feel the stock is headed up to 273, 275 levels in the coming few weeks. And on the downside, the supports could be closer to 254, which can act as a stop loss also. The second stock which we like is Apollo Tyres. Now, here what we have seen is in the last several sessions, the stock was consolidating between 500 and 520 on the upside. And today we have seen a breakout with volume. So the long-term charts were quite nicely placed. It was just the short-term volatility, which now I feel it's out of the way, and there's a consolidation breakout with volumes. So this could be added on dips and can be bought with a stop loss at 520. The targets are placed around 548 and 555 on the upside.
Okay, so Deep, so you've given us your view on the markets as well as your two calls, Apollo Tyres as well as Bank of Baroda, the ones you like. As you speak, the PSU banking bank, all of them today are doing very well. PNB, have a look at that particular name near the day's highest point, Bank of Baroda. In fact, the entire pack and even some of the private sector banks, especially the mid-cap names, are doing quite well. But we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
The steep fall in the second quarter GDP growth to 5.4% makes the RBI policy very crucial, especially because inflation too is high at 6.2% in October, with food inflation at over 10%. Can the RBI MPC prioritize growth over inflation? Can they cut rates, or will they choose to cut the cash reserve ratio or CRR? And what can both these actions mean for your investments, loans and your businesses? Catch the RBI policy live straight from Mint Street, along with instant analysis from bankers, economists, policymakers and veteran investors. RBI monetary policy
will not consider the job complete, and we won't consider the job complete.
So how much more are you going to have to spend over and above the 400 million which have already been committed?
Well, I won't say, but it's in the tens of millions.
We're going through a second phase of consolidation. The last one we saw was in the early 2000s or the mid 2000s. But what does that mean in terms of pricing power for airlines like yourself? And also on the back of the merger and the integration, what are the cost efficiencies that we're talking about? I mean, what does that realistically mean in terms of margin improvement for Air India?
Well, there's a whole regulatory and legal structure that you need to maintain if you're an independent organisation or an independent airline. There's duplication of many positions. There aren't the economies of scale that you can enjoy when you're a 300 aircraft airline. So clearly there are efficiencies, and we've realised some, and there are more that we wish to realise. That was part of the motivation for putting the businesses together. But I wouldn't want to give you particular figures. With respect to pricing power, I'd refer you to an article that was literally just released by IATA, which traces how airfares have tracked relative to the CPI and relative to oil prices, not just in India but in many countries. And what you will find that if you index back to 2015 or 2019, airfares have gone down. And not only gone down, but gone down dramatically relative to inflation and relative to oil price. So I think just the competitive dynamic of aviation and the market will mean that airfares will remain affordable, and of course we want to fill our planes. So there's always going to be a benefit to the customer in that respect.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary.
Back with us here on Midcap Radar, and the one segment that was possibly the sector of the morning that we've been speaking about is defense, and that is after the Defense Acquisition Council approved 5 capital acquisition proposals worth 21,772 crore rupees to augment defense preparedness. Now, ICICI Securities has written a note on who are the likely beneficiaries would be. Upasana has those details. Upasana.
Well, ICICI Securities says that after a marked slowdown in domestic ordering, DAC has approved AONs worth 21,800 crores. Now, it says which is one of the smaller ones in the recent times as it comes after a gap of 3 months, but it is comforting and positive for the sector. Now, AON so far approved in FY25 is 1.6 lakh crore as compared to 3.6 lakh in FY25, and we further expect orders of 12 Su Mk1 fighters and Pinaka in next 3 to 4 months. Now, ICICI Securities has laid out some of the key picks in the defense space, which are Solar Industries with a buy rating and a target price of 13,250 per share, Azad Engineering with a buy rating and a target price of 2,450 per share, and PTC Industries with a buy rating and target price of 20,070 per share. Now, coming to defense PSUs, it prefers BEL with a buy rating and a target price of 350. Now, coming to key stocks that will be in focus individually, first up, BEL will be in focus, and it is likely to benefit the most out of all because of the possible award of electronic warfare suit package and trickle-down benefit of 20 to 30% value of shipbuilding orders and overall of electronic components and FCS of T72 and T90 orders. Astra Microwave is another stock in focus. Even that will be in focus, and ICICI Securities has given a buy rating on this with a target price of 935 per share. It says that it is likely to benefit from electronic warfare suit package and particularly next generation radar warning receiver. All these orders will be in focus on back of the Astra Microwave. And lastly, coming to HAL, even HAL is likely to benefit because of the procurement of advanced light helicopters and engine overhaul of Su-30 Mk1 fighters. Now, in engine overhaul space, it expects PTC Industry also to benefit as companies executed MOU with HAL's Koraput facility for the supply of critical components. Hence, all these stocks remain in focus today on back of this.
Thank you so much for that, Upasana. So the Defense Acquisition Council going ahead and approving the AON, that is the acceptance of necessity. The entire defense pack is up in the session today. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.
Building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning
Hello, good afternoon. You've tuned into your stocks on CNBC TV18. I'm Vinny Motiwala in the Mumbai News Studio. Let's look at the market. In the last 1 hour, we've seen some bit of an uptick coming in for the Nifty. As of now, the Nifty is holding on to gains of 0.2% in trade. One point of time, it dipped into the red, and after that, again, making that comeback. Moving on towards that day's highest point right now, still a bit far away from that, but is at least trying to make that comeback to the day's highest point. 24,500 is what the Nifty is holding on to as of now. Nifty Bank, let's pull that up because that's been outperforming since the get-go today, and Nifty Bank is also holding on to good gains of almost 1.2% in trade as of now. 53,300 is the level that Nifty Bank is holding on to, while mid and small cap also we're seeing a bit of an outperformance coming in versus the benchmark indices today. So Nifty mid and small cap holding on to gains of almost 1% as well. So keep an eye on the market. See the recovery coming in from the day's lowest point in the second half of the day. So yes, that's going to be interesting how the next 1.5 hours is also going to be. But this is a show where we solve all your stock related queries. And to solve those queries for the experts that we have for today, we have Parthiv Shah, the director of Trackhome Stock Brokers, as well as Soni Patnaik, assistant VP derivatives at research at JM Financial Services, joining in with us this afternoon. Good afternoon, Soni, as well as Parthiv. Thank you so much as always for joining in with us. Parthiv, before we start, let's just talk about the markets, right? How are you looking at it? Today, as of now, 24,500 is what we're seeing. But what are the markets expected to do now? We have most of the events that are behind us. It's year end. What are we expecting?
A very good afternoon to you all. See, I think we are pretty upbeat on the setup of the market. One of the reasons being that we always attributed to the fact that, there's a lot of liquidity, especially the domestic liquidity, which is chasing the markets. But I think it was very at some point in time because of the elevated valuations. And now that the markets have corrected and in peak, it corrected by almost 11%. And I think now the correction is down by only 7% from the recent peak. I think goes to show that there is a lot of money chasing the markets at the lows. No doubt, I think some of the lagging indicators like the GDP data, the Q2 results, and even the Q1 results weren't great. And that is what I think the markets were factoring in. But going ahead, I think probably there is a lot of green shoot available in the market in terms of the corporate earnings improving from Q3, Q4 onwards, the government spending being up, especially after the key elections in Haryana and Maharashtra. So I think the market setup is looking good, except for the fact that come January, when President Trump takes over the reins, I think how his policies will create a lot of global level volatility. But that is where I think investors will get a good chance and good entry points to enter in the market. But otherwise, I think with the long horizon, the setup looks good for the markets.
Okay, long horizon setup looks good for the market. But on that note, let's get started. The first query for today, we have Harban Singh, who's writing to us from Mumbai, holding 3,500 shares of Subex at a price of 47 rupees per share. Currently, it's trading at 24 rupees per share. So the viewer is making a loss, wants to know whether to hold or book his losses. Soni, good afternoon. What is the word on Subex? In the last 1 year, the stock has seen a fall of 24%. Should the viewer just book out their losses and maybe switch to something else now?
Hi, good afternoon, Vinny. Thank you for having me on your show. As I think Subex, if we look at a slightly medium-term chart, the levels of support that we can see is around 21.5. There's a possibility of the stock that can move to a momentum from current levels towards 27 odd levels. So one can actually hold on and exit around the 27 odd levels. Not expecting a lot of movement from current levels, but perhaps 27 can do the trick and one can exit at those levels. I think that's the level to watch out for. On immediate basis, 22 is a good support, can hold on to the support and look for the targets of 27, exit around 27.
Okay, exit around 27. That's the word coming in from Sony. But Partha, what's your word on Subex? Is it something that one should hold on to, or look and book out their profits, book out their losses? Actually, in this viewer's case, so what should one do?
See, fundamentally speaking, I think this company hasn't done much at all for its shareholders. Even if you see the revenue profile has been pretty stagnated, and rather there's been a decline as well. Even in terms of the margins, I think shockingly the margins have kind of crashed, and even the company's reported negative margins. Goes to show that I think there's surely a lack of execution problem in the company. And no doubt, I think the company primarily focuses on telecommunications as the key vertical. They've been talking about AI-related products as well. But somehow looking at the past track record, I think there are a lot of other better names in the market in the IT space to play out with. I would prefer something like L&T Technologies over a longer horizon, vis-a-vis staying put with Subex.
Okay, let's move on to the next query for today. We have Kshitij, who's writing to us from Noida, holding 20 shares of Titan at a price of 3,000 rupees per share. Wants to know whether to hold or maybe look to sell at the current levels. Titan is a stock that we're talking about. Sony, what's the word coming in for Titan? What should the viewer do now? Should they continue to hold this stock, or maybe just book out right now and look at any other stock or some jewelry names?
I think when we can look at Titan on a monthly perspective charts, one can see that 3,200 seems to have bottomed out on closing basis. Hold on to the stock until 3,200 breaks on closing basis, but there's a possibility of the stock reversing and showing a reversal up to 3,600 odd levels. So I think that's the level to watch out for. Anywhere above 3,600, it can actually again retest its previous all-time highs of 38, 38.50. I think these are the levels to watch out for. 3,200 seems to have bottomed out temporarily, and that's the good support to watch out for. Hold on to the stock. I think on a positional basis, it may test 3,600 plus levels.
Okay, that's the word coming in from Sony. But, Partha, what's the word on Titan? Because in the last few quarters also, obviously, Titan is a much bigger company when you look at it versus a Senco Gold or a Kalyan Jewellers. But the performance, the growth rate for these companies is much better than Titan. So what should one be watching out for? And should the viewer continue to hold Titan at 3,000 levels?
Yes, I think one primary concern with Titan always remains in terms of its elevated valuations versus most of its peers. But I think in terms of size and scale, I think Titan is best in the industry. I think even the second best peer does not match up in terms of the revenue run rate that Titan does, especially in the jewelry segment. And I think, no doubt, I think the last few quarters were a little tepid because of the weakness in the consumer sentiment. But I think we are very upbeat in terms of how the company will perform over Q3 and Q4. Also alluding to the con call commentary that the management had. I think the demand for the studded jewelry, excluding the solitaires, has been extremely strong for Titan. And probably we are witnessing one of the busiest wedding season, which will benefit Titan eventually. And the level at which the gentleman has entered, which is 3,000, I think generally the stock has historically bottomed out over there. And I fully agree with Sony that, I think the stock seems to have bottomed, but the momentum should pick up in H2 as when the company reports numbers. And this is a company where over the next 5 years, we can easily pencil in a top line of around 1 lakh crore, which currently the company is delivering around 54,000 crore. So I think over the next 3 to 5 years, still a lot of money to be made despite such elevated valuations in time.
Okay, still some money to be made in Titan. That's the view coming in from both our experts. But let's move on to the next query for today. We have Ram Kumar, who's writing to us from Hyderabad. He's holding 1,500 shares of AB Capital, and the price is 226 rupees is what he bought the shares at. Wants to know whether to hold or book out his losses. The stock is currently trading at around 199, and in the last 6 months, it's been quite muted in terms of a move that's come in for the stock. So, Sony, what should the viewer do now?
So, Vinay, what we can see, in near-term future, it seems that the stock can head towards 205 to 210 levels. It seems to be showing a reversal pattern on weekly chart. So one can actually hold because, if you've already held on to from the highs of 226 odd levels, it's not wise to exit from current levels on technical charts. It shows that there can be a reversal. So at least try to hold, exit around 210, 212 levels. That may happen in a month or so. perhaps the charts pattern are indicating that by Jan series it can head towards 210 to 112, but that's the max the stock can head up to. So I don't think that on charts or the data wise, it's not indicating that it can go up beyond 230 level. So better to exit around the 210 mark.
Okay, not expecting much of a up move on the charts, but on the fundamentals, Parthiv, what's the word for AP Capital? Anything exciting, at least on the fundamental side?
See, not really. I think historically, if you see, ever since this company got demerged, I think it has not created any shareholder wealth and value, despite I think the balance sheet size increasing. Even I think there were some issues in their NBFC book, but now I think the management is claiming that the share of the unsecured book has been continuously going up. And they're also penciling in a 25% very robust AUM growth in the NBFC book over the next 2 to 3 years. But despite all of this commentary and chatter, I think the stock has hardly moved. And also being a holding company, it does have very valuable stakes, especially in the asset management business company, which has done well. And that particular stock, which is separately listed, has also done well, but no spillover impact positively on AB Capital. Also, I think their health insurance and the life insurance arms have been doing reasonably well, but somehow it's failed to create and unlock value for the shareholders. So I would suggest an exit from here. There are a lot of other better, well-run NBFCs where the investor can invest.
Okay. Exit from here, better NBFCs where the investor can look to invest in. That's the word on AB Capital. Let's move on to the next query. This one is on Jupiter Wagons. Now, we have a viewer, Avinash, who's writing to us from Karnataka, holding 200 shares of Jupiter Wagons. Price is 706 rupees per share. Stock is currently trading at 492 rupees per share. So clearly, they're making a loss on this one. Now, wants to know whether continue to hold this or just book their losses and get out of the stock right now. Sony, on the charts and technicals, what are you looking at here? Because in the last 1 year, obviously till July, we saw that very sharp run up coming in for Jupiter Wagons. Railway stocks, all of them were buzzing. But then since then, it started coming down. And in the last 6 months, we've seen a decline of around 6%. So not that much of an excitement that we're seeing in the stock as much as we saw last year. What are we watching out for now on the technicals?
So, Vinny, on technicals, we can see that it has actually just crossed its 200 exponential moving average, which is a good indicator for a long-term positional basis. And the level is around 480. Now, it's just crossed above that level. If it breaks below 480 on a closing basis, then it'd be wise again to exit from the stock. But there's a possibility of some sort of a, uptrend move can be seen towards 540, 550. I think that level can get tested. So perhaps just hold on with 480 as a support stop loss from current levels and look for the higher levels around 580 or something, 560 to 580, that be the range. So I think from there one can take an exit.
Okay, keep an eye out on those levels over there that Sony just mentioned. But Parthiv, on the fundamentals, what's your story that is you're expecting to play out for Jupiter Wagons long term? Because the viewers bought it at a much higher price, 706. Does it make sense to continue to hold it, or maybe like Sony at some level get out and book out your losses?
Yeah, unfortunately, the valuation at which the investor has invested tends to pencil in at least next 3 years of growth, assuming that the growth trajectory that Jupiter Wagons has delivered kind of sustains. The management did attribute to the fact that there has been high competitive intensity amongst its other peer sets. And no doubt, I think the government ordering now should increase because the government capex has gone up. And they have guided for around 10,000 wagons as the sales guidance. Even if I were to put this optimistic guidance in place and look at the revenue and the margin trajectory, because they've got decent orders in their brake business, they're talking about capex in their battery storage business, which they plan to cater to the railway segment. All of this priced in, I think, still makes the stock very richly valued here at around 48 times FY26 earnings. So we are a little wary unless and until I think they can pick up their execution and the government ordering also tends to go up. It will be difficult to see the price at which the investors bought the stock at, and would take at least 2 to 3 years.
Okay, that's the view coming in on Jupiter Wagons. So keep an eye on those levels over there and the numbers over there. But on that note, we're going to slip into a very short break. Don't go anywhere, because after the break, our experts are still going to be with us and they will be answering all your stock-related queries. So stay tuned in for that.
From sharp insights in the political arena to all the excitement from the world of sports.
Celebrating 25 years of CNBC-TV18.
Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18. For 20 years, it has been India's most coveted stage for business leadership. The benchmark of unparalleled excellence.
We have to dream big and even bigger for India.
An accolade that celebrates character, integrity, and decisive action.
You just have to do your best.
Not identified by any single name, nor defined by a single achievement.
The best years are to come, and you don't have to wait for long, it's round the corner.
But redefined every year by visionaries who inspire and legends who lead. A journey that honors those who set the bar higher.
Welcome back to Your Stocks on CNBC-TV18. We still have our experts with us, Parthiv Shah of TrackCom Stockbrokers as well as Soni Patnaik of JM Financial Services to solve all your stock-related doubts. Let's move on to the next one for today. We have Bajaj Housing. That's the stock query that we have on. Ajay is writing to us from Bangalore, holding 200 shares of Bajaj Housing Finance at a price of 177 rupees per share. He's a long-term investor, wants to know the outlook on the stock and does it make sense to continue to hold this one? Right now, they're making a bit of a loss on this one. Parthav, let me take it to you first. What is the view on Bajaj Housing Finance? Should the viewer continue to hold it for the long term?
I think for the credit to the company, within a very short span of 7 years, it has landed up becoming the second largest private sector housing finance company. And the book has grown exceptionally well. The quality of the book has been extremely good. Almost 58% of its AUM caters to home loans. There is 10% in LAP and around 20% in lease rental discounting. So I think the path that the management has chosen in terms of how they want to form their book has been pretty efficient and robust. No doubt, I think all things are good. It's a group with a very good pedigree. But the only concern is that the valuations at which the gentleman has entered is almost, I think, quoting at around 9 times price to book multiple, which is extremely elevated. Our sense is that despite this heavy correction and currently the valuations hovering somewhere around 6.5 times FY26 price to book multiple, I think it will take quite some time for the gentleman to get back his cost price. So my suggestion would be on any declines. This is the type of company where I won't be hesitant to suggest some cost averaging and suggesting the investor to bring down his cost over the next 3 to 5 years. Even from here, we are of the view that this will create decent shareholder value.
Okay, even from here, it will create decent shareholder value and can look at averaging the stock as well. Soni, what's your view on Bajaj Housing on the charts and technicals? Would you also look at something like an averaging out instead of just selling the stock?
I think the averaging out can be done somewhere in the range between 138 to 133, which is currently, you can see it heading to here. There's a resistance around 155. So I think next round of, any positional rally can only be seen once the 155 mark is taken out. So I think this is a good time to average out because it has just taken a reversal from 125 odd levels. That can be the temporary bottoming out of a support that can be seen on technical charts as well. So I think this level, this range of 138 to 133 is the one where one should average it out and hold with the 125.
Okay, keep an eye out on those levels over there. But let's move on to the next query for today. We have Ismail Memin, who's writing to us from New Delhi, and he wants to know, he wants to invest 1 lakh rupees in Nalco. He would like to know if it is advisable to invest at the current market price in Nalco, or maybe look at something else. Partha, what's your view on Nalco? Should they look to invest that amount in Nalco?
Yes, I think in the non-ferrous space, Nalco is an extremely well-run company. It's fully backward integrated, starting from bauxite to alumina to aluminium. And in terms of its aluminum refinery capacity, it's housing around 22.75 lakh million tons per annum capacity, which is operating at almost 95% capacity utilization. And they have plans to increase the capacity by around almost to the level of around 31 lakhs metric tons per annum. So they have expansion plans. They've recently received bauxite mining rights in one of the leases, and that is definitely going to help them to reduce cost. They also have coal mines, and that is getting ramped up. So coal is an important cost for running these smelters. I think that should also help them. So going ahead, I think the current alumina prices have been pretty firm, and the aluminum market is pretty stable. So we are expecting very decent set of results from Nalco in Q3 and Q4. So certainly, I think looks like a good buy for the long term.
Okay, surely keeping an eye out of that. But Sony, this is our next query that we're going to talk about. We have Abhishek who's writing to us from Mumbai, and this is an investment query. He wants to know whether he can look to enter Swiggy, Hyundai, and M&M at the current levels for a short period of time. I know for Hyundai and Swiggy, you may not have any charts much, but what is the word coming in on this?
So when if we look at Swiggy, then, on charts, not a lot of data, but perhaps it seems to be holding on to a support of 470. So one can invest at current levels, but keep a very strict stop loss of 470. The stock may head towards 550 to 570 in near term. So I think that sort of a range bound movement, and, one can capitalize on that range bound movement. I think that level can be similar for Hyundai. Also, not a lot to speak on technical chart perspective, but it is actually crossing above its short-term moving averages. Seems to be holding above 1820. So one can actually, buy and accumulate at current levels on very small declines. Up to 1840 can be the level where the gentleman can make the investment and accumulate. Keep a stop loss of 1820 on closing basis. On charts, it seems that it can retest its highs of 1930 to 1940. Any move above that, it can head higher towards 2000 odd mark. So I think these are the levels to watch out for Swiggy and Hyundai.
Okay, that's the word coming in there, so keep an eye out over there. But thank you so much, Sony, as well as Partha, for joining in with us on this show and solving all our viewers' stock-related doubt. A quick look at the markets. Yes, holding on to the 24,500, around that mark right now is what the Nifty is trading at. Slight bit of a fall we have seen in the last few minutes. 0.1% of gain is what the Nifty is holding on to. Nifty Bank also holding on to gains of almost 1%. But with that, we're absolutely out of time on this edition of Your Stocks on CNBC-TV18. Thank you so much for tuning in. Up next, you have Closing Bell, so don't go anywhere.
After year, this is not just an award, it is a celebration of leadership in action. CNBC-TV18's 20th India Business Leader Awards.
Presented by Standard Chartered in association with Reliance Industries Limited.
committed more than 400 million to the retrofit program back in 2022. We also selected the seats back in 2022. There is a regulatory design, certification, and then subsequently manufacturing process that we need to go through. And that is where the supply chain constraint has hit us. Two different manufacturers came back to us and said, look, we just cannot deliver to the time frame that we had committed. There's going to be a delay. In one case it was 6 months, in the other case it was a little longer. So the program that actually should have physically started on the aircraft already will now not start until next year. The 787 aircraft, the first of the retrofit ship sets, will come in April. It'll take a few months to install and be certified. First aircraft hopefully in service by October next year. The 777s will have a refresh next year, but then go for a full retrofit starting in 2026.
So that 400 million that you spoke of, that was committed as far as the retrofit program was concerned. Do you believe you may need to now allocate more capital towards the retrofit exercise?
Well, the sad fact is yes. In one case, we've had to change seat vendors. This refresh I talk about, which is an interim step on the 777s, is something that we hadn't provisioned for originally and is only necessary because of the delay to the seat deliveries. But look, we've made this decision to invest more because we realise that this is, we can change everything else about the airline, and we nearly have changed everything else about the airline. But until we change the last 40 of our legacy wide-body aircraft to the standard that we expect of ourselves, let alone what customers expect of us, I think people will not consider the job complete, and we won't consider the job complete.
So how much more are you going to have to spend over and above the 400 million which have already been committed?
Well, I won't say, but it's in the tens of millions.
We're going through a second phase of consolidation. The last one we saw was in the early 2000s or the mid 2000s. But what does that mean in terms of pricing power for airlines like yourself? And also on the back of the merger and the integration, what are the cost efficiencies that we're talking about? I mean, what does that realistically mean in terms of margin improvement for Air India?
Well, there's a whole regulatory and legal structure that you need to maintain if you're an independent organisation or an independent airline. There's duplication of many positions. There aren't the economies of scale that you can enjoy when you're a 300 aircraft airline. So clearly there are efficiencies, and we've realised some, and there are more that we wish to realise. And that was part of the motivation for putting the businesses together. But I wouldn't want to give you particular figures.
Hang Seng, that is seeing a decline of almost 0.3%.
Can't afford to have any one of our banks struggling or on the crevice that they may fall off.
50% retracement of the entire fall from the highs of September to the lows recently, and that comes in at 24,770, 24,463. So it's a slower start.
Four-wheeler, passenger vehicle play, and the OEM. That's what our underweights are.
Growth that we're expecting is going to be on the back of affordability as well as new consumption occasions, new use cases being unlocked.
I think if we grow at about 17-18%, we'll get to 1 lakh crore by FY27.
Growth has come off much sharper than they were expecting.
We're higher now for the fourth day in a row.
Devendra Fadnavis is all set to return as the Chief Minister of Maharashtra.
SEBI's done is that it has asked Trafficsol, a company which was expected to list on the SME exchanges, to return all the money that it collected from its investors.
The market and the screen both look very strong.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that is the day so far, and it is turning out to be slow, I dare say, because just look at it. We were up 70 points in the Nifty at 220, and unless I'm already outdated, the market is flat. It is flat. 5 point, not being able to sustain at high levels. something that we alluded to in the morning, that after a couple of days of very strong gains, we are getting into slightly overbought, very, very near-term overbought kind of levels as well. We'll talk about all of that as we go along. We're coming to you from the CNBC-TV18 Moti Rosewell studios. I'm Prashant. Surabhi and Rima with me here in the studios. Nigel is joining in from the newsroom floor. Guys, hi, good afternoon.
Hi afternoon, guys. I have two issues for today's market, though they're still green. One, as we'll see the Nifty graph, these sharp vertical drops that are coming in, they make you very nervous. And second, the fact that it's an extremely polarized market, barring banks and financials, nothing really is moving higher. Large caps, that is. My two limited sort of points.
It's changing, it's changing very quickly, at least on the large cap screen. But it's good to see the mid cap and even the Nifty Bank is virtually still at the day's high, despite that sharp vertical fall in the Nifty and the Sensex. You've seen it in the broader markets and the financial index, but again, it's practically at the day's high. So that part of the market is still strong.
Well, that's right. Yeah, that's right. Even in the month of November, we had mentioned that the Nifty ended lower, but the Nifty Bank outperformed with a gain of around 0.8%, and the rollovers were on the positive side. And that's clearly having an impact because we're seeing follow through on the Nifty Bank. It was quiet for a couple of trading sessions at the start, but last two sessions has actually been leading the way. So let's see how much more the Nifty Bank can do on the upside. But after going to 50,000 just around a month or so ago, that one has bounced back and bounced back very, very strong. It seems to have taken up leadership, particularly HDFC Bank.
All right, absolutely, and we'll talk more about that. PSU banks also, of course, very much in focus. Let's, go straight across to Mitesh now, who's joining in with what he'd want you to do now. Mitesh, as you're watching this sudden sell-offs, what do you make of it, and what's the thing to do now from here?
Prashant, I think, I've been maintaining that we'll see a pullback which will be slightly choppy, and I still don't have signals of an uptrend starting. But two things. One, I think 24, 350, 340 zone, which is where, the entire last week we were seeing the market peak out. It was crossed yesterday, and today looks like a pullback to that. So as long as that is not being taken out, you should be maintaining a long bias. In fact, during the day, we also bought some index positions and immediately booked them with 80, 90 point kind of price because you had a very 25, 30 point kind of risk taken when the markets made a low of around 24, 360, 370 zones. So I think we'll keep a watch on 24, 340. As long as that doesn't get taken out, I think we'll maintain a long bias.
Okay, and stocks, Mitesh, what would you recommend?
Yeah. So I think TVS Motor is also giving a good pullback. So buy here with a stop at about 24.90 for targets of 25.80 on the upside. And the other stock which I like is Union Bank, and I've been recommending Canara Bank and BOB earlier. So the PSU banking bias continues. Union Bank is a buy with a stop at 125.5 for targets of 125.
Okay. All right, Mitesh, thanks very much. We'll come back to you and get some more trading ideas going. Now, let's actually start with the financial space because that's been the one best performing part of the market today. Specifically, PSU banks, a lot of them are doing fairly well. And the anticipation, obviously, look at the PSU banking index, about 2.5% up. The anticipation is that maybe there'll be some sort of a relief coming in from the RBI on Friday, maybe a CRR cut. That's what the buzz has been for the longest time. Citi is actually writing about this. How could a potential cut impact banks? Abhishek is here with the highlights. Abhishek?
Well, Citi has written on the banking sector with respect to implication of a potential CRR cut and improved prospects of a repo rate reduction as well. They say that the RBI could even consider a phased reduction of 25 basis points each in consecutive policies with respect to the policy rates that we have. They say that durable liquidity has reduced to more than rupees 2 lakh crore in just 1 month because of substantial forex operations that RBI has been conducting. So a reduction in CRR from 4.5% to 4%, which was a pre-COVID level, and release of more than rupees 1 lakh crore liquidity in the system would cushion the entire liquidity that would be there in the system. So CRR cut can be viewed favorable for the likes of HDFC Bank, Axis Bank, Federal Bank, as well as Bank of Baroda. While 50 basis point rate cut, the NII sensitivity do suggest that private banks are more likely likely to have a negative impact on their NII. And look at the chart that is up on your screen. SBI and Bank of Baroda will have lower impact than their private counterparts, while lenders with adverse impact will be IndusInd Bank, AU Small Finance Bank as well as RBL Bank. The rate cut will benefit sooner for the borrowers, that is NBFCs as well, because they have market linked borrowings in their borrowing program. So LIC HF has about 58% of their debts coming in from market borrowings. BAF, that is Bajaj Finance, has about 48%. L&T Finance also has 39%, and MMFSL also has about 33% of their debt coming in from market borrowing. So a reduction in rate would augur well for them with respect to lowering their cost of funds. Back to you.
Okay, thank you very much for that. Prakash Diwan is now with us on the show. Prakash, banks have been very, very resilient ahead of the MPC meet. So we've seen intraday swings on the Nifty and the Sensex, but banks are holding fort, 1% up now. Any preferred picks?
Good afternoon, Rebel. So, I think it's more to do with a bit of anticipation rather than any structural change as yet. And remember, the MPC, under its purview, it's only a repo rate cut that can come through as a recommendation. The CRR cut, which is the bigger piece of change that could move things, is still not clear. I would not venture out too much in anticipation of this, because things could change dramatically and you would be staring at a very sharp cut if things don't happen as anticipated. But on a more fundamental basis, my sense is the allocation of money that the government is looking at enhancing in the next 2 quarters, this and the next one, possibly starts having a trickle-down effect in terms of capital spends by private sector. And once that happens, you'll probably see the ones that are focused onto the SME segment is where I would prefer things make a big difference. So, the likes of Federal Bank, we've already seen how things are moving, the CUB, DCB, those are the ones that probably make more sense from this change in the winds for the credit side to go up.
Okay, all right. That's as far as some of the banking names are concerned. Let's look at some movers and shakers in the broader market, because this is a good day for mid-caps in general. Mid-cap index is still holding on to a gain of about 0.75%. The one stock that definitely catches the eye on the newsmakers is Honasa. Honasa is now surging 7%. We all know the news. The fact that promoters are buying a tiny little bit of equity from the market, spending about 4 crores, one of the co-founders, that is. Prakash, hi, good afternoon. So what do you make of the Honasa story? I mean, it was a great listing. Literally, there was a bandwagon that everyone was talking about. Then came the huge decline in the stock. And now this news of promoters showing the intent to stay committed. What's your thought?
Good afternoon, Surbhi. So I think the stock has paid the price for some of the, very ambitious sales numbers that actually went around in the IPO and post the IPO, and then there's a lot of clarity that came through when you did your channel checks in terms of how that happened. So all of those high sales, high numbers that you saw probably will be difficult to kind of replicate organically for some more time, is my sense. If you really look at, and where do they stand? They stand right in the middle of a very competitive environment, where the likes of Nykaa and all are kind of unleashing a very huge, massive surge of expansion and energy and resources being deployed to that. So that's going to definitely see it as an uphill task. So I don't think it's racing back to some very impressive numbers. The valuations still continue to be challenging. So till valuations become, very compelling in terms of, somebody wanting to take that risk-reward relationship in their stride, it's going to be a while. So I would not, and then this whole thing of the promoters staying committed, of course, they would stay committed. They've offered it at a higher price. It's available at much lower. Why not? So that makes sense for them. But as investors, do you want to do this till it kind of turns into a very strong, convincing, profitable trajectory? The answer is probably still some time away.
Okay, all right. So Honasa, waiting on this one. That is Prakash's call. Let's move on and talk about all the movie buzz that's really gripping the country and even overseas viewers, actually. Now, Pushpa 2 is all set to hit the screens tomorrow. And this has apparently become the fastest movie to surpass 2 million tickets sold on Book My Show, which is a very widely accepted and very popular platform. And this, as a lot of people are saying, could be a major thrust for PVR INOX, considering the drought of content we've had at the cinemas in the last couple of months. Shilpa is joining in. The numbers are just baffling, Shilpa. Run us through the ones that you're looking at.
Well, you know, as the popular dialogue from the movie goes, "Main jhukega nahi," that seems to be the trend for the release of Pushpa 2. Now, this Allu Arjun, Fahad Fasil and Rashmika Mandanna starrer is expected to break all records, possibly even that of Bahubali. It has already become the fastest movie to surpass 2 million tickets on Book My Show. Like you said, PVR INOX is already close to selling 6 lakh tickets. And the craze is such that people are shelling out as much as 1,800 rupees per ticket to watch the movie. Now, tomorrow, once it's released, Elara Securities expects that the gross box office collection is likely to cross 1,000 crore worldwide, with the Hindi version bringing in about half of it. Now, remember, the last 2 biggest films in India were Bahubali and KGF Chapter 2, which saw gross collections of about 1,200 crore and 1,000 crore each. Now, on the day of the release, tomorrow, it is expected to bring in about 200 crores, and Pushpa 2 alone is expected to push up the theatre occupancy to more than 40% in December, as against an otherwise average that we see of about 25%. Now, this is a huge positive for movie exhibitors like PVR INOX, which have suffered from a poor content pipeline in Q2 and even in October. Now, while things started picking up in November with Singham Returns and Bhool Bhulaiya 3, December could be the month of recovery. Apart from Pushpa 2, there's also Baby John and Sitare Zameen Par that are releasing in the month, and overall theatre occupancy may reach the 30% levels for the third quarter on the back of this. And the Hindi gross collections also is likely to be at about 1,700 crore rupees for the industry. Now, Elara expects that PVR INOX is likely to clock about 800 crores in gross box office collections in Q3 FY25. So, will Pushpa 2 be the fire, or as the term for this movie, this version of the movie, wildfire for the showbiz? That we'll know tomorrow, if you know what I mean, based on the dialogues of the movie.
Oh my God, I can tell you, Shilpa, I'm having major withdrawal symptoms. I think I need to start by going and watching Pushpa 1. There, I've acknowledged it on national television. I'm really behind the curve. But thank you, guys. What about you?
I've seen Pushpa 1.
Well done. And
I've seen it too.
Nigel?
I liked it.
Nigel?
Pushpa 2.
You've seen Pushpa 1, right?
No, I think so. Yeah, I think so. But
yeah, you and me, quick movie refresher. Pushpa 1 must happen.
So ticket prices for Phoenix Palladium, Lower Parel, evening show 650, right? So the lowest is 700. Prime, which is the average categories, 900, and then it goes up to 1600. Just putting it out there.
Yeah, Pushpa 1 on one of the OTTs. I think Nigel and I think it's cost effective.
No, I'm going to watch it actually for Allu Arjun, because quite some time ago, I've spent a lot of time with Allu on a lot of sets. So I'm going to watch it. I'm going to call him up and tell him that, how I felt about the movie. But I'll need to watch Pushpa 1 for that. Then watch 2 and let's see how it goes. Yeah.
Okay. Prakash, let's ask Prakash. Prakash, tell us whether you've seen 1 and then tell us what you think about PVR INOX. Can it be a turning point?
Oh yes, I did end up watching, given the the hype around it, and of course it didn't let me down. But more importantly, what this kind of a event does for PVR, which has been fairly soft in recent years, not that it's lost too much ground from its 1800 high, if I remember correctly, 1830 or whereabouts. What it does for me is that it gets the habit of watching movies in a theater back into the vogue. So if that comes back in vogue, you will probably see a follow through on some of the other releases also. And there's a whole bunch of releases, as it was explained right now. So it does kind of lead to footfall, and the capacity utilization from 25% to 40% is significant for an asset like this. So it will have a positive impact. You'll probably see some very strong numbers. Now, how long it continues, you need to look at that. But the cost rationalization that most of these theater companies have gone through does make them much more profitable if revenue picks up. So operating leverage is what I'm referring to. You'll probably see that, and that's probably not what the market has discounted as yet in the numbers. You'll probably see that improvement happen.
Okay, all right, got that. By the way, there's some lines at the bottom of your screen. There were some reports that were indicating that Star Cement is on the block and that Adani Cement could be looking at it. The management for now has come out and they're saying they're not engaged. I had a word with a couple of officials at the company as well, and they clarified to me that, as of now, there is nothing on those cars. There's no banker. We'll have to see how this plays out. But Star Cement is the one that has dominance in the northeastern part of the country with 20 to 25% of the market share out there. At the highs of the day, I think the stock was at around 225. It's come off the top because of this clarification that's come in from, from the management. So keep an eye out on this one. We'll try to get the management as well in the coming weeks to come on the channel and tell us how business is shaping up. Because for now, they're at around 7.5 million tons of capacity with clinker of around 6 million tons or thereabouts. And they're heading towards 10 million tons. At least that's the goal. Well, Prakash, I wanted to ask you about another stock. These two IPOs that have hit the market just, I think, in the last 10 to 15 days. One is Enviro. At the highs of the day, the stock, I think, was closer to around 280 rupees. And post-listing, Enviro has seen a big run. But from the highs of the day, I think it's down close to around 8%. So that limited free float factor is at play. And the other one is Niva Bupa. Now it is at circuit, up close to around 20%. But if you just look at the shareholding, the free float that's present in the market is very, very limited. And the September holdings that they have last disclosed comes up for you on the screen. Very, very tightly held company. So that could be a reason why the stock now is up 20%. Prakash, any view on any of these names?
So Niva Bupa, of course, is something that I evaluated when it came through the IPO. So my sense is that it's a fairly decent business. Today also, things are looking positive for the insurance pack and all. Of course, it's been more life. But, this businesses can do very well if they remain very lean in terms of operation, keeping the costs the same. And the product mix keeps on kind of evolving very rapidly to suit various geographies, various segments of buyers. So if that is the case, this is something which will start paying you off. And look at the kind of backing it has in terms of, take the Fettleton LLP stake away, and you have probably, it's well distributed, well owned by a lot of institutions. So my sense is this is a business that will be in the news for the right reasons going forward. I don't know much about Enviro because it's probably overvalued according to me from that space has been so, hyped up. But Niva Bupa could be definitely looked at and will start attracting a lot of capital even in the secondary market subsequently. But it's early days to comment on their performance because we'll have to wait for a couple of quarters at least to see that. But I think the structure gives you that strength, gives you that conviction that it has the potential to do very well.
Thank you, Prakash, for joining in. There is a new IPO which is closing today, and that's Suraksha Diagnostic, which is a diagnostic company which caters to eastern and northeastern India. So predominantly about 85-90% of its revenues come in from West Bengal, and they're looking to raise about 850 crore rupees. It's a pure offer for sale, and with this, the company will bring down its pledge from current 40 to 0%. So that's going to be the new kid on the block. Today is the last day. So far, it's been fully subscribed. We will get into a break. On the other side, we'll invite Rupen Rajguru. Stay tuned.
I'm really happy to be here. And congratulations on completing your 25 years of CNBC.
I'd refer you to an article that was literally just released by IATA, which traces the real, how airfares have tracked relative to the CPI and relative to oil prices, not just in India, but in many countries. And what you will find that if you index back to 2015 or 2019, airfares have gone down, and not only gone down, but gone down dramatically relative to inflation and relative to oil price. So I think just the competitive dynamic of aviation and the market will mean that airfares will remain affordable, and of course we want to fill our planes. So there's always going to be a benefit to the customer in that respect.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Yes, sir.
Okay, welcome back. We've got the market now absolutely flat. So nothing to show for all what has happened through the course of the day. I must say market breadth is still positive. 1,600 stocks are higher and about 1,100 stocks are lower at this point in time. So broader market, there is no problem. And there's a long list of volume-led gainers, which I think are keeping us in good stead. Rupen Rajguru is with us, Head of Equity Investments and Strategy at Julius Baer. Rupen, good to have you with us here. Thank you for your time. You know, you guys have coverage on a lot of mid caps, small caps, and you've got a strong team sort of doing that. HEG and graphite, big gains in the last two sessions. Have you looked at the news flow, looked at the price action? Any thoughts at all, Rupen?
Yeah, hi. Good afternoon, Prashant. So, I would refrain from commenting on individual names. But if you see, the stocks which you mentioned are clearly beneficiary out of the action or some kind of retaliatory action which Chinese guys have taken against the US. So wherein they have said that they will not be exporting rare earth material and including graphites out there. And so clearly the Indian guys will be a natural beneficiary out of that, and hence we are seeing this momentum. So for last 2 days we are seeing that. But across the board, I think there will be a lot of these news flow which will come through and which will impact on a very short-term basis a lot of the stocks. So there will be a lot of noise with Donald Trump coming into the helm. But that's the broad perspective I can share regarding those names which you asked.
All right, just a couple of words on it, since this is a topic that I normally track with regard to graphite electrodes. China has banned the export of graphite, and that is natural graphite. The graphite electrode is the one that is manufactured. It's not the one that is mined. So the stocks are up in anticipation that there will be some kind of, a lower supply that will come out of China. But my, interactions with various industry experts say that actually the graphite electrode piece doesn't see much of a fillip with regard to this move, because China is banning the export of natural graphite, which is the one that is mined, not manufactured. Yes, the second half of the year will be better for graphite electrode companies, but I think, prima facie, based on the feedback that I've got, that these stocks have actually run ahead of themselves because they're up 25% in just 2-3 trading sessions on. So Prashant, that's the broad feedback that I've got. I'm still trying to get someone, from the industry who could come and talk, because the managements are not really talking. But prima facie, I think this is something we can work with, that the graphite that is being which is banned in terms of the export, that is the natural one. That's the one that's mined. The one that we are tracking is the manufactured one. So ideally, there should not be much of an impact. Prima facie feedback that I've got.
No, that's very important, Nigel, to put that on the board. So our viewers should take note that, market seems to be, with this kind of stuff, I mean, usually people are a little trigger happy. You act and then ask questions later. So as Nigel said, he is in touch with the companies and, analysts, industry experts, etc. We'll endeavor to get the managements on the air as soon as possible, and we'll ask them whether this really does make a difference to their business. At the margin, as Nigel said, maybe it doesn't have that much of an impact because of the difference that he was talking about. All right, well, that's HEG and Graphite, but for now they're both strongly up. PSU banks, of course, are the other place where you're seeing a lot of action. I mean, the PSU bank index is up 2%, and there's a long list of PSU individual names which are up between 5 and 10%. Out of these names, Rupen, first of all, any thoughts on what's happening? Is there a broad kind of trigger here? And how do you like this space?
So, Prashant, if you see when the market was witnessing correction probably a month and a half back, so a lot of these names got significantly corrected. And here, generally, the mood towards some of the narrative stocks, post the government change in Maharashtra has come back. So, as a pack, we are seeing across the board momentum in PSUs. Purely from numbers perspective, you see the PSU banks numbers were not bad. And hence, post the correction clearly on valuation, a lot of the PSUs are definitely looking attractive. So from our perspective, from a PSU banking pack, as a category, we like a large private sector bank. But amongst the PSU, the top two banks is something which we like because here we have valuation comfort. And purely also on the credit cycle side, these guys have performed relatively better. So in that sense, post-correction valuation comfort and not a bad credit cycle they are seeing, and hence we are constructive, but we'll stick to the top two names out there.
Rupen, hi, afternoon. Can you take us through your call? You tactically prefer low-ticket consumer discretionary items versus the affluent consumption. What are the signs that you've picked up which makes you tactically positive?
Yeah, hi, afternoon, Rima. And since we live in the world of narratives, and I think one of the narratives Prashant said about the graphite, which has probably found fancy. So the other narrative, and probably we are clearly seeing visible signs, is the pickup in the rural economy. If you see one of the clear template which all the state governments are now following are the income transfer scheme. I think as we speak, if I'm not mistaken, 17 to 18 states are following that. And probably with the election results, more and more will follow. So roughly 2 odd lakh crores worth of these welfare schemes is what across the board states have done. So that's why we probably will be seeing rural economy coming back. And while inflation has been high, which we believe will come off, so what will happen? There will be a potent combination of the mass consumption which was suffering. We will see that coming back, and hence some of the low-ticket discretionary items will see a comeback. So it can be footwear, it can be luggage, it can be movie exhibition, it can be value retailing. Because the entire sector, the sectors which I just mentioned, have had a terrible last few quarters, and probably we might see a uptick in next 1 or 2 quarters, and the stocks probably have done nothing. So from that perspective, we will see definitely the stocks will be into reckoning for next few quarters, and hence it's a tactical call.
Okay. Rupen, hi, great to have you on. So just on the financials piece, just want to understand what are you most bullish on right now? Lenders, non-lenders, and within non-lenders, I think the hottest space is insurance. There is never a day that we don't have fresh news or potential changes for insurance players, right? Yesterday it was about GST. Today there's been some buzz in the market that maybe some insurers are thinking of hiking term policy premiums. Your thoughts? A specific word on insurance, and then anything else that you're willing to buy now in financials.
So hi, afternoon, Surbhi. So you're right. Not only last few days, but over last few years, insurance as a sector has been, dealing with a lot of regulatory changes, which in a way, I think it is good because whenever, a sector has a big runway for growth and huge size of opportunity and under-penetration across the board, which is growing very fast, there are always, certain practices which are not probably beneficial to the customers. So hence regulators have come out with various measures towards that. Having said that, if you step back and look through the insurance, and if I first want to talk about life insurance companies, those companies did not, from a pure stock market perspective, they all got listed 5-6 years back, and valuations were pretty high on price to embedded value. They were earlier putting at 3-4 times, and now went down to 1-2 times. So on valuation now they are reasonable. The big story still remains, and the growth will definitely be seen out there. So amongst life insurance, what we like companies which have a good distribution network, which has across channels distribution, which also are very innovative on the product side. And I would say some of the top private sector companies kind of fit into that. The other segment, which is health insurance, while some of last few days because of the news flow around GST, it has been in reckoning. But if you look through, still health insurance again is a segment which is hugely under-penetrated, and we believe that there is again, I think post-COVID, the awareness towards health insurance has significantly gone up, and now with all, probably it's going through some readjustment from the overall pricing perspective. But once that stabilizes, I would say some of the largest company out there is probably available at a valuation which is much cheaper than the other listed one. And I think that would be something which we like. And just to conclude on the entire lending piece, so as I said, we like large private sector banks, and we have seen some of the largest private sector banks probably slowly and steadily is kind of moving up. And what we like in the scenario in which where we are seeing a little bit of credit cycle coming through, companies which have good underwriting skills. So some of the NBFCs also, some of the large NBFC which probably has not performed, and I think what we believe now will stage a comeback. So some of the NBFCs in a rate cut cycle also relatively NBFCs are better placed because their liabilities get repriced quickly, and hence they can actually see a margin expansion.
Okay, all right. Hi, Rupen. Good afternoon and good to see you, Ben. Rupen, what about the telecom space? Now, I understand that there was a big sell in Bharti Airtel, and that got cleared out just in the past week. And post that oversupply overhang that got cleared out, then you had the stock that popped up, I think 4-5%. But you believe still good times ahead for the telecom space? How would you play it? The core player, or the one that is trying to keep up and trying to continue to make it a 3-player market?
Yeah, hi, afternoon, Nigel. And here we will clearly stick with the core player. The simple reason being, if you see from industry perspective, they are having one of the best probably balance sheet structure for last almost 1.5 decades. And I think we all know the intensity of capex is going to come down. I think majority of capex is done. And the pricing, what we are seeing, we have seen one set of tariff hike, and probably we will see more in next year and a half. So what will happen there, Nigel, is some of these companies will generate huge amount of cash flow. On an average, like 30,000 plus crores of cash flow, the core company will generate out there, which I think is really huge. And I think, as I said, we have not seen this kind of good balance sheet for these companies. And apart from that, there are option value coming from enterprise, and I think data center can also be a big option value coming through for some of these companies. And of course, the impending IPO of the largest player, which either IPO or demerger or whatever form it will come. So that will also lead to some excitement around that sector. So yeah. So from our perspective, I think it is one of the core theses which we like, and it is part of the core holding. And even from current level, from next 2 to 3 year perspective, we are positive.
Thank you very much, Rupen, for joining in. Another call of his is also tactically just profit booking or reducing weight in capital market intermediaries. But we'll get to that call another day. By the way, for the markets, some of these consumer staples, FMCG names, ITC, HUL, Britannia. These are stocks where we've seen some selling pressure. Britannia, for instance, is now at the day's low. It's a fall of more than 1%. So in the last 10 minutes, that's where you have seen some change. Get into a break. On the other side, we'll tell you, we'll get you a few BTST calls from our technical experts.
Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com.
Welcome back. Well, the markets are still holding mildly in the green, but that's courtesy the Nifty Bank. That's the one that's really done well. And Oberoi Realty, it started off in the green, and all through the trading session, it's built on to those gains. So good going on that particular one. Mitesh Thakkar is back with us. Mitesh, what are the buy or sell calls that you have for us?
Nigel, buy call has moved up very nicely in the last 1 hour or so, and closing at the day's high. So that's the BTSC with a stop at 375 for targets of 385. The other one is Bata, which I would recommend taking a BTST. Keep a stop below 1430, look for targets of 1460.
Okay, all right, got it. Mitesh, thank you very much. You have a good rest of the day, and we'll see you again with more calls tomorrow morning. Now, defense stocks, they have been in focus all through the day because the news, as you know, we've been telling you from the morning that the Defense Acquisition Council has approved 5 different acquisition proposals, and together they're worth a little over 21,700 crore rupees, and they cover a lot of different segments. For instance, light helicopters, radar systems, and so on and so forth. We have Upasna joining in. She's been looking at some of the brokerage notes that came out around this development and what it means for individual companies and stocks. Upasna.
Well, ICICI Securities has written a note on the back of this development. It says that after a marked slowdown in the domestic ordering, DAC has approved AONs worth 21,800 crores, which is one of the small ones in the recent times, but has come in after a gap of 3 months, which is comforting and positive according to the brokerage. Now, AONs approved so far in FY25 amount to 1.6 lakh crore as compared to 3.6 lakh seen in FY24 overall. It expects orders of 12 Su-30 Mk1 fighters and Pinaka in next 3 to 4 months, and has also highlighted some of the key picks in the defense space, such as Solar Industries. The brokerage has given a buy rating on this with a target price of 13,250. Azad Engineering also is under the coverage, and they have given a buy rating with a target price of 2,450, and PTC Industries with a buy rating and a target price of 20,070 per share. Now, let us look at the individual stocks that will be in focus and what the brokerage has highlighted. Now, coming to BEL, they have given a buy rating and a target price of 350 per share. The brokerage believes that it is one of the stocks which will benefit the most out of this due to the possible award of electronic warfare suit package, trickle-down benefit of 20 to 30% value of shipbuilding orders, and also overhaul of electronic components. Next up is Astra Microwave. The brokerage has given a buy rating on this stock as well, hence it will remain in focus with a target price of 935 per share. It says the company is likely to benefit from electronic warfare suit package and even next generation radar warning receiver. Next up is HAL. Even this stock is highlighted and will remain in focus as it is likely to benefit from the procurement of advanced light helicopters and engine overhaul of Su-30 Mk-1 fighter. In PTC Industries will also be in focus as the brokerage has highlighted that it expects the company likely to benefit from this as the company has executed a MOU with HAL's Koraput facility for the supply of critical components. So all in all these stocks remained in focus today.
All right, thank you very much for that, Upasana. Well, the markets, it's absolutely flat. 3-point change in the Nifty is all there is to show for it. Swiggy is up 3%, which means it's about 15-20 rupees off the highs. Of course, the management was with us as well, but what's the street making of it in terms of their future guidance? And of course, when we talk about Swiggy, it's always also, I mean, that a comparison with Zomato kind of creeps in. One is not complete without the other in that sense. Mangalam is here with all of that. Mangalam.
Well, that's the interesting part about Swiggy, right? You know where the destination is because Zomato is already there. All you need to do is look at the numbers and see whether it's on track to get there or not. And these numbers don't suggest otherwise. In fact, everything that the narrative was with regards to operational improvement in the food delivery that did come by, the EBITDA actually doubled year on year. We did see margins at 1.6%. Their guidance was about 3%. 5% of their food business was through the new 10-minute service that they have, which is Bolt. The second part is the revenue generated from quick commerce. Here as well, quarter on quarter, there was a 21% growth. Same dark stores showed a 10% growth Q on Q. And year on year, there was over 135% growth in the business as well. The question was, how do you go ahead and scale up from here? To that, management has said that, from March 24 levels, which was close to around 520 stores, it doubles in March 2025. And it's not just the number of stores which doubles, area per store also increases by about 30 to 35%. Add to all of this, the biggest question is profitability. To that, the company said that, they will be profitable by December 2025, which basically is the third quarter of FY26. Also at the same time, the food business would compound at around 18 to 22% in terms of a gross order value, with margins inching towards that 3% adjusted EBITDA mark as well, with a long-term average or long-term guidance of close to around 5% On quick commerce, the break-even on the EBITDA front is a couple of quarters after overall profitability break-even. That comes in at around the second quarter of FY27 itself. Remember, when Zomato, when Swiggy first listed, the valuation gap between Zomato and Swiggy was close to around 60%. Now that gap has narrowed to around 50%. Any further move towards profitability and faster growth than Zomato would narrow the gap a little more. In fact, we spoke with the management this morning, and this is what they had to say about the business growth plans.
Factor of how well our efforts at creating new use cases as well as creating affordability work. We have a series of new use case related work that we're pushing out to the consumers. The latest being Bolt, the 10-minute food delivery that is expected to create some new consumptions. There's things that we've been doing on affordability, but we'll continue to build on it. I think how well we do these few things are going to really dictate whether it'll be the lower end or the higher end, I guess.
There is, operating leverage that is already existing in the business. If you look at over our last 4 quarters, we've added 90 basis points in, EBITDA just on scale, right? And you should expect a similar kind of number to play out even with the rising scale. And there are opportunities on the take rate side. Our advertising business, we have talked about it, having another, 100 basis points of leverage existing still, and some of the cost equations, especially on the subscription program, which we have successfully run over time. We do expect leverage to also come through the overall affordability initiative that we have launched. So you should assume that it's a good trajectory and steady state is not very far away. So if you look at 3 out of the top 7 cities are already profitable, and within these cities, 75% of the stores which are say 12 months and above are already profitable. So as we kind of guide for accelerated store expansion, there is going to be the certain investment that will be baked in for the overall neutrality at the corporate level to come by in 4 quarters from now. In terms of the overall cash balance with the IPO proceeds, we have a little over 8,800 crores in bank. So it's a very, very strong balance sheet. As we have said in the past, a lot of this is actually defensive capital to ensure that we continue to have the firepower to continue to remain invested in the category growth. Food delivery business is already generating, positive free cash flow and will continue to accrete to the corporate treasury. So overall, we feel a very good, place from our balance sheet strengths point of view, and we don't expect to raise, new capital in the near future.
All right. So that was the Swiggy management talking about their targets towards profitability and how they're looking to grow the quick commerce business itself along with food delivery. Let's welcome in our next guest. Mayuresh Joshi joins in from William O'Neill. Mayuresh, great to have you on. So yeah, let's ask you, Swiggy or Zomato, both or neither or any one?
So afternoon, Surbhi. No, I think as a clear disclaimer, we continue holding Zomato in our global portfolios. But again, I think as Mangalam was pointed out and hearing the management of Swiggy, the guidance that they've probably put out, both in terms of the food delivery business, in terms of the EBITDA margin performance by the end of Q3 next year, and expectations in terms of a break-even in the quick commerce segment 2 quarters after that, I think that is giving the street a lot of confidence on what Zomato probably delivered a few quarters back. So what Zomato probably did with its food delivery business and Blinkit, a similar replication is something that the street believes Swiggy can probably do as far as its balance sheet is concerned. Obviously, I think the dark store expansion, all the players are doing that. Zomato is doing that. Swiggy is expected to go to 1,000 stores. You're hearing Zepto probably increase their dark stores as well within the unlisted space. So again, I think in terms of core dynamics, in terms of cash on books, specifically of Swiggy as well as Zomato, I think they have plenty of firepower in terms of how they can execute their plans in terms of a profitable path ahead. However, I think in terms of how the numbers actually play out will be in the next 2 quarters, whether the losses reduce substantially, both in the food delivery and the quick com business as far as Swiggy is concerned. And for Zomato, if they're able to consolidate onto their gains in terms of profitable growth, the street will then probably re-rate these stocks to a certain extent. But till that point of time, my own sense is that a large part of the price moves are in the price in terms of expectations. It is now earnings expectations and earnings delivery that will re-rate these counters over the next few quarters.
Okay, all right. So that is Swiggy and Zomato and sort of the views coming in over there. We do have to take a very quick break. We'll come back with more market talk on the other side.
Congratulations to CNBC TV for doing 25 years and all the best for next 25 years.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC TV18.
Celebrating 25 years of CNBC TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC TV18 budget headquarters as we've done for the last 25.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
we are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18. For 20 years, it has been India's most coveted stage for business leadership. The benchmark of unparalleled excellence.
We have to stay.
Welcome back. Well, we have Mayuresh Joshi who's still with us. Mayuresh, you had negative news that come in on RBL Bank at the start of this week with regard to that pact that they had with Bajaj Finance, which now will not continue. The stock, I'll tell you what, from the lows that we saw on Monday, the stock has rallied close to around 22%. That's the kind of mood with regard to some of these names. The street is willing to give them a chance. It's been a big underperformer. Any view on RBL Bank?
Afternoon, Nigel. No, again, I think the core dynamics have to improve. So I think it reacted for the news. It recouped back its losses based in terms of the market momentum that we probably saw specifically in terms of banking stocks. But the core dynamics have to change for the better in all aspects in terms of how they're managing their asset quality, in terms of their overall advances book, in terms of their provisioning as well as capital adequacy. And therefore, our take is that at this juncture, we are looking out for a couple of stocks within the private and the public sector domain. Federal Bank has posted a very good set of numbers, in my opinion. An all-time NII and all-time PBT. The NIMs have been pretty stable for Federal Bank as well. Again, a large part of their dependence in terms of the remittance growth, as far as deposits is concerned, is something that protects and shields them in terms of how the overall deposit growth for the industry might play out. And to that extent, the credit deposit ratios should hold out for Federal Bank. Again, gold loans have probably exceeded 29,000 crores from an overall balance sheet perspective. And overall return ratios should probably see stability and improvement thereafter. Similarly, I think in the public sector domain, Nigel, Bank of Baroda is something that we are keeping a close eye for. Decent set of numbers. NIMS was very, very stable. The expectations in terms of asset quality pressures are actually lower year on year, quarter on quarter as well. And therefore, the provisioning that they're carrying on their balance sheet, the expectations in terms of recoveries, which will aid profits as well as return ratios, along with decent valuations and the base that it is setting up as per markets with India, I think all look decent. So I think not RBL, but yes, Federal and Bank of Baroda is something we're keeping.
Okay. Mayuresh, how would you read Bajaj Auto's move to cut down prices, slash prices of Freedom 125 bikes 5 months into the launch? When it launched, there was so much fanfare. The early bookings of the CNG bike were very, very strong. Is this an indicator of demand or just inventory correction that you would say is a one-time exercise?
Afternoon, Riva. I believe that we probably need to wait for more data points, frankly. So whether it's an inventory correction, or is it weak demand that has prompted the company to probably cut prices is something that we'll come to know from this month's data as well. So to that extent, I think sentimentally negative in terms of how the stock is expected to play out. But there is immense competition, Rima, between that 125 in that 100 to 150, 200 cc kind of a space. You're also expected to see a lot more launches happening in that 200cc space. So I think within this space, again, TVS Motors, though a stark outperformer, I think the numbers are still coming in. The expectations in terms of them expanding their geographical reach, expanding their dealer network, and therefore I think the EV products that probably come into the market in the next few quarters and years, I think that might just hold up volumes and numbers for TVS as well. So I think from a pure comparison basis, I think sentimentally negative for Bajaj Auto, but TVS might just outperform the entire two-wheeler package.
TVS's November sales numbers were also pretty robust, but for now, it's pricing aggression by Bajaj Auto, which has pulled out the stock. Stay on, Mayuresh, because as we approach the end of 2024, my colleague Rachna caught up with Nilesh Shah, Managing Director of Kotak Mahindra Asset Management Company, on the sidelines of Kotak AMC's annual Outlook event for next year. She started off by asking his view on the markets. Listen in.
Previously, your kids were your retirement solution. I think now people are realizing that financialization of savings is critical to ensure that you are not dependent upon your kids for retirement. This financialization of savings will manifest in many forms: banking, insurance, mutual fund, broking, wealth management, and so on and so forth. Today, 93% of Indian households' financial savings is in products which does not give real return. Only 7% is in real return product. As the desire to become financially secured moves, as they become more aware, the financialization of savings will continue at a much better pace. It's a long-term growth story. This has happened in rest of the world. It will happen in India too.
And in 2025, that is?
It's a longer-term story, not just 25. 25 we are bullish from a valuation point of view. But that doesn't mean that the story will end in 25.
Okay, so in terms of valuations, where do you see this going forward in 2025?
I think broadly as a market, we are fairly valued. We are at a premium to rest of the guys because our ROEs are better, our liquidity is higher, our volatility is lesser. Now the returns will come from earnings growth. Unlikely that we will be re-rated higher.
Another theme was rural consumption. Where do you see it going forward? Because right now with, let's say, what we're looking at in the FMCG industry or at consumption in general, the picture has been quite bleak. How do you see this in 2025?
So the Kharif crop has been bumper. In second quarter GDP, the bright spot was agriculture. And we believe Rabi crop also will be bumper because of high water level in reservoirs. Put together, rural consumption should lead compared to urban consumption. It's reflected in passenger vehicles like two-wheelers. It's reflected in tractor sales. It's reflected in rural-oriented consumption companies. So our feeling is that rural consumption should continue to move forward.
With that, for 2025, if you had to pick sectors, you obviously spoke about India being a part of the global supply chain and rural consumption. But apart from this, if there are sectors that you had to handpick for 2025?
So this is the year where making money will be difficult. You were playing on a betting pitch for last 5 years where making run was easy. You could hit 4s and 6s at will. Now you'll have to take 1s and 2s. You'll have to be careful not to lose your wickets. This is the year of stock pick as well as sector rotation. We believe quality will do better over momentum. Now everyone's definition of quality could be different, but समझदार को इशारा काफी है. Reasonable valued stocks will do better than expensive stocks. And stocks where there is diversified ownership are likely to do better than stocks where there is concentrated ownership. In those parameters, we think IT, pharma, consumer staples, telecom should do better than the market over next year.
And that's, some advice as we look ahead into 2025, and I think you'll hear more of that. Wrap up 24 and look at what 25 could really hold. Look at the changes at the bottom of the screen, tell you the story. Nifty Bank continues to outperform with a 1% plus gain. Mid and small caps, last week was great, 2.5% and 5% respectively. And this week again, so far, the way things are stacking up by Wednesday close, it's mid and small caps over Nifty and over Nifty actually. Banks have done relatively better. And of course for the Nifty itself, it's good. But of course today we kind of fizzled out a little bit. Mayuresh, from the entire EMS space, looking at names like Sirma, Avalon, and a few others, some profit booking here. But it just sort of flip-flop. Yesterday was a good day in these for these names. PG Electroplus, I think, is still doing very well. What's the top idea amongst these?
Good afternoon, Prashant. No, I think most of these names have done really well. And again, I think the PLI schemes that have been announced has been a kicker for most stocks within the sector itself. Obviously, I think the scope for growth, the expectations in terms of the EMS market is expected to grow threefold to almost $60-odd billion over the next 4 to 5 years. And there is expectation that a lot of work will probably flow in. Semiconductors, PCBs, chips, I think a lot more can come their way. And therefore, I think it's all based on expectations of order flows coming in, orders flowing in at decent margins. Because these companies have built-in capacities and are expanding more, the expectation is that earnings should probably compound at a decent pace. However, I think valuations are a tad bit on the higher side. We obviously like stocks like an Avalon Tech, for example, but it's moved a little bit too much for comfort in the last few months. So we will expect the stock to cool down for fresh entry points But I think generally the space from an earnings perspective over the next 3 to 5 years should do well.
Okay. All right, Mahesh, stay on. Just allow us to recap today's trading action, and then we'll come back to you for some more thoughts and ideas. It's been a narrow day for the large caps. The Nifty hasn't done too much. It's had several rounds of intense volatility, one, straight line downward fall, and then a recovery. So it's been an eventful day if you ignore just the fact that it's 2-3 points on the upside, fair amount of choppiness. Let's look at what the gainers list looks like. A lot of financial and IT names on it. HDFC Life and HDFC Bank, the twins, are the two top performers on the Nifty today. Then comes in Apollo Hospitals and NTPC. Titan has managed to see a small recovery, 1% higher today. TCS, Wipro are some of the tech names that have done well. Throw in a Tech Mahindra there on that list as well. And then you have names like L&T, ICICI Bank, Kotak Mahindra Bank. These are some of the other big stocks that have contributed. However, on the way down, there's Cipla, 2.5% lower. Bharti Airtel continuing its correction from yesterday. Tata Motors, Bajaj Auto, Maruti, Hero, not a great day for auto stocks. And then some of the biggies like HUL and Reliance, also ITC actually. These big boys dragging the index on the way down. That's the large cap picture.
Strong close for the mid-cap index, up nearly 1%. Nifty Bank 2 higher. The big movers include Niva Bupa, 20% up on that. HEG 19%. PSU banks like UCO Bank, IOB, Central Bank gaining between 8 and 12%. Throw in an RBL Bank from the financial pack, and you've got a big move there. On the way down, we should pull up Swiggy as well, and the way it closed post the Q2 numbers and the management commentary that the food delivery margins should inch up to 3% in the near term and 5% over the medium term, and not worried about competition. On the way down, you had, Nykaa a bit subdued in trade. Easy Trip has been weak for the last couple of days, so it's fallen on pretty big volumes.
Absolutely. I think we're going to wrap up things here. So vibrant day as far as broader markets go for the Nifty. It was, essentially two large sell-offs. One happened at about 11:40 when the market came off sharply. The second happened at about 2:15. And of course, from there, market did not really recover, and we end absolutely flat. It's a wrap on this edition of Closing Bell. Markets Forward will take forward all the action and prepare you with what you need to know as we come back tomorrow. Stay tuned.
And even bigger for India.
An accolade that celebrates character, integrity, and decisive action.
You just have to do your best.
Not identified by any single name, nor defined by a single achievement.
The best years are to come, and you don't have to wait for long, it's round the corner.
But redefined every year by visionaries who inspire and legends who lead. A journey that honors those who set the bar higher year after year. This is not just an award, it is a celebration of leadership in action. CNBC-TV18's 20th India Business Leader Awards.
Presented by Standard Chartered in association with Reliance Industries Limited.
Committed more than 400 million to the retrofit program back in 2022. We also selected the seats back in 2022. There is a regulatory design, certification, and then subsequently manufacturing process that we need to go through. And that is where the supply chain constraint has hit us. Two different manufacturers came back to us and said, look, we just cannot deliver to the time frame that we had committed. There's going to be a delay. In one case it was 6 months, in the other case it was a little longer. So the program that actually should have physically started on the aircraft already will now not start until next year. The 787 aircraft, the first of the retrofit ship sets, will come in April. It'll take a few months to install and be certified. First aircraft hopefully in service by October next year. The 777s will have a refresh next year, but then go for a full retrofit starting in 2026.
So that 400 million that you spoke of, that was committed as far as the retrofit program was concerned. Do you believe you may need to now allocate more capital towards the retrofit exercise?
Well, the sad fact is yes. In one case, we've had to change seat vendors. This refresh I talk about, which is an interim step on the 777s, is something that we hadn't provisioned for originally and is only necessary because of the delay to the seat deliveries. But look, we've made this decision to invest more because we realise that this is, we can change everything else about the airline, and we nearly have changed everything else about the airline. But until we change the last 40 of our legacy wide-body aircraft to the standard that we expect of ourselves, let alone what customers expect of us, I think people will not consider the job complete, and we won't consider the job complete.
So how much more are you going to have to spend over and above the 400 million which have already been committed?
Well, I won't say, but it's in the tens of millions.
We're going through a second phase of consolidation. The last one we saw was in the early 2000s or the mid 2000s. But what does that mean in terms of pricing power for airlines like yourself, and also on the team?
Market ends off midday lows but near the flat line. The broader markets outperform frontline indices, financials and realty lead, while infra, auto and metal stocks lag in trade.
India's Defence Ministry clears purchases worth 21,722 crore rupees to strengthen the Navy and the coastal security ahead of Navy Day. The 5 orders spell fresh orders for local vendors like L&T, Hindustan Aeronautics, Bharat Electronics, Garden Reach Shipbuilders.
Bajaj Auto falls after two-wheeler maker cuts prices for its CNG motorbike Freedom 125 within 5 months of the launch. While on the flip side, Wonderla rises over 10% as it launches a QIP to raise funds at a floor price of 830 rupees a share. Hello and welcome to Markets Forward. I'm Nigel. With me is Rima. Well, and today we had a quiet trading session if you looked at the headline index, but otherwise plenty of stocks and sectors were in focus. Hey, Rima.
Indeed, big intraday swings, at least in the large cap space. The Nifty moved in close to about a 200-point band to end absolutely flat. We'll talk more about it, but Nigel, the Midcap and the Nifty Bank action was very, very strong.
Well, that's right, Rima. If you look at the Nifty, you'll say, what are you talking about? It was a flattish day. The Nifty barely moved anywhere. But I'll tell you what, there was plenty of volatility in the day. In the first hour of trade, the Nifty was up close to under 100 points. And then intraday, it lost its way. Suddenly you saw that sharp decline at around 11:15, 11:30 a.m. when the markets moved into the red. By the end of it, the Nifty ended in the green. The broader markets, though, that outperformed, and that's why your portfolio will be feeling quite good. The Nifty Bank, that's the one that was leading the charge in today's trading session. It seems to be breaking out, taking leadership back as well. And HDFC Bank is the one in there that suddenly found its form. After the recent underperformance, this one has started outperforming now. So in the 18-month time horizon, well, it's been an underperformer. But off late, with the market still around 6% away from fresh all-time highs, this one is at a 52-week high. The recently listed stocks, though, that was another space that's been buzzing off late. You had Enviro that was up close to around 20% for this week. Niva Bupa was up. NTPC Green. All these stocks are up more than 20 to 25% for the week itself. Just one common factor, they recently listed. And the float in the market is rather limited. So just be careful, when you're going to buy some of the stocks that have limited low float. Not particularly with regard to these companies, but that could be one factor at play as well. Rima.
So by the close of trade, though we came off from the day's high, we're still managing a positive tick, and this would make us close in the green for the 4th consecutive day, which Sudarshan tells us is the longest gaining streak. A 4-day gaining streak is the longest in the last 2 months, and clearly there is some excitement ahead of the RBI policy on Friday because financials continue to do well. You spoke about HDFC Bank. That's up 3.5% in the last 3 days. Let's tell you what we have lined up for you on our show today. We start with the top movers and shakers of the day with Hormuz. Stocks on our radar include Oberoi Realty, Bajaj Auto, Wonderla Holidays. Stay tuned for that. And last but not the least, we'll delve into the key market events to watch for tomorrow. But on to our first segment of the day. It's over to Hormuz for the top stock movers.
A choppy day for the benchmark indices, but the broader markets ended up in the positive, and that was a key takeaway in today's trading session. And PSU banks were the highlight yesterday. They remain the highlight in today's session as well. And look at the gains here. 8%, 11% on UCO Bank. But mind you, 4 out of these 5 names have very little float in the market. So we need to keep that in mind when we analyze these gains as well. Defense was another sector that was possibly the sector of the morning, considering the announcements that came in last evening. And most of these stocks did well well in today's session, though some of them did come off the highs of the day. Gains of anywhere between 3.5% to 5.5% from the defense companies and even the shipbuilders. Now, most of the other companies that did well in today's session were based on some news flow. Star Cement after the clarification on the money control report, Swan Energy on the resumption of its shipyards, Granules put out a clarification today. Mind you, the stock is in the F&O ban. There's some gains in today's session. Oberoi Realty and JSW Infra on some positive brokerage commentary. Stocks that did well on the back of volumes in today's session, and HEG and Graphite continue to move, defying gravity. HEG is now at a 6-year high. Graphite India also ending 7% higher. A sharp spike seen in KC International towards the close of trade, 13% higher in today's trading session. And lastly, some underperformers in today's session, although the advance decline was skewed towards the advances, but some profit booking seen in Adani Green and Easy Trip, VIP, Sirma SGS and Balrampur Chini too, ending near the lows of the day. Back to you guys.
Okay, all right. Thanks a lot for that, Horma. So those are all the stocks that were bobbing around in trade. Well, let's get in Mayuresh Joshi, who will help us out with some fundamental analysis, and Shrikant Chauhan of Kotak Securities, who helps us with the technicals. Well, hi, gentlemen. Thanks a lot for joining in. Shrikant, you go first. Well, the Nifty took a bit of a backseat today. It took a chill pill, so to call it, because that one didn't move much. But the Nifty Bank is the one that seems to be breaking out. Levels on the Nifty Bank, and in that case, where does the Nifty move?
Yeah. Good evening, Nigel. Good evening, everyone. I think Nifty, Bank Nifty, both are following to technicals to the perfection, because when the market was like correcting from the highs, it was like very close to its previous resistance level of 24,350. And from there only today we saw again recovery in the second half, and market manages to close above the levels of 24,450 or 470. For the Bank Nifty also, there also we saw minor correction, but it is already above its previous highest level. So while looking at the setup of Nifty as well as Bank Nifty, I am of the view that market is still into strong pullback mode. Both the indices are heading higher. On immediate basis, Bank Nifty can move towards 54,000 levels. But in the best case scenario, we may even see the levels of 55,000, which is what the setup is suggesting us. But yes, we can trade long for at least 54,000 sort of levels on Bank Nifty. For Nifty, there also I'm expecting 24,700 or 750 sort of levels. Currently, it is consolidating after crossing the crucial psychological level of 24,500. So yes, we may see some consolidation, but broadly, I'm of the view that the markets are heading higher.
Mayuresh, same question to you. What's the setup looking like? I'm not asking for the day or for the next few days, but say for the next 3 weeks, what are the trends that you've observed, the way markets are moving, reacting to news flow? What does it tell you?
So, Rima, I think what really transpires is going to be how earnings will play out in the third quarter itself. But as we are heading into December, I think a large part of the market expectations is now building up for a Santa Claus rally as we speak. Obviously, I think the Fed comments today and tomorrow are going to be extremely critical. What the RBI does and the RBI commentary thereof on Friday will be an equally deciding important factor as well in terms of the guiding factor for how the markets will behave. Beyond that, my own sense is that the Santa Claus rally will come through for the Indian markets. Obviously, I think in terms of setup and sectors that might do well, in our opinion, a few of the agrochemical stocks might continue doing well. Good numbers posted in Q2 with a good Rabi season expected. Q3 might be equally good for a lot of counters within these spaces itself. A few of the infra-stroke manufacturing companies have delivered decent set of numbers, and a few of the banks. And obviously, I think as a hedge, certain pharma stocks, in our opinion, are also exhibiting very, very strong bases as we speak, with the expectations of reasonable earnings growth expected to come through for this sector as well. So I think 3-4 sectors we probably have it.
Okay, let's get to the defense stocks. They were buzzing after the Defense Acquisition Council approved 5 proposals worth a little more than 21,000 crore rupees. ISEC has written a note on it and who the likely beneficiaries could be. Upasna joins in with the details. Upasna.
Well, after a marked slowdown in the domestic ordering, DAC has approved AONs worth 21,800 crores, which is one of the smaller ones in the recent times as it comes after a gap of about 3 months. But ICICI believes that this is comforting and positive for the sector. Now, AONs approved so far in FY25 amounts to nearly about 1.6 lakh crore, versus 3.6 lakh in FY25 on a full year basis, and it expects orders of 12 Su-30 Mk1 fighters and Pinaka rocket in next 3 to 4 months. Now, the brokerages highlighted some of the key picks in the defense space, which are Solar Industries, buy rating on this stock with a target price of 13,250. Azad Engineering, buy rating on this stock with a target price of 2,450. And PTC Industries, buy rating on this stock with a target price of 20,070. Now, let us look at the stocks individually. First up is BEL. The brokerage has given a buy rating with a target price of 350, and it believes that amongst all the defense stocks, BEL is likely to benefit the most out of it due to the possible award of electronic warfare suit package, trickle-down benefit of 20 to 30% value of shipbuilding orders, and also overhaul of electronic components. Next up is Astra Microwave. ICICI Securities has given a buy rating on the stock with a target price of 935. It highlights that this company is also likely to benefit from electronic warfare suit package, particularly jammer pods and next generation radar warning receivers. Lastly, HAL will also be in focus as it is likely to benefit from procurement of advanced light helicopters and engine overhaul of Su-30 Mk1 fighter. Now, lastly, it has also highlighted that PTC Industries is also likely to benefit as companies executed MOU with HAL's Koraput facility for supply of critical components. Hence, all these stocks remained in focus today on back of this development.
Okay, all right. Thanks a lot for that, Upasana. Well, Mayuresh, what do you like from the defense space?
So, Nigel, I think we spoke a couple of weeks back as well. I think Azad Engineering is one of the stocks where our belief is that with the Defense Acquisition Council actually wrapping up, the expectations of more orders coming their way. It's a very niche business that Azad probably does, critical components that it supplies. And it needs a lot of, it needs to spend a lot of time probably to have those clients on their books as well. And once these guys come in, I think more orders expected, repeat orders expected, and orders with better margins. So I think Azad is one stock we are keeping on our radar. The other ones are obviously Cochin Shipyard, but we'll wait for declines because I think they're significantly trading in late stage basis as we see it. So you need to have a significant correction in this one. We'll patiently wait for a correction if it does come through. But Cochin is something that we'll probably have on our watch list as well.
So your bet is Cochin. Shrikant, you know, amongst the charts in the defense stocks, which one looks the strongest?
I think in that particular, if we see the overall basket of defense-related stocks, then in that we like Bharat Electronics. The reason is that it is relatively doing much better than other stock, and whenever there was like in the past also, whenever the stock has fallen, the drawdown was much lesser than other stocks. And this time with the recovery, we are of the view that the stock is heading for at least 350 or 360 sort of levels. At current levels around 310, 320, 315. The risk reward ratio is quite favorable for those who would like to go for taking trading position in this particular stock. So technically, yes, we like this stock and we are expecting to move towards 360 sort of levels. We also like Bharat Dynamics because this time when the recovery had started, we saw a good amount of buying interest, delivery-based buying in the stock. And I am of the view that the stock is ready for the strongest pullback of last several recoveries. So if we see the pullback continuation sort of trend, then the stock can move towards 1600 or 1650. So Bharat Electronics as well as Bharat Dynamics should be on the watch list.
Okay, all right. Got that, gentlemen. Well, let's focus on the real estate space. And Oberoi Realty took off in today's trading session. It was up more than 5%. Nomura initiated coverage on the stock, increased the target price as well. We have Hormuz who joins us to fill us in with more details on that report. Hormuz, take it away.
Positive commentary coming in from Nomura initiating coverage on Oberoi Realty. It's a buy recommendation, a 2,500 rupee price target, a 20+% upside from yesterday's closing levels. Now, what they said is that they're expecting solid pre-sales and cash generation from Oberoi Realty going forward, and it is poised for aggressive business development. And the pre-sales are likely to grow at a CAGR of 40%, along with a 50% plus embedded EBITDA margins over FY24 to 27 is what Nomura says. holidays, and they are expecting a cumulative hotel and annuity revenue to record a 35% CAGR over this same time period, and as a result of which they're expecting a 3,000 to 4,000 crore per annum of operating cash flow until FY27. So positive commentary coming in from Nomura on Oberoi Realty, reflecting on the stock price, a 20+% upside projected there.
Okay, all right, got that. Thanks a lot for that, Harmas. Mayuresh, what do you make of the real estate pack? And does Oberoi come on top, or is there something better you have for us?
So, Nigel, I think the real estate cycle is continuing in real earnest. So 6-7 years of the cycle, we're in the 4th year, 5th year. I think 2 more years to go. Obviously, the pre-sales velocity has come off a tad bit, but these players are very, very cautious in terms of new launches expected to come through. But whatever launches are coming through, take the instance of DLF, take the instance of Kolte Patil in the Pune project as well, or Arvind Smart Spaces in their Ahmedabad project as well. They are getting lapped up. Inventory levels reasonable at this juncture as we speak. You're not seeing excessive build-up that is happening. In fact, excess inventory has actually come off in the past 4 to 5 quarters. The leverage has come off as well and remained stable, which means improved cash flows are exhibiting on the bottom line and return ratios as well. So I think Oberoi, Urban Smart Spaces, DLF might continue doing well. But what we like as a proxy to this space, Nigel, is Capacite projects. Again, an EPC player for the real estate industry, works with many market clients within the space itself. Decent order book in excess of 9,000 crores, giving revenue visibility of 4.5 times on FY24 numbers. Margins have been decent so far. Balance sheet is very healthy and strong. And the company believes that the execution that they're probably doing as a mix of public and private, as well as high rises, which they have a special expertise in, that might continue doing well. And therefore, earnings might actually are expected to remain stable or improve in the next few quarters. So as a proxy to real estate, Capacite is something that we can.
Okay, all right, got that. Well, let's talk about some more stock-specific action then. Shares of automaker Bajaj Auto, they were in focus. The company cut its prices on a CNG motorcycle, which is Freedom 125. Separately, Wonderla Holidays, it took off for a holiday with the bulls. That was up more than 10%. Sudarshan joins us to give us a quick wrap on both these two. Sudarshan, Bajaj Auto lower, but Wonderla taking off. Tell us details of both.
That's correct. So Bajaj Auto was in focus today after there was a note from UBS saying that its dealer check suggests that company has taken a price cut on Freedom 125 bike and also for Pulsar, some of the variants of Pulsar. So entry level Freedom 125 price cut was in the range of 5,000, and for Freedom 125 mid-level segment, for that price cut was cut by almost rupees 10,000. And explaining the reason of price cut, UBS says since its launch in July 2024, company has dispatched almost 80,000 Freedom bikes, but Vahan retail data indicates that total retail sales were just 34,000 units. So this was one of the main reasons as per UBS for the price cut taken by Bajaj Auto. Another stock that was in focus today, Wonderla Holidays stock has closed higher by almost 10%. And as per sources, we understand that QIP that company has launched yesterday was fully subscribed, and QIP was launched, and for that floor price was rupees 829.74 per share. But also we have to factor that company has a board approval for total fundraising of almost rupees 800 crore. So on the back of this report, Wonderla Holidays was higher, and on the back of price cut, Bajaj Auto was lower in today's trade.
Okay, all right. Thanks a lot for that, Sudarshan. Well, Shrikant, let's come across to you. Any view on both these two names? Where does support come in Bajaj Auto? Okay, all right. Okay, I think we'll go to Mayuresh first, then we'll come back to Shrikant. Mayuresh, you tell us, Bajaj Auto, it seems there is a price cut. Customers will be very happy. The problem is that, for shareholders, they're a little bit nervous. Your view?
Yeah. So I think it needs to be seen whether it's loss of demand or whether it's inventory correction that is happening in the system, because obviously what we had seen before the festive season, a lot more inventory had got pushed out to the dealer end. Dealers were already holding inventory to the excess of 4 to 5 weeks. So it might be a case of inventory correction as well. So I think we'll need to wait out for December data points on that one. But again, I think valuations a tad bit on the higher side, expectations in terms of how two-wheeler sales are expected to play out, specifically in terms of competition, 125 to 200, even the 200 to 300 cc's are seeing more launches coming, more electric vehicles being expected to get launched by competitors as well at attractive price points. We've already seen an announcement done by Ola that they will be announcing a few bikes or or two-wheelers as well by the end of April 25, May 25. And therefore, I think how competition plays out on prices is something to be seen. I think TVS is a better play as far as the two-wheeler industry is concerned.
Okay, rather jump on to TVS rather than Bajaj Auto. That's what Mayuresh has to say. But thanks a lot for that, gentlemen, both Mayuresh as well as Srikanth for joining in, giving us your view on the markets as well as on individual stocks. For the time being, we slip into a short break. But on the other side, we'll do a recap of all the top corporate voices that spoke to us all through the day. And then we'll have Vinny, who's waiting by to tell us about all the top events you need to track for tomorrow's session. Don't go anywhere.
The merger and the integration. What are the cost efficiencies that we're talking about? I mean, what does that realistically mean in terms of margin improvement for Air India?
Well, there's a whole regulatory and legal structure that you need to maintain if you're an independent organisation or an independent airline. There's duplication of many positions. There aren't the economies of scale that you can enjoy when you're a 300 aircraft airline. So clearly there are efficiencies, and we've realised some, and there are more that we wish to realise. That was part of the motivation for putting the businesses together. But I wouldn't want to give you particular figures. With respect to pricing power, I'd refer you to an article that was literally just released by IATA, which traces the real how airfares have tracked relative to the CPI and relative to oil prices, not just in India but in many countries. And what you will find that if you index back to 2015 or 2019,
welcome back. You're tuned into Markets Forward. Well, as promised, let's get you all the key corporate voices that spoke to us during the course of the day. First up, Swiggy's food delivery business performance has improved, while the quick commerce revenue has risen in Q2. The management says that they are no strangers to competition, and all the new entrants in the quick commerce are welcome. They add that there is significant operating leverage in the food delivery business, and 3 out of 10 cities in quick commerce are profitable. The company has over 8,800 crores of cash on books and believe that at now, they don't have any need to raise further capital. Next up, Monte Carlo hit a 52-week high. The management expects positive growth in Q3 as the quarter has been good. They guide for some improvement in revenues and margins. And also they believe that double-digit growth is due in the home textiles business, which is roughly around 15 to 16% of their total mix. Lastly, we also had a rare management that spoke to us here on CNBC-TV18, Solar Industries. They are guided for defense revenue growth at around 1,500 crores in FY25. And also for FY26, they are talking about defense revenues going to around 2,000 crores. For FY25, the revenue growth is expected at around 20 to 25%. That's for the company on the whole, while they say that margins will be around the 25%. They add that the order for Pinaka is due in the next 1 month. Well, time to wind down on the show. But before we do that, Vinny is standing by. She's here to tell us about all the top events that we need to track. Vinny, take it away.
So yes, in terms of key events on the global front, we have the OPEC and the non-OPEC ministers meeting tomorrow. So yes, keeping an eye out on that one. Important one, especially in terms of the crude prices that we'll watch out for. On the and in the US market, in the global front, we do have the US trade data that will be coming in, as well as the initial jobless claims data. Keep an eye out on that. In the Eurozone, we have the retail sales data. So that is important to watch out for there. Domestic, we are watching out for corporate action that will be coming in from Sudarshan Chemicals, where the company is going to be meeting and mulling a fundraising plan, as well as that could be via a preferential issue. So keep an eye out on that announcement tomorrow. Do not forget, a Nifty weekly expiry is there tomorrow, as well as we have Devendra Fadnavis, who will be sworn as the CM of Maharashtra. So that is something to watch out for. And in Jharkhand, the Council of Ministers are likely to take oath tomorrow as well. So here's key events and cues to watch out for tomorrow.
All right, Vinny, thanks a lot for that. Taking a cue from markets nowadays, Vinny in green, giving us all the events we need to track. But on that note, we'll wrap up on this edition of Markets Forward. You stay with us. Lots of news and updates coming in on the other side.
Fares have gone down. And not only gone down, but gone down dramatically relative to inflation and relative to oil price. So I think just the competitive dynamic of aviation and the market will mean that airfares will remain affordable. And of course, we want to fill our planes. So there's always going to be a benefit to the customer in that respect.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats.
Hello and welcome to Business 360. I'm Shruti Mishra. Here are the headlines we're tracking this evening. Sensex and Nifty end flat after a range-bound session. Midcaps outperform. Rupee weakens to a new low against the US dollar. RBI's three-day Monetary Policy Committee meeting starts today. This will be Governor Shaktikanta Das's last unless he gets an extension. CNBC-TV18 Citizen Monetary Policy Committee expects the RBI to cut the cash reserve ratio but sees no change in the repo rate due to the inflation picture. RBI will announce its policy decision on Friday.
We have to be very cautious that we do not in the process as they say, kill the golden goose.
Union Revenue Secretary Sanjay Malhotra cautions tax enforcement authorities against what he calls high-pitched demand notices, says tax authorities should not hurt the economy to garner revenue. Vodafone PLC exits Indus Towers after selling the remaining 3% stake. The proceeds will be used by Vodafone Idea to pay the dues to Indus Towers. Israel continues its attack on Gaza. At least 3 medical personnel injured in an attack on a hospital in northern Gaza. At least 12 people killed in an attack on southern Lebanon. South Korea's opposition lawmakers submit a bill to impeach President Yoon over his short-lived declaration of martial law. The South Korean president declared martial law yesterday after accusing the opposition of sympathizing with North Korea, only to reverse it 6 hours later in the face of a united opposition. Amazon Web Services launches a new slate of artificial intelligence models under the brand name Nova, shows off its new text,